How many companies of BSE 500 are probably seeing some green shoots, but probably what, 5-6 of them which are seeing marginal gains. We have GMDC, which is trading in the positive, Chennai Petro, ONGC, Sun TV. These are few of the names. Apart from that, Aether is another one which is seeing some smart moves, and Aether, Electra Green, these are names which have seen a good run up as well. JBM Auto in the last couple of trading sessions. Aether Energy, there you go, 0.5% downtick on that one. But Praj, MRPL pretty much on the borderline. Literally, I don't think so there's anything which is able to sustain in the green. So the question is, what do you do with this kind of a market? Use it as an opportunity to buy anything, or just stay on the sidelines? That's the question, Kush.
I think it's best to wait it out, broadly speaking. But I'll take heart from one fact, which is if you see where we opened, we're at least gaining some ground from there. If at all there has to be solace and the thinnest of the thin silver linings, I think it's that 20-600 is a decent support zone. If that's broken, we're looking at 20-200 by the way, but that for now is being respected.
Milan, is your logic the same?
I would try to make a balance out of it. I would still go ahead and deploy some small portion, around 20-30% of the available corpus at these levels. And while I say this, I would also like to add one point that, of course, we all are here to chase the absolute returns in the markets, but even if we are focusing on relative returns, it is absolutely fine. For example, if the market is losing 10-12% and your portfolio is down by 4-5%, it is absolutely fine.
Okay.
Not so much on the aggressive note.
Very quickly, you looking to buy anything through the day? Banks?
No, ICICI Bank, yeah.
If at all,
ICICI Bank, HDFC Bank, yeah.
And that too in a small measure?
Yeah, small measure, yeah.
Okay.
Gradually, because you don't know when it will turn.
What is the weightage of banks in your portfolio right now?
So basically, these are the two large banks which I hold. As I told you, I booked profits in PSU banks. So many of L&T I have booked profits. So right now, if I tell you ICICI Bank, HDFC Bank, Bharti Airtel, some of the stocks which are right there in 7-8% of the portfolios.
Got it. Okay. Jandan, thank you so much for joining in today. Really appreciate your time. Hopefully, we have the week which is slightly better than the start that we've gotten today. It is playing out thus far is Aditya Suresh, Managing Director, Head of Equity Research India at Macquarie Capital. And I wonder, Aditya, good morning. Thank you so much for joining in. But I wonder if the reasons enhanced more, and if I add a layer of potential earnings disruption, I would love to know how you're thinking about it, because the street is still, the printed numbers are still about 8.
Neeraj, thank you for having me on the show. So just to go back to the framework again, it was really anchored to what's in growth, what's in expectations, and where valuations are at, and then how kind of foreign flows and domestic flows kind of play out. Because one of the kind of key concerns which we have had for some time has been that we had this high market multiple, but you've had this downdrift in earnings estimates. And when you think about growth in itself, what you've seen is that compared to us being at a growth premium, we're now at a growth discount, right? Compared to other emerging markets, look at what's happening in Korea, Taiwan, so on and so forth, where the dynamic there has been beat and raise on some of these large companies. And so you've had a high market multiple, no growth premium, in fact, a growth discount to kind of work through, a general downdrift in earnings estimates. And even this quality dimension, which kind of has supported India as a market, that again, today when you look at India's ROE, I think about 15%, emerging markets about 15%, so that has been absent. So domestic liquidity still held up, and that's okay. But we can clearly see why kind of foreigners have been meaningful sellers of the market. Now, at the start of the year, we did find ourselves a little bit more optimistic, calling for maybe foreigners come back and start nibbling in India as a market. We start to see that some of this kind of play through in say, Feb. But with what's happened in March, I think the real dynamic is one where we're super kind of, at least the broader mindset is one where we're guarded, right? So I don't think there's an element of, we're there yet, if I may, in terms of buying the market. I think there is still downside to kind of work through.
Yeah, that's. I think that's a scary thought, right? But having said that, it's par for the course based on the uncertainty that we're seeing on the external front. Nobody knows which direction this goes to, and so therefore, I'm just wondering, on an earnings standpoint, whether you've looked at sensitivity. Of course, you have, but I'm just wondering if you penciled in a worst-case scenario, because we've talked about the implications of crude remaining at above 100 for long, but what if is left?
So I think, Alex, the translation of that to earnings estimates we're still kind of working through, right? It is still a dynamic which is work in progress. What I will tell you is 2 points, right? So first point is that in general, I think the thinking about what if oil were to be at $100 for a bit longer, I think that's starting to kind of emerge in thinking. But the point which you made about, say, 150 and above, we, at least in Macquarie, would place at least a 40% kind of odds that that's the case, right? Given kind of what's happening. These are like physical battles being disrupted in a large global market. And it's not just kind of oil, it's also kind of downstream products. Look at what's happening with diesel, jet fuel, all these type of things in Singapore as an example. So higher for longer is a scenario which is not just a tail risk, 5%, 10% kind of probability weight. At least that's not the weight which we would be applying. We'll be applying more meaningful weight. So that's point one. And I don't think that's really reflected too much in whether it be our conversations with kind of asset managers or in general in consensus thinking. Related to that, the point is that when you think about earnings growth in itself for the broader market, where consensus sitting at today is about expansion. I think this margin expansion kind of comment is going to be harder to come to pass, in particular for fiscal 27. So even if I take this back to the past, say 12, 18 months, where we've seen kind of core earnings growth maybe about, say, 7-8%, which is kind of half of where kind of growth expectations are marked at. I'll be thinking more along those lines, Alex, at least for fiscal 27. And consensus is at least our mind, for now, too optimistic on earnings expectations on the margin dimension.
Aditya, good morning. Hiral here. I mean, everything point taken right now in terms of what you're saying. So now if you have to look at the markets, with the valuation where India is sitting on, my last read was that Macquarie did have a target price of what? 30,000 in terms of Nifty 50 by the end of the year. Where does it stand right now? Is there a downgrade that has already come in? What investors should know about?
Yes, so we don't really do the Nifty targets at Macquarie. So it's more just the comment you're referring to was at the start of the year. We're finding ourselves a little bit more optimistic on foreign flows coming back. And for that, on balance, when the Nifty was roughly about, say, 25, 26,000, we're feeling more optimistic on the trajectory towards 30, right? Even as I say, Feb, that comment would have held. With March and kind of what's happened, I think that comment no longer is valid. I think there is a meaningful reassessment of that kind of that position. On valuations, we have seen a compression in headline multiples. So compared to it being, say, 20 times 2-year forward for MSCI India, it's now at about 17.5. But even if you think about that in relative terms, the simple point to kind of take away is simply that broader emerging markets at 11 times with a higher earnings growth outlook and a similar ROE. So emerging markets is set to kind of, at least consensus, is giving about a 20% growth outlook. India on consensus at 15. I think both these numbers, there is risk to work through the downside. But objectively and from a distance, it just seems that where the market multiple is at, if you kind of domestic liquidity is still a strong support factor, if that starts to cool, then these kind of market multiples can come off further.
Yeah, sorry, which takes me back then to the question that if indeed, I mean, this is not going to be an isolated earnings downgrade case, for example, for a nation. Most countries will see an earnings downtick, right? So on a relative basis, if India is now no longer at a substantial premium to EMs, when the tide were to turn, and we don't know when, but I'm still asking you, that whenever it turns, whether it's March, whether it's April, whether it's July, whether it's October, can FIIs, or do you reckon FIIs could now come back? Because I heard you say that earlier you were constructive and now you are not about FII flows.
That's the specific anchor, Neeraj. So the specific point is that there are two parts of the story. So one is that India in itself on earnings, we've got to deliver earnings, right? So like the past, say 12 months, 18 months, it's been one where we've seen disappointments to both the revenue line and the kind of margin line. So part one of the story is that instead of this being, say, 7-8% core profit growth, we're looking at, say, 15%, right? So that's part one of the story. We were getting a little bit more optimistic on that trajectory at the start of the year. And those kind of numbers, I think, are kind of, as Alex was mentioning, is going to be tested on the downside. But part two of the story is also equally important, is that alone is not enough for you to kind of to see meaningful absolute performance or relative performance. Markets like Korea, Taiwan, where you still see that beat and raise dynamic. So, for example, if TSMC as one stock is equal to India as entire country in has a meaningful impact on how this kind of earnings picture looks like. So today you're looking at EPS growth for emerging markets at 20% 2 year forward, India at 15. So really, like what used to be like a 500 basis confidence that situation, that picture is turning. That really is going to be the dynamic which drives foreign inflows to India as a market. The second thing, which I think could still drive some kind of nibbling, a comment which is more relevant maybe in Jan-Feb of this year, was that when you think about India's beta to whether it be emerging markets or technology or the US, it's about 0.3, 0.4. So to the extent that the entire world was long one trade, there was some element of maybe you want to hedge this, and we see some flows there. But yeah, I think all these kind of positions are being tested here.
Yeah, certainly. Aditya, as always, it's an absolute pleasure speaking with you, and wish you all the best. Talk soon. All right, let's talk about the textile sector. And we've been speaking about the implications for various sectors. This one is facing mounting pressure as the Middle East conflict drives up raw material costs as well as logistics costs. And rising crude prices have also pushed up input costs, impacting several garment manufacturers, particularly those that utilize your petroleum products in manufacturing, right? We will be speaking with Pallab Banerjee, the managing director at Pearl Global, in just a bit. But before that, let's get Mahima in to give us some context. Mahima, what is the extent of implication? So, because there are a few pockets that won't be as badly hit.
Right, Alex. So, overall, if you take a look at, the different aspects in which the entire textile industry will get hurt. Firstly, the raw material prices rising up. I mean, the recent, data collected from the Textile Association suggests that the overall textile cost of manufacturing will be going up because raw material cost is going up by around 20 to 25% because of this rising crude oil prices. Overall, garment manufacturing cost will see an uptick of around 10 to 15 odd %, and shipping and freight costs will go up by around 80 to 90 odd %. So this, all together will impact the overall costing and margins for the company going forward. Overall, if you take a look at the different materials that goes into making these textiles, 60% of Indian textile output uses polyester and nylon, and polyester has seen its costs going up by 20% in the last couple of months. Nylon has seen an uptick of around 5%. The cost of dyes, chemicals, etc. have seen an uptick of around 20 odd %. So total cost of dyeing process forward. Companies currently, of course, are kind of absorbing the shock, kind of absorbing the kind of price hikes that are happening. But going forward, if this continues, they might have to take in price hikes and kind of pass it on to customers as well. If we talk about Pearl Global in FY25, over 70% of their products were exported to the rest of the world, and considering the entire situation right now, this will impact their overall exports as well. So that's the entire point of understanding as to how this entire situation impacts the raw material prices as well as the
Palab Banerjee, MD at Pearl Global. Palab, good morning. Welcome to the show. This is Hiral on this side. Now, my first question coming to you over here is to actually understand the on-ground impact. Theoretically, we can put numbers into perspective saying that, okay, this is the kind of impact that we will see in terms of the supply chain, probably in terms of what's going out when you talk about exports as well, because all this while it was US tariffs that were coming in at the forefront. Now we are talking about another headwind that comes in the form of the war, which again restricts exports to some extent. If you could actually help us understand what's the on-ground reality that you're looking at.
70% exports for Pearl Global. Actually, we are almost 100% exports. 70% of our manufacturing is happening outside of India. So that's the correction. So if compared to that, what we are seeing today in terms of so far, any price changes or any thing that has impacted already in terms of the commodities and all, that's quite negligible compared to what we had in terms of the tariff impact that was coming to the export sector of India. If I talk about what are the factors whether the consumers are still buying and our customers, that means the people or the brands and the retailers who are selling it to the consumer and buying from us. So what is the condition of theirs? So far, there's no disturbance in this part. And not only talking about one market, not seen so far any changes in that, the demand side. In fact, US is the customers of US are still, signing that sigh of relief that they had after the tariff thing went away. So they're into that phase still. Second part, any major change. Polyester prices are up, but in the export market now, most of the polyester that is used in these garments are all recycled polyester. So that means the component of recycle is as high as 50 to 80%. And the fresh polyester that goes in is less. Market. So that's also is not yet a headwind, I would say. The challenge that may come in is what will happen today in terms of war, how Trump is going to react and how Iran is going to react. If the fuel prices goes up beyond that 150 or 200 in over a period of month, that we have seen in 2022, that US market got very nervous. The consumers got very nervous and they stopped buying the garments. So that is something which could be one of the possibilities, still not in the horizon.
So therefore, I just have a couple of questions based on what you've described, right? Which is one would assume that amidst this scenario, freight costs would have gone up. So I'm just wondering, we had heard that with the doing away of tariffs, that customers in US and distributors in particular, I'm guessing the intermediaries that you would be dealing with, had
importer is taking the goods from US. So most of these exporting orders are in the FOB kind of thing. Yes, we do have a little bit of thing that where we are shipping the goods at our cost, but that's still the tariff which was taken off. And this, you see, what was happening is that the cost of goods landed in USA for any of these retailers would constitute about 50% or 55% of the top line. So if this cost of goods was going up because of a tariff which was anywhere between 20%, I'm talking about the global, not particularly from India, But their cash flow would get better. They should be able to buy more. And now this war, the war fear may set in. As of now, like I just came back, the customers, I mean the retailers and the brands who we are supplying to. So yes, but there is something like on the back of the mind, you should be careful about it. So I don't see them buying a big quantity. Like what happened in 21, 22 is that the world was coming out of pandemic at that point of time. The demand was there. People had money, consumers had money, and the goods were not there on the shelf because of logistics, because of whatever reason. Now, at that point of time, they had bought the aggressive buying in such a manner that the inventory is, can go up. So they are controlling their buys. But yes, at this point of time, this fear factor of what's going to happen in terms of this war, we're not seeing that in their buying pattern as of yet. One or so that if there is an inflation in those things, that can be taken care of. So that dialogue is just about to start. It's just starting, I would say.
Got it.
In terms of country of manufacture, sorry, go ahead.
No, please, Pallab, finish your point.
Yeah. So in terms of country of manufacture, is on Eid holidays at this point of time. So that pressure, like what's happening to the workforce out there, that's the biggest worry now at this point of time. In India, we can see, I saw some media news in terms of some of the workers who have migrated from north to south is planning to come back or in the process of coming back to their villages. Because they're not able to buy the gas or the gas, hoarding and black marketing, whatever is happening. So that is one of the worries that is seen in India. I've not seen anything like that in Vietnam as of yet. None of our factories we have not experienced it as of yet, but yeah, this is something, the noise that I'm seeing.
Is this in some, and tell me if I'm going wrong somewhere. We were of the opinion that, or at least I'd heard that some textile companies saying that buyers are preponing their buying decision. Extent of the hit on operational metrics because of higher gas prices, higher raw material prices, yet to be felt, but could it come in Q1 itself?
March is almost over now, coming to an over. So yes, there were some predictions that I saw, like some economists are saying that oil prices will go up and that can fuel the inflation. So if I have seen in US markets that they use, and the fuel prices are very, very important to them. This trip I saw, it is still hovering between $3 to $3.56, that kind of range it is. What I had seen in per gallon, and what I had seen in 22 when I was there, that time it had gone up to like $4 and $5. So that's something, like if that kind of thing comes in, I'm sure like the Trump administration is very, very aware of it. And so far, the actions that they have done is to mitigate this inflation of see how it plays.
Quick 20 seconds. Your hit on operational metrics is yet to come. It will come in Q1 if the war stays, right? Quick 20 seconds.
Yeah, if this thing happens, then we have to see what happens in Q1. As of now, the order book is quite good.
No, operating margins because of higher costs, is that impacting this quarter or will it impact the next quarter? Quick 20 seconds.
This quarter
please.
is not getting impacted. In terms of order book and everything else is absolutely fine.
Got it. Pallab Banerjee, I must say, kudos to you for being straight as an arrow and coming out and being candid every time we or others have asked you to. Really appreciate your time.
Thank you.
That's Pearl Global. And, completely clear about how things are and what that's Pearl Global, and completely clear about how things are and what things could be as well. So very interesting. By the way, not that the stock is doing too much, unfortunately. The pressure, we haven't showed even an iota of a bounce. You could argue that from the opening lows we are up maybe 20-25 points, but that's about it. We're down 420 points. Broader markets are down and out. Pounding.
Yeah, and I think it's only IT which is seeing that marginal uptake from the day's lows, which is giving you that little bit of a respite as well. If you see Nifty IT trying to get into the positive territory. Was actually trading in the positive along with the persistent system. Coforge still pretty much on the borderline. So it's mainly IT as a pack and ONGC as well, which is seeing some marginal gains as
last week, which is 1:9, 9 declines for every gainer on the market, right? And the broader markets bearing the brunt of that selling. Therefore, the mid-cap index bit of a downturn for some of these names in the broader market. So pulling some of these out. Actually, take a look at the top gainers and the losers from the 500 if you can. And there are just about 8 or 9. About 0.4%, Petronet, LNG, Whirlpool, Hind Copper, and that entire metal pack losing as much ground as it is proving to be quite the decline at this stage. The question is seeing actually no IT again. It's down about half a percent as well, despite that kind of decline that we've had. All right, now Seagull India in the spotlight. Now topped over 13,000 crore rupees. Before we go across to the management, let's go across first to Puneet, who's joining in to give us more details on what this order means. And we'll
18-month construction period as well as maintenance of 15 years and since this is a HAM project in that sense. This also comes on the back of almost a 1,700 crore order win that the company announced very recently when they also spoke was almost 13,200 crores with a couple of these orders as well as a smaller one that they announced, now close to almost 16,000 crores as well. So that's the current status of the company. In terms of what's interesting report that Nirmal Bang had actually put out post a conversation with the management, they had specifically called out acceleration of highway orders by almost 100,000 kilometers. So one key question would be on where do these orders come from essentially, and if the timeline is too aggressive given that we're already in March. And the second one is largely in terms of guided for a double-digit revenue growth for FY27 and what could be the margins at this point of time. So those will be some of the key talking points from this conversation.
Good talking points, that too. Thanks so much for getting us those details. Ramnik Sehgal, Managing Director of Seagull India, joining us this morning. Mr. Sehgal, thanks so much for taking the time. At the onset, let me ask about the order book as it stands and the fact that you've gotten this sizable order. From the NHAI side, what is the kind of perspective that you have right now? Is there
having me over. So NHI is very positive right now. We have just won large orders from NHI, MORTH in last 2 months. We have won. So we guided our investors that our target would be 5,000 crore for the year 25-26. But against that, we have got 11,353 crores. We are forward. We're in a sweet spot. A lot of bidding is coming in next first quarter, and we're expecting a good order book coming in the first quarter as well. Otherwise, if you see, Maharashtra. So we are going the right path.
Mr. Sehgal, the question has to be asked with every sector practically bearing the brunt of what is happening geopolitically. For you, and do the contracts that you sign also have a built-in cost escalation clause, and to what extent does that protect you?
So particularly the situation where we have a geopolitical problem, we have to face a little bit of price escalation here because the bitumen FO gone a little high. Availability is there. Projects are doing very well. But overall, it is well covered in our escalation clauses. We have escalation clause for almost all the projects.
How do I say, potential cost increases that could come in because of all that's happening right now, you might not see a or FY26.
So for this year, I don't think much of the difference would be there because we bought a lot of material beforehand, and it was hardly a month left now. Government of India is already in discussion with our construction companies. They might come up with a new plan because they're making sure that the material requirement is being met and we are getting material on time.
Sure.
It's just the price difference which we think that if this...
But you said, right, Mr. Sorry to interrupt, but you said that you have an escalation clause built in.
Yeah.
So therefore, it shouldn't hit you, right? Or could there be some hit?
So sometimes what happened in March month, the prices have gone drastically high.
Okay.
And escalation is the mean of 3 months. So for example,
but that will be marginal. So, I mean,
Yeah,
you could
marginal.
see maybe 100 basis points hit because of this.
Yeah.
Other factors notwithstanding. Because of this, maybe 100 basis points hit. 100 to 100.
and the good thing is everything is available.
At least. Do you think that there could be a problem of raw material availability as well if the conflict were to last?
See, right now there is no problem as such.
Yes.
And we don't feel and we won't oversee any of such problem coming in future because, NHA awarding just started, which started happening a month before. So the projects will start after 6-8 months. So I think by then there would be a lot of new possibilities where the things will ease down and by then the availability is there. Availability is not a challenge.
Ramnik, one last quick question that I have for you is, any conversations that are happening with suppliers, subcontractors on the back of the disruption when it comes to force majeure? And if that does happen, does it impact your project timelines then?
So normally, if you see when you go back to COVID times, Government of India at that point of time has also given a 6 months EOT to everyone. So whosoever has requested has given 6 months EOT. If I think this problem escalate or this goes beyond 1 or 2, 3 months, maybe then government will come up with the same plan, action plan like they did it during the COVID. And with Seagull, we have a track record of completing projects before time, and we've been doing that and getting bonuses. So we are well ahead of schedule in majority of our projects. 2-3 months will not affect Seagull at all.
So 2-3 months is not going to really affect a Seagull at all. Thank you so much, Ramnik, for getting us this clarification as well. Important to understand, what the impact is going to look like from here on. But the stock anyways, trading under pressure at the day's lowest levels. I mean, the entire market is down in trade. But let's shift focus on the new listing today of Innovision, which is set to list on the bourses in just a while from now. The IP actually saw a mixed response with strong interest from institutional investors, though. Parth joins us to give us more details. Parth, a SWOT analysis on Innovision.
Yeah, thanks, Cyril. So, Innovision is an integrated security and infrastructure services player. Their majority revenue comes from toll plaza management, which was around 56% of their total FY25 sales. They are also into manned private security, payroll, and manpower sourcing. If we talk about the IPO, then their total issue size was around 320 crores, out of which 255 crores was their fresh issue, and around 65 crores was their offer for sale component. The IPO opened weak demand. The IPO was extended till 17th March. Regarding their subscription status, as you rightly mentioned, the IPO saw a mixed response. Their QIP portion was however was undersubscribed and was only subscribed 0.6 times. Regarding their key strengths, the company is witnessing a strong revenue growth. Their revenues have grown by a CAGR of 86% from FY23 to FY25. Regarding their weaknesses, they still operate on thin EBITDA margins in the range of 5 to 6%, and they are also highly dependent on NHAI for their revenues. About it's how the government has been pushing for this sector. So that is expected to bring in more toll contracts, and also the company has put in around 170 crores of their IP. Intense competition from their competitors, which has caused some pricing pressure on their bids, and also their high employee turnover raises their recruitment and training costs.
A minute. I must say that your outfit looks fantastic. You look like you're styling based on your heroes.
Thanks a lot. I've been
today.
All right, on that note, we have to slip into a very quick break, and we will get you the latest conversation with our next guest, which is a geopolitical analyst. Irina Zuckerman is joining us after the break, so stay tuned for that. It's important to take cognizance of
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Language and politics. Vanakkam Tamil Nadu. Here we come.
He has been tracking markets for over a decade. Bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Next big bet.
All right, welcome back. You're watching India Market Open. Not a pretty picture, but at least there's a little more green on the screen, with HCL Tech gaining at this point, up about 1% or so. ONGC gaining about 0.75%. And obviously, the upstream oil companies stand to gain, with crude oil well above $100 to the barrel. But a couple of other tech companies also in the green right now, Tech Mahindra as well as TCS. Everything has to do with the geopolitical crisis in West Asia. And so therefore, this particular segment on the show every day is meant to give you a sense of what is going on. And we speak to geopolitical experts. Irina Zuckerman, who is president of Scarab Rising Incorporated and geopolitical analyst, joining us this morning. Thanks so much, Ms. Zuckerman, for taking the time. Give us a sense of how you're reading the latest, which is over the weekend. You've had escalations from both Israel as well as Iran. And in the meanwhile, you've had Donald Trump that has placed an ultimatum on Iran to open up that strait. And equally, you've had Iran come out and say that they will hit public infrastructure or even desalination plants in the region if they get attacked.
Trump's threats and Iran's threats appear to be essentially backfiring. There's a concern inside Iran among the people that if the and essentially will be placed in an even worse humanitarian situation than they already are. On the other hand, Iran's threats to hit desalination plants around the region that have nothing to do with the US also is an example of attacks on civilian infrastructure, and they're leading to Gulf states increasingly backing the effort to try to remove or weaken the regime. You have statements from several GCC countries basically pushing for the US to finish the job and to not leave halfway. That's a change in sentiment from a few weeks ago at the early stage of the war. It's a combination of factors: the financial costs, the continuous threats to human lives, as well as the fact that Iran is escalating in ways that are completely disproportionate to attacks on its military, and it's destabilizing the entire region. On the other hand, regarding the Strait of Hormuz, a growing number of European countries the area from mines and drone attacks, and we may see several countries propose potential assistance and cooperation in that regard. What changed is the understanding that the costs that are being demanded in exchange for safe passage by Iran are exorbitant and essentially amount to piracy. And there is a growing number of countries that do not wish to have to pay to use international waters.
Sure. Irina, I'm going to, good morning and good evening to you rather. I'm going to try and be a bit more specific. What happens next? Do you see an off-ramp for both sides, or do you think the conflict continues?
I don't really see Iran backing down out of extreme level of nationalism, and because that is the only card that the regime has left. They can survive long enough till the US either runs out of interceptors and other weapons, or is forced to reconsider due to political pressure domestically, or runs out of congressional funding. If Iran can wait it out that long, they feel that US will then be forced to withdraw, declare a symbolic victory, and the regime can carry on as before, rebuild, and come back to fight another day. U.S. is still pressed to continue. After announcing the transfer of additional U.S. troops and the potential for ground game, Donald Trump will lose pace if he simply cancels all these operations. Therefore, there is likely to be at least some level of continuity to these operations until there is a clear sign that either U.S. is in fact running out of weapons, or until some tactical goals are achieved that Trump in good conscience can announce as a victory to his internal base. Most likely their ending to these operations is going to be ambiguous, and probably it will not come in the next few days.
Irina, good morning. Hiral here. So I will just add one point over here in terms of where the regional alliances and if you're talking about the geostrategy goes. Now with energy infrastructure which is being targeted, what is the kind of impact you're seeing when it comes to stability of the Abraham Accords and Israel's relationship when it comes to Saudi Arabia, one? And two, now the military cooperation that you're seeing between Iran as well as Russia, how is that going to impact the Tehran-Moscow axis as well? Because both of them become absolutely crucial.
Regarding the first, I don't see the situation really members announcing that they're ready to join, but I also don't see the existing relationship being threatened by the current fiasco. If anything, there's likely to be slightly more coordination with some of the affected states in the region, such as Bahrain and UAE, on a purely tactical level. Saudi Arabia views Iran as a common threat to themselves, but that doesn't mean that there is a clear political coordination with Israel, even if there are some deconflicting and defense mechanisms in play that allow the countries to coordinate to coordinate defenses against drones and missiles in a way that does not further destabilize the region. Politically, inside Saudi Arabia, there is an ongoing internal dynamic, and I don't see that Iran being a common threat is enough to shift the calculus from its current position to a change towards normalizing with Israel. After all, even to this day, Saudi Arabia is still normalized with Iran. They kicked out a few diplomats. They reduced the diplomatic presence. They did not break the relations with Iran. And despite all that, they have not normalized with Israel, although there has not been a direct conflict of that sort between Israel and Saudi Arabia. So we are seeing that it's not just the physical altercation that plays a role in how these countries view regional alliances. There are other issues involved. There's Gaza, there's internal dynamics, and there's also political factions that find it advantageous to keep Israel out of integration.
Well put. Ms. Sukurman, thank you so much for taking the time, and pleasure speaking with you.
Thank you so much. I appreciate it.
All right. Well, let's now get you a sense of the markets and how market veterans are viewing the current signs. And Ajay Srivastav, Managing Director of Dimensions Corporate Finance Services, joining us this morning. Ajay, thanks so much, as always, for taking the time. And the normal response in a situation where the market corrects over 10% is practically everybody and their father start screaming by the dip, right? And that has become a Pavlovian response. The question is this time different? Because we're seeing actual damage to oil infrastructure that could have a bearing on oil prices for at least a year, if not more.
Yeah, good morning. You're right. You said the Pavlovian response is correct, that you typically buy the dips. And, the theme is not universal. It's not like you buy the dip across the board. It's not like you scare away from the market, because things do happen in these kind of, just like in euphoria, extreme pessimism. Markets do price shares out at this point of time, but you got to be careful what you pick and choose because not everything will go up in the same order. So while generally the response is correct, that you need to find ways to get into the market when such pessimism overrules the market. It's a very good time to be in the market, but you got to be careful what you're buying because the key here is, and I think the lesson here is valuation. At the end of the day, if you're still buying old stocks which are highly valued, P multiple, etc., you are possibly asking for trouble again and again at this point of time. But some sectors which have got undervalued or revalued, one can say so, represent a good point because at the end of the day, you need to. There is no bottom to a market. So it's a question is, are you going to have, if you have got money in the bank, are you going to put in 10% of what you want to invest? Are you going to put in 100%? We are on the side of 10 to 15%. That you were wondering at 26,300, oh my God, I missed a chance to buy an X stock, and lots of stocks are good. This is a chance to go for them, even if they drop by another 5-7% or of stocks is the key where you want to go in. It's not about and market pessimism is the best time to be there. So response is correct. The question is in what degree and where.
Ajay, second guess this. Why not let it recover? I'll buy it 5% more expensive because then there'll be a lot more clarity.
Okay, good point. But the fact is, you know what happens when the market goes up? You stop buying. Either you buy at an extreme end and the first reversal, you don't buy it because you are very doubtful that, okay, it's reversed now, but it may go down again. So, the bottom world is, yes, oil prices are going to go up and have gone up. Global demand may shrink to some extent, but at the end of the day, life comes back. And you saw it post-COVID. Life does come back and 20% of global oil. Yes, infrastructure is getting damaged. Yes, this thing happening, but also Venezuela is coming into place at this point of time. You may see after all this, Ukraine, Russia may go down and Russia may come and say, okay, fine, let's compromise and move on. And Russian oil would start to hit the market. So, there are the timing of these kind to start your entry. I did not say 100%, but you cannot stay out of the choices stock that you always wanted to buy and said, my God, give me one more chance. God, I need to buy this stock.
An investor to write the check at this hour, where would it be directed towards? I mean, any particular sectors that you are finding value in?
See, because Indian context is slightly different from the global context because we don't have certain industries. I think Indian context remains the same at this point of time. The mining, metal, non-ferrous metal industry remains robust, sound, and absolutely perfect for an entry point if you have not already been there. It's done well. It's not corrected as much, but remains a very strong entry point. Power. The greatest theme of the next 10 years is going to be power because we all know, we've discussed it so many times with the AI coming in and with oil becoming expensive, thermal-based power plants will acquire value, renewable-based power plants will start to get value, and the world will strategically start to understand that substituting oil with power makes enormous sense, including your own kitchens. You just saw what happened to induction stove. Industry could not get people to buy induction stove for last 5 years. And in one event, every house has talked about induction stove. So I think, the dynamics of oil will also perhaps move towards thermal, renewable, electricity at this point of time. So power sector remains a very strong sector at this point of time. The third is, as I keep saying, our CDMO sector. With rupee at 94 or at this point of time, and 96, 99 if you look at 2 year forward, almost 100, touching 100 if you sell 2 year forward. It's the greatest industry because you can't substitute it. You still need medicines, you need more of medicines, and you can't put up capacities. CDMO is the greatest buy. It hasn't corrected. Now that's the beauty of this market. Gain a lot. So even if they're not corrected, they will gain a lot. That sector represents the greatest opportunity. Autos, we continue to believe, two-wheelers and two-wheeler ancillary autos represent a very strong initiative. If oil electric cars, electric scooters augurs well for our auto industry because we are the strongest. So if you look at the 4 or 5 sectors, hotels, I think Middle East out of the picture at this point of time, Indian hotels should gain a lot is at this point of time. None of them have corrected dramatically. I'll caution investors that if I look at all the 5 sectors, they haven't corrected dramatically, but represents a wonderful choice to be for the future.
Because ultimately that's another shift that will need to take place. If we have to reduce our dependence on LPG, which is essentially propane and butane, we'll piped gas. So is that an opportunity as well?
You know, you make a very interesting point, and I think it's an excellent point you make, except the fact it's regulated. You know, the moment government steps in, consumer on the happen. If you look at your OMC, same story. They're running at a P multiple, low book value multiple because government pricing is controlled and in spite of what has happened, the price increase has been 2 rupees or whatever per liter. So, yes, it's represents a wonderful sector. You have a very interesting point. The question is, will the government let ever this industry be a pure pass-through industry based upon market dynamics? In a controlled industry, you never make money. And you've seen it. GAIL should have made tons of money. GAIL has not made money for investors. So has oil, the distribution, gas distribution not made money for investors. OMC has not made money for investors. So, point you're taking valid, except the fact government control on pricing takes investors out of the equation. You are subject to politicians who say, okay, I need to cap the price to the retail public, and that's the end of the story. And therefore, transmission charges need to be controlled. You just saw the involvement in cap the airline fare, remove the airline fare. Whenever government gets in, the economics changes, and as investors, you don't know what you're looking into.
Okay. Ajay, where is it that you believe the disruptions might likely stay for longer if this conflict were to last even for 7 more days? Because a lot of damage to crude infrastructure might take time to come back, and therefore maybe the supply chains are broken. A lot of talk about sulfur, a lot of talk about some other chemicals as well not being there. Which sectors are already exposed to disruption for the first quarter at the very least, even if the conflict were to end before March?
I think it's fertilizer. It is top of the list. Tiles, the domestic tiles that you make is the second item which is under severe disruption because they don't have gas. They can't run the kilns and they can't do anything to that. And the third is, to my mind, is going to be the textile sector, because if they were importing stuff at the prices at which they are doing at 94, 95, that's going to get hit the maximum at this point of time. So in that order, I think fertilizer, one, is subject to the major vicissitudes because not only oil is an issue, chemicals is an issue, but also the fact that just imports is an issue at this point of time, and it's heavily subsidized. That's the worst part. What happens to this, the 30% increase in prices with the government subsidy? And therefore come back to the point that fiscal deficit, leave it aside for a minute. But I think these are the 3 sectors which are going to impact tremendously negatively in the short run that we see at this point of time. Other sectors will survive. They will survive and they'll move on and so on. Anybody using the whole transport industry is going to have an effect on that because the diesel prices have gone up. Therefore, everything is going to go up dramatically. So generally, everybody is going to impact it. But I think these 3 are going to be hit very hard and direct. And it attracts directly the Indian economy. That's the worst part. So in terms of impact, employment impact is tiles and the construction industry. But the real impact is agriculture sector is going to be fertilizer and government subsidy.
All right. Ajay, on that note, thanks so much as always for taking the time.
You're welcome. Have a good week.
Absolute pleasure. Hero just showing me a snapshot of something. A lakh crore is what they've sold?
1,000 rupees per hour in the
1,000 crore.
1,000 crores per hour in the last 16 sessions is what you're looking at.
Yeah. Well, practically every week, particularly in the last conflict. But what have they sold aggressively, and what have they bought, if at all, over the course of the last 1 year? Foreign institutions. That's
look at the last 1 year, around 2.6 lakh crore of equity is what we've seen selling from FIs. And why they've been selling? Well, a couple of reasons. Firstly, of course, in the last couple of days, there was Trump tariff, which was, the reason as to why FIs were selling. In the past 1.5 years, when they started selling, in fact, when this entire, trend of FIs started selling, valuation. Plus, there is rupee depreciation, which is always playing its part. Now, if you take a look at, that despite of this heavy selling, there were counters, small cap names specifically, where there was buying seen in the past 1 year. If you take a look at the names of those top 5 to 6 odd stocks, Artemis Medicare was one of them, where around 0.6% was what FIs was holding in December 24, which reached to almost 12.5%. For something like a Knowledge Marine, it reached to 11% from 0.8 odd percent. Utkarsh Small Finance Bank saw buying from 1.3 to almost 12 odd percent. GRM Overseas from 0.2 odd percent to 9.5 odd percent, and Zota Healthcare from 0.2 odd percent to almost 8.1 odd percent. Now, just to give viewers a perspective as to how these counters have done in the past 1 odd year. Highest gain has been seen by Knowledge Marine, which is up around 84 odd percent. GRM Overseas, followed by GRM Overseas, which has seen an uptick of around 64 odd percent, and Zota Healthcare at the 31 odd percent. But Utkarsh Small Finance Bank, despite of FI buying, is down around 44%, and Artemis Medicare down around 13 odd percent. Now, what do these companies do? Just to give viewers a perspective, Artemis Medicare is a multi-specialty hospitals. Knowledge Marine is into marine engineering as well as marine infrastructure. For Jeevan Small Finance Bank, it provides collateral-free small ticket size loans. For GRM Overseas, it's a basmati rice exporter and manufacturer. And Zota Healthcare is basically a pharmaceutical company that manufactures, markets and exports pharmaceutical products. Now, Airports, Polymedicure, PVR Inox, as well as Aavas Finances and Religare Enterprises. So this is the overall list as to how FIs have been buying and selling, and some counters where we've seen buying despite.
A significant update for the microfinance space, and we've got Sharad joining in to tell you about what the credit guarantee schemes mean for them.
Well, thanks a lot for that, Alex. Largely, the brokerages have been largely and the medium MFIs. That means the limited direct uplift would be there for the larger MFIs which are listed. Almost 70 to 80% of this sovereign guarantee scheme is reduced, expecting the losses as well as the capital consumption, and most importantly the credit lines, they will be getting opened as well. It's a 20,000 crore envelope, which is roughly 20% of the NBFC MFI borrowings against the disbursements as well. For the listed MFIs, as Citi has stated, rupees 300 crore per entity ceiling limits directly uplifts the overall sentiments, and this would be treated as sector positive. Key details on this announcement of this credit guarantee scheme, and they have stated that the loan to small borrowers would be capped at 1% below the 6-month average lending period, and at least 5% lending would be there for this financials on this NBFC MFI announcement.
All right, thanks so much, Sharad, for that. We're at the low point of the day for the benchmark Nifty 50, and there's considerable selling. 2,600. Pull up the heat map for the Nifty 50, because that will give you a perspective of what we're talking about. There is only a spot of green, just about 4 stocks that continue to trade in the green, and the most selling once again with Shriram Finance, which is taking the brunt of the selling once again. Gold prices have been declining, and we've been wondering why, but that has a bearing on jewelry companies as well as financial companies that use gold loans. So Titan is down about to the financial pack. State Bank of India losing close to 4% as well. Interglobe Aviation, one thought that the benefit of the removal of the cap on airfares would have a bearing, but no, the market The company Larsen & Toubro coming out with a clarification over the weekend saying 95% of its projects in West Asia continue to operate. The street is not too focused on that right now, saying that they're global markets as well, down 3%, 3.3% for Larsen & Toubro. We've got lots to talk about, but I'm sure that you've got questions and you can send them to us on our WhatsApp of this edition of India Market Open. From Neeraj, Hiral, myself and the team that put the show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
हर पल मनाओ केसरी त्योहार।
सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर
To understand the Tamil Nadu twist, join me in the
He has been tracking markets for over a decade, spots the trends before they hit the screen. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
with a hand in hand. Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it mattered.
On NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance. You can watch us.
He has been tracked.
Smiling much considering the way the markets are going right now, because the Nifty 50 is now below the 22,600 levels as well. At least we started with the 2,700 as well, but now below the 20. Stays low point, down 2.5% for the Nifty 50. Let's try to pull up the heat map and see as to what are the counters that are putting that kind of pressure on the Nifty. We've 4%, followed by some steel names which saw some positivity on trade in Friday, but Tata Steel seeing a downtick of around 4%. You also have names like JSW Steel, which is also down. Go in that down in that range of 4%. If you take a look at some gainers, ONGC still holding the fort, up 1.7%, followed by HCL Tech, which is up almost 1%, followed by. Let's try to pull up, the Nifty Bank and see as to where that is trading at. The Nifty Bank is also trading with cuts of over 3% now in that 51,700 levels. As to what sectors are looking like, and I'm guessing that the entire screen is red. And yes, that's correct. Metal is losing the most ground, down 4.4%, followed by PSU banks, which is seeing a downtick of around 4.8%, followed by Nifty financial services and banks seeing downtick of around 3% each. Let's try to pull up the advanced decline ratio, because the picture at the broad end of spectrum is also not looking nice. I mean, if you take a look at the advanced decline ratio, and that's reflective.
That's not on us also. We're not dressed like that today, like either in the red or in the green, but continuous pressure that we're seeing today. I think this is the new low, 122 advances today, and while we did see some and that got very quickly sold into, and now we've broken where we started off with. So that's consistently showing. Shriram Finance, as Mahima highlighted, it's down 20% from 26th February, and so is Bajaj. Consistent pressure. Bajaj Finance has now broken the 800 rupee mark as well. So it's pressure all around the board. Just quickly looking at the broader markets as well, the mid cap and the small cap, if you can pull that up. The small cap as well, and we've seen rather both these benchmarks mirror the Nifty at this point of time in terms of pressure, but it has been exacerbated more both on the upside and the downside. So you see was on our radar, but and NOSIL continues to be up almost 11.4%, but the losers, you'll see almost 6 to 7% across the board. Morbi as well as the LNG supply shock is now having a big impact even on the market leaders. Petronet LNG continues to be under pressure, so is Muthoot Finance at this point of time. But we are looking to answer all your stock related queries at this point of time. So let me welcome in Gaurav Sharma, equity research at SMC Global Securities, on the fundamentals. Gentlemen, thanks so much for joining today. An important session because markets clearly under pressure. Let me go across take essentially. Would you suggest that it's a good time right now, or would you wait a little bit more for a counter that's done well for investors over the past few years?
This is one of the best counters. Revenue will move upwards because of the the upcoming revision in the rates, which may happen during 2026, and which will again will help them grow their margins in a staggered manner and for the long term.
Okay, all right. So that's the view coming in on Bharti Airtel. The next one is coming on Cochin Shipyard, and this is from Deepak, who's writing us from Mysore. He's holding 50. Exit. Gaurav, I'll come to you on this one. Very good morning to you. What are the charts indicating for Cochin Shipyard?
Hi, Mahima. Morning. Thanks for having me today. So, the performance, and so is Cochin Shipyard at the moment. Yes, it is trading close to its supports, but since the query is for a shorter term duration, so I'll suggest them to take some possibility that a U-turn from these levels can be seen. As of now, hold.
All right, we've got our first caller for the day. Gaurav is calling us from Gujarat. Gaurav, a very good morning to you. What's your query about? Okay.
So I want a technical chart view for 3 to 6 months.
Okay, got your question, Gaurav. I'll take this up with Gaurav then. Gaurav, for Senco Gold, what are the charts indicating? In the remain intact with regards to where gold prices will be in the next 1 year?
Absolutely, we do maintain a bullish stance for metal. For investors, but again, considering the current price positioning, it is near the support levels. So I think he should hold on to his position, take a stop at 5.
Got that view, Gaurav, and thanks so much for that. But the next question, and that's been on everybody's radar, right? It's HDFC Bank. Now, we have multiple queries here, so I'll just take a couple of them and sort. Madhukar, on the other hand, holds shares at 510. But just a broader view of what did you make of the sudden exit of the chairman in the last week? We've seen the at 1.5, 1.6 time price to book. Is it a screaming buy, Saurabh, at this point of time, or would you still wait, given that this could have some impact on valuations?
The MD of the bank itself. I think from that perspective, I think investors should not be nervous with respect to any wrongdoing in the bank. But yes, something is there. In fact, many of the good stocks are falling because of the conditions in the markets. But yes, I'll stay put. I mean, I would recommend to add more or buy in a staggered manner. Earnings of the bank and also the guidance for the next fiscal year. I think till then one should wait. And apart from investing in HDFC Bank, if one has to take position in the private sector space for the long term.
There's also the persistent pressure on the stock, maybe in terms of valuations, that what most brokers have highlighted, and a very important aspect as well, that in the next 6 months, Saurabh recommends a good time to buy in a staggered manner. Let's go across to Amit now from Bengaluru. He has a stock query for us on call. Amit, good afternoon. Welcome to the show. What's your query?
The 500 shares at 105 average price.
Okay.
Wanted to know the outlook for this particular stock. Is it a good time to enter this particular stock?
Well, Amit, firstly, 'a very valid question. Coming back to you, Saurabh, stocks fallen from 200 to almost the 160 odd mark. Do you think it's a good time to add more at this point of time?
These numbers all are good and the company is quite positive on the outlook. But what is happening in the global arena, I think, with the gas petrol, diesel prices for the industry going up. I think soon, we will see pump prices also revising soon. So it may dent the growth that especially in the automobile pack. I think one should wait for a while. I think wait for a month or two and then chip it.
Okay, all right. So that's the view coming in on Ashok Leyland. The next one is you on this one. Your view on the charts for JB Chemical, and what would be the right entry price to make an entry into this counter?
JV Chemical have been one of the outperformers in the recent past. In the past, say, 1.5 months, this stock has already run up from 1800 odd levels to close to 2200 mark. Closer towards 2000 will be an attractive level to add up to your portfolio, especially from a short-term trading standpoint. That is a pretty attractive level.
Next question, and viewers, you can also call us, talk to us directly and to our experts for stock-related queries as well. But the next question, it's coming in from Jayaraman from Mysore. He wants to side. Now, I'm not sure, Jayaraman, if that would be a case that Saurabh would be able to recommend in terms of returns. But Saurabh, a stock that you like in the hospital space from the current
capacity addition has been planned by the company in 2026 and going forward. Also, their margins are improving, and their new robotic surgery are improving their EBITDA margins. Also, the other businesses are also doing good enough. So, if I would recommend, I would recommend.
Calling us from Hyderabad. Pawan, a very good morning to you. What's your query about?
Ma'am, good morning, ma'am. Ma'am, I want to know about REC for a long term.
Okay.
I bought at 450. Now, so I can shift to REC to EPFO right now.
Okay, Pawan, got your question. I'll take this up with Saurabh. Saurabh, what's the view
will get stronger. I think REC is merging into the PFC, and if you look both stocks on the standalone basis, the valuations have corrected a lot. They are getting close to. It is expected to grow in the mid-teen digits going forward also. So from the long-term perspective, yes, it makes a case to hold, and you can certainly switch your REC to PFC.
But the next question coming in, from Ramesh from Bengaluru on Interglobe Aviation. Now, Gaurav, stocks been under pressure. There's been, of course, fundamental factors as well. I
think, Puneet, one should still wait. I firmly believe that little more downside is pretty much possible. Let the dust settle down. As of now, what I can see is a level close to wait and watch for some more time. Let the stock consolidate. If that happens, then only I'll consider. Otherwise, further slide towards much lower levels can also be seen.
Okay, all right. So that's the view coming in on Interglobe Aviation. Continue to hold or exit this counter at the current levels. Gaurav, I'll stick with you for this one. What's the view on the charts?
Well, our viewers should hold on to the position. The stock is consolidated. To take a stop at closing stop at 700, hold your position at above 800 if that happens.
Okay, all right. So that's the view coming in on Sirma SGS. But time to look at the F&O space, and we have Sharad joining by.
Well, I think my hopes are dashed today. I look at the markets, and if you have made some short positions and if you have hedged it nicely, congratulations to you. But the VIX that has jumped up and largely what is actually holding some sort of indices as well, but banking, you see a sell-off is continuing across the counter, so there's no major support coming in from BankX also. There is should be in your radar. Is there any long build-up? I think ONGC Oil India kind of counters might be there apart from the IT, and that has just reversed right now. So you see how weak the market is right now. I can sell, and lastly short build up, you can pick up anything. More than 80% of them are in the short build up in the FNO space right now. And yes, Petronet LNG and Muthoot Finance make it to the list. So these are the stocks which should be in your radar.
Pressure across the board. Sensex now close to a downtick of 1800 points as we speak. But let's go across, take our next caller from Pune. Khushi has a stock query for us. Khushi, good morning.
I have purchased at 1310 of 7 shares, and right now it's at 741. So should I sell? Should I wait? What do I do?
And did you enter, Khushi? You on Amara Raja, you know, the capex plan having some impact on both the battery makers, right? You know, long capex cycle, returns getting compressed. What would you recommend Khushi to do? Is it a good time to average?
Material prices have also eased up, putting up a pressure, expected pressure in the on the margin side of the margin side. And I don't know, of late I have not studied problems to the company and the events which are unfolding as of now in the economy. I think the demand from the industrial segment also may slow down. I think it should be avoided as of now.
He wants to know if it's a good time to buy into this counter from a 3 years or more perspective. Saurabh, I'll stick with you for this one. Your view on Bajaj Housing Finance?
I think it looks now the highs. On the valuation side, it looks comforting, and the company has always grown above industry average. If you want to chip in, you can chip in, but I would rather suggest I think Indian Bank, Canara banks are also good opportunity.
But, you know, some good opportunities apart from Bajaj Housing, but coming at a very rightly highlighted, you know, down almost 30% in the last 6 months. But another caller now from Hyderabad, Surya has a stock query for us. Surya, good morning. Welcome to the show. What's your query?
Yeah, very good morning.
Okay.
For short term, now it is 1015. What should I do?
Okay, so you bought it for the short term. Got it. Gaurav, a very meaningful position held by Surya of almost point to you.
See, he has bought it at a right time and a right price also, I would say. But this is just a market situation for which dampening the we have recommended this to our clients as well. So I would first give a general disclaimer. They may have a position on it. We are optimistic on this stock, both from a medium to long-term perspective. Any decline from this current averaging opportunity. So if the viewer has some spare cash left, he can also consider averaging out or at a further dip towards 975. Otherwise, he can simply hold on to his position.
That's the view on SBI, but Gaurav as well as Saurabh, it's time for a rapid fire round. Try to keep your answers as short as possible. The first one is coming from Venkatramani from Bengaluru, asking about Zydus Life Sciences. Wants to know if this is a good time to make an entry from a 12-month perspective. Gaurav, your view on the charts?
Yes, you can consider. Take a stop at 850.
HDFC Bank.
Little more downside is possible. Any level close to 725 is a good buying opportunity.
Eternal or Swiggy, is this the right time to make an entry from a long-term perspective? Saurabh, your view?
Raghuraman wants to ask a short-term view. What's your view, Gaurav?
Stock is fairly strong, very good. Any dip towards 160 is
from Jamnagar, Gujarat wants to know. Saurabh, your view?
Instead, look for NTPC or the NHPC.
Sai Life Sciences, Saurabh, is it a good time to buy? Is what our viewers.
Go for Lupin or maybe Aurobindo Pharma.
Okay, ITC bought at the levels of 450. Do you think this is the right time to average at the current levels? Ekambara wants to know. Gaurav, what would you recommend?
On Bajaj Finance, bought at 916. What would you recommend here, Saurabh? Is it a good time to average?
Avoid.
Okay, the next one is on Shriram Finance. Suresh from Kerala wants to know from a 1 year perspective.
Accumulate.
HCC bought at 20 rupees per share, 1,000 shares by Kamlesh. What should he do with this counter right now, Saurabh?
I think better.
Long-term perspective, Saurabh, your view?
Which stock?
South Indian Bank.
Avoid.
BEL, Gaurav bought at roughly around 294 by Tanmay. Should
Time to buy today. Gaurav, your view on the charts?
Yes, we are bullish on this pack. Canara Bank is on our left.
The next one's coming in on MRF, bought at the
Avoid. Some more downside is likely.
Okay, Tata Power, what should be the stop loss and target? Our viewer has bought at the levels of 400, if I'm not wrong. Rudra is asking this question. Your view, Gaurav?
Yes, he can hold on to it. 375 should be the trading stop.
2,000 shares of Wokhard bought at 1,230. Saurabh, would you recommend Kiran to continue holding this?
Levels of 144. Is it a good time to hold, average, or exit? Saurabh, your view?
I think better to exit.
HDFC AMC, is it a right time to buy for the long term? Is what Nagaraj is asking, Saurabh.
Avoid.
CAMS bought at an average price of 705. Hold or sell? Gaurav?
Exit.
LT Foods bought at 270.
Hold. Some more downside is possible, but the reversal is likely. 340 should be the stop loss.
Wipro bought at the levels of 255. Anuj Patel wants to know if we can continue to hold this for a year. Saurabh, your view? This first rapid fire round of Ask Profit. But viewers, it's time to slip into a very, very short break, but don't go anywhere.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया
बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। अपना फर्ज निभाते हैं, कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, Join me in the midst of our people, language, and politics. Vanakkam Tamil Nadu. Here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Welcome back. You're watching Ask Profit right here on NDTV Profit. Today is the day to send across your queries. You can also WhatsApp us, call us directly on both those numbers flashing on the top of the screen. We also have Saurabh Jain on the fundamentals. Let me welcome in Ajit Mishra, SVP Research at Relicare Broking at this point of time of the show, who will help us with the technical outlook. Ajay has a stock query for us. Ajay, very good morning. What's your query?
Hey, very good morning, sir. Actually, I want to invest on EPAC, PrePack. I have bought at 200, number of shares is 300.
Okay.
Can I buy or can I sell it?
So it's EPAC prefab. Per share and you hold 300 shares, correct?
I have bought on at 300, 200.
You bought at 200.
300.
Got it.
Yeah.
And this will be a long-term one, Ajay? Got it. Let me pose this query to Saurabh. Then Saurabh, post listing stock had EPAC prefab had a great run, and since then has corrected on the back of weak quarterly results. Would you recommend Ajay to exit this company?
In the IPO market also, after the listing, the stock made a decent gains, and when the results came out, it just the expectations. Same episode may come again for the March quarter earnings, and that is why the stock has got beaten down. I think it is better to don't average it, but look for the opportunities to exit.
Okay, the next question. He can accumulate more or sell. He's bought 140 shares at the levels of 484. Saurabh, this counter was in spotlight in the last week because of the entire LPG crisis and induction cookstoves. Friday. Just want to get a sense that do you think that this theme picking up further has chances, considering the war could go on from here on? What is the view on this entire space and TTK Prestige, of course?
Alone induction cooker demand cannot move up the company stock price. Actually, that went up on the momentum side only because of momentum. And I think there are not many products and the demand is not expected to be great. And apart from that, material prices have risen strongly. And I don't think so that rally would again come back. So in my sense, I think it is better to, it is good to look for opportunities to get out.
Got that view, but let's go across, take our next caller from Chennai, and Shakti has a stock query for us. Shakti, good morning, welcome to the show. What's your query?
Yeah, good morning, sir. Sir, I want to discuss about the HAL company because the fighter jet was going to company as private company sector.
Right.
Because it is a demand for HAL for future, sir.
Got it. And you currently hold shares of HAL, Shakti?
Yes, sir. I was holding 25 quantities, sir.
And at what price?
4,550.
Okay.
I bought it.
And this was a long-term view, right, Shakti? And you want to know, okay, what could be the future of the counter, correct?
Yes, sir. Correct.
Got it. Well, firstly, Shakti, of course, the order going to a private company potentially was because of the contract value that your order book should be less than 3 times, and for HL that's 8 times. But Saurabh, this counter has been in a corrective phase, right? What would you recommend Shakti to do? He's bought shares at 4550.
Can only wait because considering the good order book the company is in hand, that is there in hand with the company. But the problem why the stock is falling is because of the execution problem. Many a times it has been highlighted that there has been a delay with respect to the deliveries and all. And I think investors have lost hope on that front. And that is why the stock has beaten down. On the valuation front, it is not that expensive. You can continue to hold, but do not invest more.
Let me also just welcome you in for HAL as well. A quick could you give us a view on HAL as well?
Good morning, Puneet. So what we are seeing that the selling pressure is across sectors. So barring BEL, other possibly correction may continue towards, let's say, around 3500, 3540 area first, which is the marginal support area. And then the major supports comes around 3280 mark, which is the long-term averages on the weekly charts. So short-term bias looks negative in case if you are planning any fresh trade. Accumulation should be the strategy. Means you can gradually accumulate in this range of 3280 to 3400 and hold it for at 3500. That should be your stop loss.
Okay, all right. So that's the view coming in on HAL. The next one is on Vedanta. Our viewer Sunil from Pune wants to view on the charts for Vedanta.
So metal counters, they were doing well, till last week, and now we have started seeing a bit of a pressure in metal space as well, including Vedanta. In the metal counters, there could be further consolidation or maybe a downtick. So one should rather buying in lump sum. A gradual accumulation is something that one should consider. At 590 area for the entire position, his stop should be at 560. Positionally, 680, 690 will be the first area of resistance, and that should be your target zone as well.
Continue to monitor Vedanta. The demerger, the 5-way demerger, essentially will be a key trigger for the counter going forward as well. But let's go across to our next query. This one's coming from Hemendra on Power Mech projects. He wants to buy into this counter. Would you recommend that, Saurabh?
Buying gradually in the current times makes sense.
Okay, the next one is coming from Shivdas, who's writing us from Trivandrum, asking about alkyl amines. He's bought 10 shares at an average price of 3698. Wants to know if he can hold, sell, average from a long-term perspective. Saurabh, your view on alkyl amines?
I think current scenario is adverse for these chemical companies, especially on the one like alkyl amines. I think in the short term to medium term, like for 3-6 months, nothing seems to be looking good for the company. I would not recommend to sell at this price, but at the same time, do not buy more.
The view, Saurabh. But the next one's coming on LIC. Sachu from Kerala holds shares at 900 rupees per share. Now, he wants to know if he should continue to hold or buy more at this price. Now, Ajit, on the fundamentals, it's trading below 1 time book value, embedded value. What would you recommend on the charts? Is it a good time to add more?
Yes, certainly you can consider adding. We have had phases of underperformance in the past, but the recent rebound was a strong participation from the LIC also, when we saw that the life insurance counters were busy. So close to around this 730, 720 area where we have the last previous swing lows. Around that area is something where we see strong potential of buying interest re-emerging, and that could probably help the stock to hold and gradually inch toward 850, 900. So you can consider accumulating at current levels, and for this position, for this leg of the position, he may consider maintaining a stop at 700 with 850, 900 as the positional targets.
Okay, so that's the view on LIC. Moving on to the next question, Nihal Mohandas from Mumbai is asking if this is the right time to invest into something like a Pidilite from a 1 to 2 year perspective. Saurabh, I'll stick with you for this one. What's the view like on Pidilite?
From the long-term perspective, yes, you can buy, but do not buy this stock alone in your portfolio. You have to have other stocks also, like from the some utilities, powers, and maybe some pharmaceutical stocks also.
Okay, all right. So that's the view on Pidilite. The next one is coming in on Colgate. The viewer is holding 200 shares at the levels of 2154. Wants to know, considering the current market volatility, what should be the next course of action for him? Continue holding it for the medium to long term perspective, or partially or fully exit? He's not given us. Okay, so 2154 is his buying price, and 200 shares is what he's got. Saurabh, what is your view with regards to where Colgate goes?
I think he can go. He can sit on his investment for long term, and also he can look in the same segment a company, maybe a bigger company like Britannia too.
Got that view, Saurabh. But the next question, coming on FM Industries, it's a counter that's done well over the last 1, 3, 5-year period as well in the auto anch space. And our viewer holds shares at 2250, roughly 100 shares. Now wants to know if he should continue to hold this particular counter. Is it a good time to average, Saurabh, on this particular dip? What would you recommend?
Yes, he can go for an averaging if stock gets hammered down more, and it is a good company to hold.
Okay, the next one is coming in from Ganesh, who's writing us from Chennai, asking about Kalyan Jewelers. Bought at the levels of 406 at an average price. Wants to know, should I buy?
Weak to me, considering that the recent attempt of recovery also has completely fizzled out. The stock is strongly holding below short-term averages, and now we are seeing a break below the long-term averages on the weekly chart as well. So indications are in the favor that this negative tone might continue further, and maybe close to around 340, 330 is something that the stock might test next. So he can consider exiting in case if he is holding any long position, and avoid any fresh position in case if he is considering.
The viewer Srinivas from Hyderabad is actually holding shares of Mankind Pharma at 2298. Now his question largely is if he should continue to hold or exit. Now it's a similar story here as well. What would you recommend, Saurabh? Should he continue to hold?
Certainly it is a hold.
Okay, the next one is coming in on Varun Beverages. Mithun from Bengaluru he has bought 87 shares at the levels of 570 for Varun Beverages. He says that he is a long-term investor and wants to know if he can continue to hold or sell the counter. Saurabh, your view on Varun Beverages?
It is a good period for a company like Varun Beverages. The stock has got hammered down in the last few quarters considering the competition and all. But I think you should wait at least for the March quarter earnings season and see if the company announces good results, then keep on holding.
Stocks hit a 52-week low today, broken the 400 mark, and it was a psychological level in that sense. But Ajit, actually very quick view on Varun Beverages as well, because there's been a one-way downtick for this counter, right? Any view?
So that's right, Puneet. In fact, post this tight range consolidation breakdown around 450 mark, we are seeing that stock has been gradually inching lower. We have recently surpassed the support zone of weekly 200 EMA as well. So that's basically adding to the pressure. As per the long-term charts, maybe close to around 370 is the marginal support that we have. In case if the stock fails to hold this area, then probably we are set for 350 or maybe lower. So 370 should be a strict stop loss in case if you have any existing position, and use any recovery or rebound towards 410, 422. Reduce your positions.
Got that view, Ajit. The next one, Ajit, actually coming back to you on Castrol India. Ramesh actually wanted to know if it can be bought at the current price. Again, this counter was in focus, because of the data center push amongst other key factors. But your view on the stock now?
So it's a very tight range, consolidation, Puneet, almost 5-6 weeks, and still the stock is holding within this range. So probably a breakout confirmation above 186 should be the trigger for any fresh longs, because in that case the momentum will be in your side. And in the interim, in case if you have any existing position, 170 should be your strict stop.
Carmen says the next one. Nitin from Kochi is currently holding 200 shares bought
Come up again.
Kitex Garments.
Yes, it is a good company to hold.
The next question that's coming in right now, it's on Tata Motors PV. Our viewer holds shares at point of time or exit this counter. What would you recommend here, Saurabh? Because the JLR uncertainty is quite large, right, at this point of time, given what we are seeing in Europe. Should he continue to hold or sell?
I think that uncertainty is also large and the business is also large in context to the Indian business, and the volumes are expected to taper off in the Indian markets also. So I think it makes sense to exit.
Okay, moving on to the next query, which is on PCBL Chemicals. Our viewer Ramesh from Chennai has bought 200 shares at the levels of 322 in Feb 2026. Wants to know as to whether he can hold average at the current market price or exit. Ajit, your view on the charts?
So Mahima, it's a very sharp correction. If you see that from the record highs close around 575 in the month of October 2024 to the current levels close around 233. So definitely it's a very sharp correction, but still there is no sign of recovery or reversal yet. So adding to your existing position is something that you should wait for any kind of consolidation or a recovery attempt. In past also we saw that the stock made an attempt of recovery but couldn't sustain above the key averages. So for now 275 is a very strong resistance area. So until we break that, one should refrain from any additional purchase, but he can continue to hold his position with 200 as a stop loss.
Got that view, Ajit. But the next question, a recent listing is Tenneco. India for the long term is what Ranjit is asking, if it's a good time to add. What would you recommend here, Saurabh? Stocks largely, is it a good time to add, Saurabh, this counter for the long term?
It won't be able to comment.
Anything on the charts, Ajit? I know it's a very limited time frame, but what would you, anything on the charts?
So it shows that close to around 500, 495 is where the stock has formed. So as of now, it's on hold with 495 as a stop loss, and close to around 570, 580 area, one should look for booking profits.
Okay, all right. So that's the view on Tenneco Clean Air. But moving on to the and 150 shares is what he's holding. Wants to know as to what should be the next course of action for him. Saurabh, any view on Aviation International?
View remains negative. The stock has done nothing. Even if the markets gets some further footing. So in my sense, I think it is better to avoid exit.
It's broken 100 now. I think for the QSR as a whole going through extended pressure. So this stock continues to be under 100 now, down 4.6% today. But the next question, coming in, and viewers, you can of course the last final stretch of Ask Profit, the morning edition, of course. Query on ICICI Bank bought at 1348. Now Saurabh's given a positive view for this counter and continue to hold. Is it a good time to average now?
So HDFC Bank, this kind of move usually we don't experience, but now after this, sharp. As of now, yes, it's in hold, but avoid adding to your existing position. Let the stock stabilize in line with what we are seeing in the market overall, because the banking index has basically breached crucial support, so which trade.
CG Power is the next one. Vivek Nandan is holding at an average price of 663. Wants to know if he can accumulate more. Saurabh, your view?
From Jalandhar, whole shares of Indian Hotels bought at 775. Now he's holding 100 shares, Saurabh. Would you recommend averaging now at this point of time? Because since touching that level,
development. Why the stock is falling? Probably the reason that airfares are likely to shoot up, which will hamper the tourism demand, and for the company like Indian Hotels, which have occupancy rates, and that is why I feel that is the probable reason why the stock is cooling off. I think it is better to avoid as of now.
Okay, the next one is coming in on Transray Lighting. Our viewers add more at the current levels. Ajit, what would you recommend?
In fact, he can consider exiting because the stock has been underperforming for quite some time, and possibly it might consider exiting at current levels and look for the sectors in case if the view is short term, like select counters from the pharma space like Oro Pharma, Glenmark, Sun Pharma, Lupin, or energy counters, the Power Grid, NTPC, Coal India kind of names.
Got your view, Ajit. But another caller now from Mumbai, and Rishabh has a stock query for us. Rishabh, go ahead with the query.
Yeah, sure. So, hello. I have 1,000 units of PFC at 4.
View on this in the earlier half of the show. So let me go to Ajit for this very quickly. Ajit, on PFC, what would you recommend a current view on the charts?
So I feel that he might have considered this consolidation range breakout as a fresh trade because that was the area overall. Now we are again re-entered into that zone, so maybe close around 380, 420. That would be the probable zone that might continue to hover in. So with the closing stop at 380, he can consider to hold its.
On JBM Auto, our viewer Sivakumar is holding 550 shares at the levels of 650. Sitting on a loss right now, wants to know as to what should he do next. Ajit, your view on the charts?
So in fact, interestingly, it's witnessing very sharp recovery attempts with volumes, with every down tick. So in fact, if you see, that's been almost like 5-6 months of consolidation with hardly any kind of further deterioration in the price structure. So considering the current market scenario, we can continue to hold, but avoid adding fresh at current levels. Above 620, we'll have a confirmation for the short-term trend reversal towards 660, 680 area, and then probably around 720 as well. So at present, he can continue to hold with 500 as stop loss.
Got the view, Ajit. Before we we've slipped now below 52 as well. Any quick view that you can offer on this counter, because we have a lot of queries, of course, on the banking names, but for the index, any level that you're watching out for?
Was the gap that we have on the daily chart, which Nifty is now attempting to fill, close to around 51,200, 300 is the area basically. So which is still 500. Well, so around 51, 200. So usually while markets respect the key areas, but this time around we are not seeing any kind of respite. But yes, considering the gap, 51, 200 should be the area where you should keep a close eye on.
Okay, all right. The next one is coming in on TD Power. Usha from Hyderabad wants to know if she can buy at the current levels from a short-term perspective. Ajit, your view on the charts?
Can you please share
TD
the name
Power.
again?
TD Power.
TD Power. Okay. So yes, this stock definitely is still holding around long-term averages, about very close to its record. Something that she can consider adding at current scenario, with 780 as a stop loss and 900, 920 as a positional targets.
Got the view, Ajit. But Ajit, as well as Saurabh, time now for the rapid fire round in this edition of Fast Profit. The first query that's coming in, it's from Sakib. He wants to know
from the long-term perspective, it's a hold.
Okay, IRFC 1000 shares is what Sriram is holding at the levels of 134. Your view on the charts, Ajit?
Short term look weak, exit.
Restaurant Brands Asia, Ajit has been under pressure. Should Alan continue to hold his shares?
In fact, it's a fresh new record low, so better exit.
Saman Capital bought at the levels of 155. 500 shares is what Kamlesh is holding. What should he do from a long-term perspective, Saurabh?
I think switch to PSU Bank like Canara.
Oil India bought by a viewer at roughly 512. Saurabh, should he continue to hold for the next 1 year?
Continue to hold.
Hindustan Copper bought at the levels of 601. Steny wants to know from Bengaluru, from a long-term perspective, can he continue to hold, Saurabh?
Long term, it's a hold.
Pragyansh wants a view on the long term for Elling.
Buy more. Lot of clarity has come from the management. Keep on holding.
Axis Gates Technology is the next one. Sumant Reddy wants to know if he can continue to hold from a slightly short-term perspective. Ajit, your
Jubilant Foodwork bought at 580, roughly 1,000 shares by a viewer. What should he do with this counter, Saurabh?
Stock has disappointed a lot. I think it's better to avoid.
for him?
Looks weak but extremely oversold also, so he can continue to hold with 600 as a stop loss and use recovery towards 750, 780 to reduce position.
Okay.
Is this the right time to enter KFin Tech, Saurabh? Would you recommend that to Kiran?
Avoid.
RVNL purchase 100 shares at the levels of 410. Hold or sell at the current level? Srikar wants to know. Ajit, your view?
Roughly 830 shares. Hold, sell or average at this point?
Hold with the stop loss at 35.
Patel Engineering bought at the levels of 42. 45,000 shares is
Not in coverage.
Any view, Ajit, on Patel Engineering by any chance?
Looks weak. Avoid averaging for existing position 15, 17. That's the support zone.
This counter?
Looks weak. Better exit.
Happiest Minds bought at the levels of 445. Hold or sell right now, Ajit?
Booking profits.
All right, okay, so that's the view coming in on Happiest Minds. But with that, completely out of time, Ajit as well as Saurabh, thank you so much for helping us answer all those 82 queries that we managed to answer in the first edition. Portfolio is probably bleeding in red. Answering those as many queries as possible is our motto. But right now, we're completely out of time. Do stay tuned. KYC up next.
हर पल मनाओ केसरी त्योहार विमल।
सोना उगाते हैं, ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से
To understand the Tamil Nadu twist, join me in the midst of a people, language.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Twist. Join me in the midst of our politics and people. Vanakkam, Tamil Nadu. Here we come.
Biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. The company which I want to focus on, wait a minute, I'll give you some hints. Try to guess that. It's an oil exploration gas company and it's buzzing because of so much tensions happening. Key contractor of ONGC. Now I'm sure you're about to guess the company's name, but there are some more hints if you're not able to guess it. The third hint is of course the provisional suspension which was there, that has jumped up 17%. The question remains is, which company is this? I need to use your thinking in a very deep manner. And yes, that's also a hint. The company's name is the after its earnings that the interest is back in the street. The first reason is of course going to be the beneficiary of the new ONGC capex which ONGC wants to put across the entire. As the provisional suspension has been revoked, what kind of incremental benefit in terms of money does the company post? The third question is the fourth quarter. Will it be stronger because of the and the execution trends coming in for the long duration contracts? Does it improve more? Because execution is very much important in this oil and gas segment, and the gestation periods are also on the higher side. The margin much interesting to ask about. And also the order book outlooks is around 2600 plus crores order book is there currently. Will it touch the 3000 crore mark by the end of March? That's the key question to be asked. This segment, this is what we'll try to understand from the management. And on the show we'll have Rohan Shah, Director of Finance and Group CFO at Deep Industries, to help us crack these numbers and also the strategic outlook for the company. It's of course oil and gas. It's a bit technical, but I'll try to simplify it for you what this company does. It's incorporated in 91 in the business of oil and gas field services. And if we take in more layers of what the business on into integrated services as well. So 4-5 important outlook the company is focusing on. The company expertises in this integrated project management services as well. Also, the moment it touches the 100%, then a lot of value comes in with margins and even volume. Order book is roughly at around 2967 crores. I pointed out the 3000 crore mark. 3-year CAGR growth of order is very much important. Last 3 years, it's a 40% annualized basis. So this is a figure to watch out for. Key clients, you name it. If you track the oil and gas segment, you'll know all of these companies. ONG, it's a very important part of the oil and gas ecosystem. Deep Industries, the company's provisional suspension was revoked for its key services, and that's one of the reasons why we saw a spike in this value is roughly 150 crore rupees. And also the third important news is the MOU signing in with Advait Green Energy, and this is for the green hydrogen projects. This is a bit new, but we'll ask the management, Mr. Rohan, stable and in a controlled manner. And also secondly, they have stated that the drilling and workover assets have seen healthy deployment over the hydrocarbon basis. So Q3 numbers were also on a decent upcycle, and the company is also across its categories is putting in capex and expansion. So definitely this bears in fruit for India's energy security. And look at the capex, $100 billion of capex is targeted by 2030. So the macro triggers are in the flavor as well, and that's also one of the reasons why the stock has seen a big re-rating coming in, and natural gas demand also expected to go up. And the way the geopolitical situations is, the company needs to do more and more work, at least for the nation's security. So these are the key macro triggers here which we have spoken about, and how the global shift is happening in this energy space as well. Apart from for energy due to the Middle East crisis, it's a second order effect, and that comes in for Deep Industries. The second reason is the moving towards of value added services towards full integration, and that augurs well for the company as some peers with certain services, but all in all, that's where the company has a moat. Now, strong buying and the highest volume was seen in last week itself, and that's where my interest came in the stock. Positive company, that is why the stock is in favor. But let's give you the entire picture of the KYC ratings. How do we judge a company in our show? Of course, this includes income statement, balance sheet, PL. These are the core numbers I talk of. Years. Of course, we see the shareholding with the FIs and DIs, their movement we track along with the promoters. Apart from the street trade, kitna paisa bana, kitna paisa nahi bana, it's short term, medium term, and even for the last 5 years, we do a valuation check. The company doesn't have an apple to apple comparison, but the nearest comparison, which is there with Jindal Drilling, will get you those valuations, and also the outlook. What are the outlook, the medium term, long term targets being set by Deep Industries, and is it achievable or not? That's the big question to be asked. Number has panned out, and this is a significant up move has come in both revenue and EBITDA. You see the good 3-year CAGR growth coming in, and anything above the 20-25% mark, you can see the industry is going, the capex is going. A little bit of one-off impacts do happen in the net profit because of the industry's business. The Q3 numbers is also very much important to watch out, and look at that number. That is really good. The Q3 FY20 Street estimates also because of strong execution and the way the company is moving towards the value-added services, and they're introducing new services as well. So net, it's a positive outlook for income statement, and it's a strong thumbs up coming in. But let's also talk about the balance sheet, and largely the balance sheet has been maintained very decently, and the debt to equity ratio is still kind of, in a controlled manner. Borrowing is very less compared to the size, and just look at this number. Remember the work around 51 crores. It's very stable going ahead. So the asset liability situation in the balance sheet is decent, and the last time I checked for the 9-month FY26 numbers, that's where the debt to equity ratio that has also come down. So net for balance sheet, I would be giving this a thumbs up. Cash flow is a bit lumpy in this kind of industry, and that's where the operating and the investing and financing activities, all three combined, these are the numbers you get. So there is a lot of aberrations which in FY25 it was around 82 odd crore rupees, and now it has moved to 210 crore rupees. So net for the cash flow segment, I'll be giving this a neutral rating as of now, because the business model is as such. Return ratios which we have taken, one is the ROC, the return on capital employed, another one is the ROE. In FY23 it was ranging between 9 to 11%, but then there has been an increase, and the best part is the H1 FY value added product is coming in, the cash flows have improved, and that is why the return ratios, both of them, have done well. So net return ratios is a strong thumbs up when it comes to Deep Industries. Let's talk about the shareholding, how things have moved, or actually it hasn't moved yet. Just look at the numbers. Even I don't need to move for that. 63% it's still 63. Or because of the lack of analyst coverage in the stock, but nevertheless 2% in FIs, and DIs is just 1%, and public has the remaining stake. So nothing much to actually look. Let's talk about street cred, how much the stock has moved, and of course in recent times, I mentioned last 5 days, the stock went up, the volumes were the highest ever, and that's where my interest came. Why? Remember, the mid caps and small caps have taken a clobbering, and year to date this year also stock is down 14%. There is of course the market impact as well. Last 1 year say stock 22% gira. That's the massive number to look at. That means if you're a long-term investor, congratulations to you. That's the strength in the stock. So medium term, short term, definitely a little bit of question is there. Who does fundamentals also, it's very much important to track the stock. So it's a neutral rating when it comes to the street cred. But let's talk about valuations. Inke peers कौन कौन है? Deep Industries, there is, and perhaps that's why the company commands almost 3 times the valuations as well. And if you look at the peak valuations, that was almost 34 times for this company. That has also corrected to almost 24. Almost you could say 4x in differential from this, and the trailing 12-month PE has still corrected from its peak levels. That means at current levels also the valuations are attractive when it comes to the much important, and I suggest you note down or take a screenshot of the outlook which I am discussing with you, because this is very much important. The management has guided a 30 to 35% revenue growth. The second important portion of this outlook is this is driven by a full year contribution of newly deployed assets. That means they will also start giving, apart from the mature assets, the inflows in the company. The call it in this industry is very high for this company and the industry as well. Kandla commercialization is expected to kick in by the second half of FY27 as well. That's what we rig deployment by March 2026. And I mentioned that before the 31st March, maybe in the next 1 week. That's what we'll ask the management. And any more contracts expected from ONGC as some revoke Deep Industries. So I'll give this a strong thumbs up as well. But apart from the outlook, what are the total KYC ratings for this company? This is very much important. And of course, the income statement balance analysis, and also let's pull out the shareholding in Street Cred, and over here also it's largely neutral. But what makes it to the list is the valuations are still attractive for Deep Industries, and the outlook net on the higher side of the ratings which we generally give to a company in KYC. I have given that 6.5 out of it. The highest number I remember is 7 out of it. So the company has done well in terms at Deep Industries. He's been associated almost last 16 years in the company. He's a qualified chartered accountant as well. So it will be interesting to understand from Rohan about Deep Industries. Have you with us in KYC. Rohan, the first question is, of course, a very positive news flow has been developed over the weekend regarding the revocation of the order. There are some 4-5 services which you can give her that service, which can happen in the next, say, 6 months to 12 months. Just give us some light on that. You don't need to give us the exact numbers, but how beneficial this announcement is.
Yes, so hiring of GCP, GDU, then hiring of DPDU, hiring of 1,000 horsepower drilling rigs, and hiring of onshore rigs of 100 metric ton. White amendment provisional suspension, and so we can bid all these services for their new tenders. So we were providing all these services in our existing contracts already.
Right. We'll get back to the entire performance and some queries on the company as well. But the way the situation has panned out globally on the geopolitical issues front, the costing of cost, it can be anything. It can be an infra-related cost, a raw material cost, or is there any kind of a mitigation measure at play?
Of course, with the current scenario, as well, but luckily for us, demand in our business is also likely to go up with current scenario. So Deep would be primary beneficiary for this structural shift production, considering the current Iran conflict. And with this major push on increasing domestic production, our services will also be new opportunities.
Yes, and Rohan, speaking of new opportunities, the company is looking at a lot of value-added services also. If you could just give us that outlook on these value-added services, how much you're average in your universe, that also keeps on increasing and you become a fully integrated player. And to be honest, there aren't much in India. So your views on that?
Yes, so over which we otherwise were providing singly. So by bundling all these services, the proposition for any oil and gas producer company becomes more efficient in terms of operational efficiency. You provide all required services for a particular job under a single contract, under value-added offerings, it will always be preferred by both client as well as by the company. Entire gas processing on charter hire to integrated project management, and so on. So
and Rohan, I just want to ask you one thing on the value-added service front. That means the margins are going to increase. Because it was around 45-46% in this third quarter. So correct me if I'm wrong, can we touch that 50% mark in 2 quarters?
So yeah, margins are definitely on improving front. For a period of 2 years, of course, we can reach to there.
2 years, 50% margins coming in for Deep Industries. But Rohan bhai, the question is on Advait Green Energy. There is an MOU signed. Talk about Deep Industries, the oil and gas segment. So how does this hydrocarbon segment or this MOU set up, and what do you do and what do they do?
Sure. So one more vertical in our service offerings with this MOU. So for all green hydrogen projects, we would be bidding along with our partners for I would say balance of plant work would be executed by Deep Industries under this MOU.
Right. So there is a lot of work in that space. But that by March 2026, we just have 1 week left for March to end. Can we expect a rig deployment announcement in the coming days, or it's already in the works?
The third rig, which we were expecting to deploy in March, would get deployed in next 1 week or so.
All right. So that's a good confirmation coming in from the management. And the drilling and workover. Does that continue in the fourth quarter also, or is it a little bit plateauing, or is it just continuing?
Yeah. Considering this exceptional demand on this front, our a scenario which we are seeing for after so many years, where my entire fleet is being mobilized.
Okay, yes, fleet mobilization is something which is very much important for us. But, apart from this, also any kind of, we can expect, integration, that 70% mark which was there in your industry. Do we move across that 80? A fully integrated player by 2030?
See, our endeavor is always to become an integrated and one-stop solution provider. And so under this approach, we would definitely be looking forward to increase this 70% share probably to the higher percentage.
With so much of work happening and revenue guidance upgrade, you have given more than 30 to 35%. Can it be more? Because everything is falling right for the company. So we just wanted to know if you'd like to upgrade the guidance.
Yeah, so growth of more than 30-35% year on year is exceptional for any company. Year on year. Of course, with this current scenario and with increase in demand of our services, this may even go higher, but it would be little early to confirm on that.
Okay, but it may go a little bit higher. Okay, but that's a good statement. That means it's more than 35%. That was earlier your guidance as well, but today I think there might be a chance of an upgrade going ahead. You have not reiterated your guidance. That much I can say that. But Rohanji, another question. The timeline and the progress of this, and how much incremental benefit we can expect?
Yes, by this company's contribution into our sum of chemicals which production, we can expect some good amount of improvement in our operating margins. And We are just waiting for it.
All right. So
somewhere in Q2 FY27, probably it can take 1 or 2 months here and there.
okay, and any capex earmarked for 2026 and that expansion plan on that, especially on the PEC business?
$150 crore in FY27, and that would largely be towards drilling new wells under that production enhancement contract.
Right. To ask you, right now you are touching the 3,000 crore order book. Any kind of guidance coming in for the next 6 months or 1 year? Can we touch that 4,000 crore mark? Because the order seems to be coming more from ONGC now after.
We are currently having an order book of almost 3,000 crore, and with this exceptional demand coming in play, we are quite bullish on. So we are expecting some good amount of conversion in next 2 quarters.
Okay, so that's a very important statement. Good conversion of orders in the next 2 odd quarters. Thank you very much, Mr. Rohan. Industry is favoring your company right now. Well, that's the management of Deep Industries talking about the industry tailwinds and what happens now as ONGC might give in more orders as well, and you can expect some corporate development.
हर पल मनाओ केसरी त्योहार विमल।
पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
The trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. The scanner, we dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Trading below 22,600 today. Sensex crashes more than 1,800 points. Metals, Realty and PSU Bank top sectoral laggards, while all major sectors trade in the red today. Precious metals lose sheen as concerns around Fed rate cut and a stronger dollar weigh on the since 1983. The rupee slumped to a fresh record low today, sustained foreign fund outflows and elevated crude. ₹3.94 against the US dollar. Sources tell Profit that SEBI is set to meet today a wide-ranging agenda market trades. Shares of Raymond trade with deep cuts today after Chairman and MD Gautam Singhania's speedboat over Hari Singh. Hello and welcome. You've tuned into weakness, and that's also a global phenomena because of the war situation and the uncertainties and also the retaliatory war of words along with the missile attacks that's really going on in the Iran war with US and Israel on one side. Nifty 50 at this particular time seeing no is where it's finding some bit of comfort. But remember, there is no buying seen, and it has been the similar trajectory for quite some time now. Let's take a look at the rest of the market. Well, when we talk about Sensex, that has lost over 1,500 points already. Points and percent, and on the other hand the broader markets are also showing a fair bit of weakness coming in, so that is really showing up today. When we talk and the deepest cut is being really brent by both HDFC Bank as well as SBI and also Larsen and Toubro. These are the top Nifty 50 draggers. When we talk about also falling hard, but pretty much all the indices are in the red at the moment. So that's the snapshot of the market, but let's also address a particular group stocks. We are talking about Raymond Group, and with Chairman Gautam Singhania are really plummeting by over 6 to 8% in trade at the moment, and there is a fair bit of nervousness that we are seeing on the Raymond counters. When we talk about the 6 to 7% in trade. Now remember that because of this ill-fated accident of its speedboat in Maldives, well, 2 of the Indian nationals are still for their safe recovery. So that's one of the biggest developments to keep a watch on. Now on the geopolitical tension and what's really brewing at the war front. Who's a former chief of RAW and currently he's an advisor also to an observer of Reach Foundation. Vikram Sud, always a pleasure to welcome you on NDTV Profit. What US has been trying to do and threaten Iran has turned this particular war of words into further escalation of the war. What are your views, sir?
I think overestimated themselves and their ability to switch events or destinies. And Iran, coming off from Venezuela, which is not a good example at all for this sort of thing, because Iran is a big country, 90 million population. To handle. It's not easy to get there. But I'm also surprised that they knew where Ayatollah was and they had him killed, they had him shot. Had kept in store for themselves all these months, years, 5 years, 10 years, maybe 40 years, since 1979. They've been building up their stock. They've been building cost-effective for them, and the United States, who one would presume is already overtaxed with supplying weaponry to Ukraine. Now that the Iranians are now saying no negotiations, no truce, we're going to go on, whereas now and then we see statements from US president, who can always be, it does not mean that this is his last statement. He can change it tomorrow or day after, the same day, that even hinting at a ceasefire or talks and then saying that the Iranians are ready for it. The Iranians keep saying, we're not ready, we don't care. And this move into the Strait because it upsets the entire global oil market.
Yes.
It has hit us, it will hit us again and again. And they have all the trump cards. They hold the card there.
Right. So Vikram Sud, I totally understand. And you had also mentioned that it's not going to be a short-term war that US had earlier anticipated. Recently, and they said that we want it to be a short-term war. How are you seeing this really develop in the present context of threats on power plants on both the sides, and what could be the larger impact in your view?
You know, it's an ongoing theater of war. It's not so easy to predict who will win in the end. But it seems that the Iranians are sharper than they were presumed to be. Ayatollah is dead, they will all fall apart. Iran does not work that way. Iran has a systematic way of handing over power and transferring power to the next regime. As compared to the successor, that varies with the individual. But the basic truth is that the takeover, the takeover by the next came out with a statement which is harder than Ayatollah Khamenei had given. So the Iranians I don't think are in any mood to give up. On the sea.
Yes.
That will be a total disaster.
That's right. The outage of that internet lines, that is one big threat coming in after the kind of energy shortage that the entire world is seeing. But my question on the India impact, very recently we have also heard Pakistan's High Commission to India to also US strikes Pakistan. How do you read into this toxic statement?
He's the man that he is. What can I say about him? I mean, who cares? This is death wish, his own death wish, that we can nuke Bombay and New Delhi and the whole thing will be over.
Right. So
he doesn't understand that Pakistan will be over if this happens.
No, so that's where I am saying the predicament of Pakistan, on which side should it take? Pakistan, which is next door neighbor. Should India worry in this?
No. Is their problem? You handle it. We'll handle Pakistan on our own. And we importance, they don't really matter in our final analysis. In our geopolitical sphere, they figure as an irritant in my definition.
Strategically also tagged along the rest of the Gulf countries, Vikram Sud. How, and also UAE led one condemnation of Iran of the Strait of Hormuz, blockade. But Iran is too strong a partner or a participant in that particular region. So how do the dynamics really change for Saudi Arabia, UAE, who have been trying to really showcase that they are a global, country and don't want to be attached to a Middle Eastern kind of a mindset?
They are the Middle East, they will remain there. And I don't think that they are part of the Western system. It's only because of their oil that they have some value. Otherwise, what is the value of all these countries to we actually done a sensible thing, to my mind, by going into solar electricity in a big way, which will taken action. You would know that they are attacking US bases in these countries. These bases were meant to presumably protect these Gulf states. Cannot shoot down anything in the United States, so they are going for their bases, which in a way can be presumed to be sovereign US territory.
Right. All right. From the expertise that you have on this particular matter, Vikram Sud, always a pleasure to speak to you and get your insights for our viewers. Thank you so much for joining in. All right, so we were talking about the war situation. War and battle, and that also puts pressure on how the energy situation really develops for India. Let's take a look at crude at the particular moment. Crude and metal prices, precious metals. impacting the metal prices. Peter Maguire, who is the CEO of Australia Trading Company .com, joins in. Peter, always a pleasure to speak to you. Today is a very fascinating new geopolitical tension, the escalation of war of words, now power facilities also coming in the midst of it, and that putting pressure on our overall energy supply. How do you see it, Peter?
Well, exactly. And good afternoon, Nisha. I think, as we unpack this and we heard what President Trump said over the weekend, a 48-hour timeline and the impact that that's going to have as far as Iran and their positioning on that and what their counter strategy. Brent, as it says on the screen there, you were nearly at 113 and you've got WTI sitting at just on 100. So it's been a very concise and I think a dynamic time. Precious metal over the next 12 to 18 hours, whether Iran's prepared to just say, right, this is what we'll do. We're coming to the party, or they're not going to. Certainly on Tuesday, and well, it'll be Monday US time.
Right. Do you think, Peter, that a large part of the issues surrounding the war have been baked into the around $100 per barrel, that looks more stable at this particular time?
Well, I don't necessarily think it's all been baked in because there is an uncertainty, and there were many analysts would have thought week 4, and it doesn't show any sign as far as easing. It's actually going the other way, I would think, and from my observations, it's actually ratcheting up. So how that plays, Nisha, I think you're going to see prices extend to the upside here as far as Brent and WTI. Well, that may be a 105, but I think Brent's probably got the capacity to be a 120. Escalate, and then one never knows how much further it could go.
What are the rates that you are really penciling in at your end, Peter, in the short term, considering
has got to be a headline, Nisha, and then you could see 130, and then, let's just see what happens over the next 12 to 18 hours, because that's crucial. President Trump gave an so we want to see the counter positioning from what Iran does, and that's going to be, I think, we'll all be sitting here watching the markets, and when that gets delivered, allow traffic and transport and of the vessels through the Strait of Hormuz with no security worries.
That's right, Peter. In fact, out to pass through Strait of Hormuz. But along with that particular narrative came the rest of the retaliatory statements about power facilities being targeted. And that's where the uncertainty and the Strait of Hormuz really opening up. When we really look at the rest of the precious metals, both gold as well as silver are plummeting, and also a strong dollar is impacting.
Well, I think, where we're sitting at the moment, I'm just looking at the screen, you're in the 4200s now. We were at 5400 3 weeks ago today. So you've stripped out $1,200. Silver's $3. I'm expecting that to be probably high 50s over the next 12 hours when New York is operational. And, the futures market is alive and port. and how does this all move forward? Because this is the uncertainty, and everyone seems to be very short precious metals. Nisha.
Peter, since you are also penciling in all these uncertainties and not really giving a figure, but still, your view on both gold as well as what are the levels that you're penciling in? How much can it fall without resistance in this uncertain environment?
Well, I'd like to think 56, 57, 56. Knows. I mean, I'm putting a figure out there that I wouldn't be surprised that it actually had the capacity to have a 58, 57 sort of handle, and maybe 1,150. I just want to see what happens again over the next 12 to 18 hours. We'll get a very good indication whether this escalates, and it'll escalate very quickly, or taken out of it. So it's a very dynamic next 24 hours.
Right, so very dynamic next 24 hours. Difficult to bake in all the uncertainties really coming. Is really retaliatory right now. So Peter Maguire, we'll keep touching base with you as and when the developments really keep cropping in, but commodity space is looking very, very dynamic at this particular Indian markets. Nifty 50 has lost more ground and has lost that 22,550 odd levels further, so inching towards the lowest point of the trading session at the particular moment. Chakri Lokpriya, who's the Chief Investment Officer, equities at LG. A lot of weakness on the market. What is your view on how much lower Nifty 50 is ready to go, and what are you penciling in as the weak spots, because the entire market is looking red at this point?
Hello, good afternoon. If you look at the market and if you look at the past conflicts, if you take the most recent conflict, the Ukraine-Russia war, when it began, $115 odd, and the markets, Indian markets, fell to about 17 and a half times 1 year forwards. So if you take that as a percent, also given the fact that at that point in time, rupee was roughly about $72, 72 rupees to a dollar. Now it's 94, which means the import cost. So that additionally hits on the market, so which means I think a good 5-7% lower from current levels.
In how much time are you ascertaining that? Will that be fast, Chakri, in your view, given the
key variable is oil? If tomorrow oil comes off from 115 to, let's say, 90, then the market stabilizes. If the oil moves up, then the market falls down much more. So the down to, let's say, about the 90-ish mark, then the market wouldn't really crack that much.
Right. So oil is the biggest right now understanding. But Chakri, looking at the various stock in various aspects, urea is also in shortage, helium shortage has also cropped in. Looking at that, which are the sectors that you are really penciling in as no-go areas?
All the direct companies, whether it's consumer staples who have a big packaging cost, which are all oil derivative linked, and so they will get hit, their margins will get hit. it's a more a 1 quarter kind of an impact that will happen for the banks in general. NBFCs, because of the higher yields, will also face a higher earnings cut. These are all temporary things. So financials as a sector, therefore, is well positioned. Transportation costs, higher freight costs, higher import company, because many industrial companies import a lot of raw materials, and those import costs are gone up because of the rupee falling. So therefore, I think all cyclical industries are worth avoiding at this point in time.
Right. Rupee fall is another very, very pressing point for the market and a big pain at this particular time. Also, Chakri, but thank you so much for joining us with your take. And the biggest takeaway coming in from Chakri from the present levels, looking at 22,000 below 22,500 level has been lost by Nifty 50. So more selling pressure coming in. Keep an eye out on
हर पल मनाओ केसरी त्योहार विमल।
For over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company. Don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Where I break down the day's biggest business stories, what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you
He has been tracking markets for over a decade, spots the trends before they hit the Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company. You. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
That you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed.
With me, Hiral Dadia and Sharad Dubey, who's standing at the NDTV Profit market bit with all the action in the market today. Sharad, it's a one-way move that we're seeing. The way the sectors are being beaten down, mild hope that comes in when you do see that little bit of resilience in terms VIX at the highest level since June 2024 as well. There are just no indicators which are giving investors a ray of hope today.
Right. Good afternoon, Hiral. And only three things are there which are in 500 levels. That is where a little bit of support is coming, but it's down 2.5%. It's a massive sell-off, 600 points down when it comes to Nifty. And Nifty Bank also, the story remains the same. Just the first trading day of the week, and tomorrow itself is also a very major macro day. Brutal sell-off. SMIDs are bleeding left and right. Nifty small cap is down 4%. Nifty mid cap 150 is down almost, you could say. That also 3.5 to 4%. Nifty immediate support is 22,500. Doesn't even have that. 51,000 to 51,500. That's what we are gathering in, and we are quite close to that also, coming down just 170 points away. Expect some index management at play. That's important. Rupee at fresh record lows. Yields are spiking up, and the stress of a hike in rates globally, that's also going to impact a lot of asset classes. India VIX has jumped 16% now. It's above the 26 mark, and it's inching up. So that's a concern as well. Already has happened, and we are seeing that in the overall market. But apart from that, the most important thing to look out would be Trump's 48-hour war deadline. That's expected to But Hiral, it's a brutal sell-off happening all across the markets.
Okay, a brutal sell-off is what we are seeing. The Monday market mayhem is to a Muthoot Finance, with gold being at the lowest since November 2025. You're seeing pressure there. Silver prices have continued to fall, so you're seeing a Hinzing which is under pressure, along with other metal names like is what we are seeing post the sharp sell-off. So you have some of the IT names which are trading in the positive today. The Middle East war disruptions have caused pressure when it comes to Indigo, and a simultaneous reaction and smart volumes coming in with regards to Shriram Finance as well as the Bajaj Finance. Does this become an opportunity to buy any of these heavyweights is the question we need to see. L&T, the commentary from the management in the Middle East have not been affected so far. It's only 5%, but still you're not seeing a major respite in terms of L&T. HDFC Bank, it's the first note from an Paytm, Pine Labs as well. Jefferies has maintained a buy on both these counters. Petronet, LNG, Morgan Stanley has downgraded the stock. Power Grid, they've increased their FY26 CAPEX guidance, and plus there is a session in terms of the watch list. But let me head across to Sharad to take the rapid fire with Kunal Rambia off the street. Over to you, Sharad.
Thanks a lot, Hiral, for that. Good afternoon. And we saw the gold prices correcting, and of course the second order effect is coming on a brutal sell-off for both Muthoot Finance and Manappuram Finance. Big shorts being developed. Important stop losses for this.
First is Muthoot Finance. Of course, the counter has come down sharply from the highs by 25%, but now this is where the earlier volumes were also seen. 2750 to 2800 is a level to watch out on the Muthoot Finance. If it holds those trend which we saw starting in 25 might just continue from 2750 to 2800 onwards.
Right. Apart from this, Kunal, Hindustan Zinc, of course, the silver price fall. Positional setup, good time to exit the stock right now, and if yes, what would be the stop loss?
See, again, on Hindustan Zinc, the rally was really extremely strong, somewhere in the 40, which we saw in May 24, and it has declined from that level, and this entire formation is a curve formation. I am absolutely comfortable holding. If someone is holding this position, one can definitely continue to hold from the long-term perspective. And add a little more also, but not the present level is not the level to exit now.
So present levels is not the time to exit, but the IT space is trying to show emerging to take a bet on the IT stocks, or would you be away from this?
No, I'm very comfortable, in fact, with the entire IT space, and the best pick for us is the Infosys. The only observation is that Jan 2000. Again, we are back to the same level. 4 years of non-performance and recent correction of 35% is offering me extremely favorable risk-reward ratio from the long-term point of view. So if Infosys holds this 1200 mark, I think that's the level to watch out even from the long term.
Right, so we are not going to discuss the upside of most of the stocks in our conversation. I think Hiral will also agree with that. But apart from that, also started downgrading it, and a lot of factors are at play, but there's a positive news flow also of the price cap removal in some days. Your views on Interglobe Aviation, any value emerging, or
near to November 2024 low itself, which is 3900. So ballpark figure is 3900 to watch out for. If counter consolidates near this level, and if we see a higher top, higher bottom coming in the time to come, so yes, this is the level to watch out for the new rally to emerge, either a positive or a negative.
Right, both sides view is there, but metal stocks, they have taken a beating. And Hindalco would be favorable in case the tide turns?
Absolutely, yes. Hindalco has not actually fallen much, and in fact, if you look at the buying emerged some even 50% of this last rally. So yes, if the counter reaches near 825, that's the level even we are witnessing as the good buying opportunity. Again, we will not catch the falling knife, as you mentioned.
Right, and Bajaj Finance and Shriram Finance, both of them are premium valued companies, in this NBFC, this financing space. But a little bit of correction here, there, good time.
Not early to think of it, because there is a clear downtrend with a lower top, lower bottom, even on the weekly chart. The extreme support is at 725, so watch out for that level if the if the counter reaches that level. 715 to 25.
And Kunal, your views on Power Grid, they've increased their capacity expansion plans also, and there's a flight to safety also for these companies, considering the volume.
Power Grid since Jan 2025, it's been more than a year. If counter manages to break above 300 levels decisively, yes, it's a thumbs up, but otherwise I'll stay away from this counter because it's as of now near to the resistance.
Thanks a lot for this interesting rapid fire session in a market where there is a massive sell-off all across. Over to you, Hiral.
Thank you so much for that. Let's just quickly pull up the Google Trends as well. Take a couple of questions with Kunal on the same. Electra Green again seeing profit booking after the last couple of days of rally on the back of EV players that we'd seen. Happiest Mind, interestingly, is under pressure. Petronet, LNG, we know the reasons. DCX Systems on the back of Nordobin, and Manappuram Finance, it's your gold financiers which have been trading under pressure. Kunal, from the names that I mentioned, from an Electra to a Manappuram, Happiest Minds and Petronet, And two, DCX system, which is seeing an uptrend on the back of an order win. Is there an opportunity to sell on rise on that counter, or would you still stay invested?
So, the common mistake which is done by most levels of 1,000, but the fall was decisive, and the first uptick from that lower level is pretty impressive, but there is no follow-through buying. So if the counter manages to go about 1,080, 1,100 in just next 1 week or two, and the worst counter is the Petronet LNG, it's a clear sell, or rather if someone is holding, try to take an exit as early as possible.
Okay. As well, but let's pull up a Gallant Ispat on the screens and see what a Gallant is doing in trade. The stock is under pressure today, 3.5% downtick coming in there. Let's pull up a long-term chart and see what's months. It's up nearly 3.5%, which is still good in a market where we're seeing this kind of rout, and a 55% up move coming in the last 12 months. Mayank Agarwal, CEO of Gallant Ispat, joins in. Promoters were actively acquiring shares from open market. 2.73 odd crores is what you've accumulated in 2026 so far, and this somewhere is reflected. Where I want to take this conversation forward is, what is that outlook looking like going ahead? And two, as a company, what is the impact that the Iran-Israel war is having on
NDTV network? Promoters are definitely very, very confident about the performance of the company. In a long-term perspective, we are on a good roadmap. Recently, we have acquired mines. We are also installing solar plants, and we are also enhancing our capacities. A lot of capex is being invested in the next 3 years. Potential debt on the company in terms of term loan, it's almost debt free. Just the working capital debt is there. So overall, the promoters have a very, very good confidence in the company, and we feel that we have a very good and exciting roadmap ahead for us. The current geopolitics issue, the geoeconomics are definitely being impacted. The energy prices are through the roof, both in terms of also being disrupted, resulting into much higher prices. Movement is not very easy in the sea coastals. We feel about in the current scenario. However, currently we are able to pass that impact to our customers, as we are primarily into construction steel, and this being a peak. Any issues, but if the war sustains for a longer time, it will definitely impact both the demand side and the cost side as well.
Okay, so Mayank, a quick one. Clarity to the viewers. And
so what happened is, currently we are very well equipped with the energy stocks in different varieties of coal that we deal with. A couple of months, probably in Q2. For Q1, we are in a reasonable and in a very comfortable position where there is not much uptick, and
Afternoon, always a pleasure to have a chat with you. In terms of the value-added products, you're talking about your core construction-related business. What kind of value-added products are we looking at going ahead?
where we are producing even very specific grade military related, MES related construction steel, which adds a lot of value. We are also dealing with different grades into coastal areas and where critical constructions are there in refineries, etc. So a lot of value-added products within the construction sector itself is
Okay, so basically we are seeing an impact in terms of pricing as well from here on. But thank you, Mayank. We're running short in time. We would be happy to have let's quickly look at a few of the other aspects that are in focus in today's day of trade. We have L&T that is in focus as well on the back of the Middle East war as we coming to you is, we spoke to the management of Gallant Ispat. Any view that you hold for this counter? Because in the last 1 year, the returns are still pretty decent, 50.5%. It's corrected from the highs.
I think from current view, I think stock has a limited upside that could be 640, 650 range. So from my view, from fresh investor, one should wait. And if you are crucial, so stock can face some more selling pressure on these level also. So I think some pressure can come on these level. 460, 440, that could be ideally a good buying area. Consolidation could be in stocks.
Right, some consolidation might be there for Gallant Ispat, but moving on for L&T, we are focusing on. Company has come out with its interesting. Joined in by Mahima. Hi Mahima, what's L&T saying?
Right, so overall, Sharad, the MD over a weekend did come out with media press release indicating that, from the overall 100 sites that they that they've spent 3 decades, increasing their business in the Middle East in terms of renewable solar as well as data centers, and they call it their second home. What they're saying is that of these, kind of right now a halt in terms of operations. For the logistic and supply chain update, they've said that supplies coming from China and Europe are facing disruption, and via Red Sea or Port of Oman. India business, they're feeling the pressure of shortage of gas, and around 60-70% gas kind of needs to come from the Middle East, and it comes from the Middle East. And green ammonia is something that they're going to focus on, and renewables is then going to be the next opportunity. So energy transition is what they something that they're going to focus upon. But if you take a look at the performance since the war has started, it's
any kind of silver lining happening. Mahesh, I want to take your views in for L&T and currently how it's positioned. What are the medium-term prospects for the company?
Sentiment are not much positive for L&T. But from valuation perspective, stock has corrected more than 25% in recent few days. I think stock has a much more potential for do up delay for the particular period. But I think stock has a much more valuation. I think stock has a much more upstick, but sentiment need to improve. I think we have a positive coverage. So we are positive on Larsen, but yes, sentiment need to improve further.
Thing is there sentiment which is not improving, and that is gold financing companies. Let's pull out the charts, both of them. The gold prices have been, reducing, and this is of course coming in because the global interest rate scenario is tightening, and because of that, the yields are also jumping up, and now it's not even. And why these gold financing companies is important is because most of the loan to value ratio is in the gold itself. So a lot of profits which were there, they might evaporate going ahead, and that's why we are a little bit attractive to enter again, or will you see further downside in the gold prices?
We can't comment on much more on gold prices, but yes, valuation are attractive in one of. Yeah, from these level, I think a 300 plus level could be achievable. Recently, RBI have also came up with some rules that is also keeping this time.
Okay, so that's with regards to where the gold financiers go in trade. But moving on, let's look at a few of the other bank. That stock is also under pressure, and they're saying that there are no governance issues, but it's mainly difference of opinion that has made the chairman resign. In fact, apart from that, what they're saying is in terms of valuations, there could be a derating that could be happening in terms of valuations, and that's what the concern area is, and that is the near-term overhang that one should be watching out for. Mahesh, quick view when it comes to HDFC Bank. Would you use this as an opportunity to accumulate a HDFC Bank, or would you still be on the sidelines?
We are giving some low PE to HDFC Bank from last month because the view of management itself not very pretty positive on banks level. So I think some time need to give from HDFC Bank. I think we can see 1,000 plus level, but yes, we need to wait and watch further for any outcome from bank.
That's with regards to where HDFC Labs. Both of these counters are also in focus on the back of the brokerage note that has come in. Jefferies has maintained a buy on Paytm, and they have actually cut the target price to a 1350 from a 1400. Simon, albeit high sensitivity when it comes to contribution. They're targeting a 20+% revenue growth and an expansion in EBITDA margins, which will be mainly aiding the operating leverage. And what they're saying is that they're trimming valuation multiples, but are seeing a positive risk reward. Mahesh, your quick view, you're talking about pressure, you're talking about a positive risk reward.
Accumulate from these level, I think 1,250 level could be easily achievable for Paytm. So for Paytm, we are positive from these level, but from buying lab perspective, I think a little bit. It's on our wait and watch list.
So there's a little bit of wait and watch list when it comes to the payment companies, but interestingly, Power Grid is in focus. Is coming in the overall operational parameters. Interestingly, BofA has also upgraded the stock to buy from neutral, and the target price has been hiked from 301 to 340 rupees. A quick view on that, Mahesh, on Power Grid.
So advise our client to buy the Power Grid. I think 325, 330 level could be easily achievable for Power Grid, and valuation also remain positive side.
That's with regards to where Power Grid goes. The stock is, not that, it's still maintaining its stability with being on the borderline, not major pressure, trying to just inch towards. To you. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you
And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. We were very bad at understanding finances and managing money.
Tamil Nadu twist. Join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company.
Will the rising sun win with a hand in hand? Will the
Benchmarks trading under pressure and Nifty trading below 22,600. Sensex crashes 1,000. Sectors trade in the red. Precious metals lose sheen as concerns around Fed rate cut and a stronger dollar weigh on appeal. Gold wipes out this year's gains after posting its slump to a fresh record low. Sustained foreign fund outflows and elevated crude prices spell trouble, dragging rupee to a low of 93.94 versus the US dollar. Sources tell NDTV Profit that SEBI is set to meet today. A wide-ranging agenda includes fund settlement norms and changes to FPI framework for cash market trades. Shares of the Raymond Group trade with deep cuts after Chairman and MD Gautam Singhania's speedboat overturned in Maldives. Search underway for 2 more passengers, including Good afternoon. You're tuned in to Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities. after that, a very quick look at the market. It's been a dismal day of trade coming in, whether you talk about Nifty or Sensex. But first things first, let's take a look at Nifty because that's trading with a cut of about 600 odd points. When you talk about Sensex, in fact, you are looking at deeper cuts there. So it was at one point in time trading with a cut of about 1800 points as well, as you can see on your screens also. That in fact has intensified, about a 1900 point cut coming in as far as the Sensex is also concerned. When you talk about the sectoral picture as well, that's not looking all that great either. When you talk about all of the sectors, major sectors, you do have a shade of red that is very clearly visible on your screens as well. When you talk about some of these sectors, metals are leading losses. Realty also on the back foot with that 4.5% downtick also coming in. Sectoral laggards, even IT with that 0.5% cut also coming in, is still trading with a negative bias at this point in time. When you talk about some of your stocks as well, you're looking at something like those prices, silver as well as gold, that have been trading with a downtick as well. And when you talk about within the Nifty 50 pack as well, you're looking at something like a Shriram Finance trading with that 6.9%. Titan Company, Trent, BEL and HDFC Life are some of your top losers from within the Nifty 50 pack. And when you talk about key gainers right now, only 3 from those are some of the counters that are faring a little bit better at this point in time. But largely when you take a look at the global sentiment, that really seems to be transferring on to Indian markets as well, with that sharp cut also coming in as far as the Sensex is also concerned. But with that in mind, let's quickly take a look at oil prices as well and take a look at the kind of action that we've seen thus well, because Brent, of course, hovering above that $110 an ounce level, a barrel level. And when you talk about WTI crude as well, you're looking at somewhere close to 99. So that's something that you're looking at. Definitely something that the market is looking at is the entire situation that is unfolding right now when it comes to the Middle East war. We'll get your insights in just a bit when it comes to oil prices and gold as well. But before we do that, let's also set the context right. In fact, an NDTV exclusive report coming in from an undisclosed location in the Persian Gulf. You do have us, watching this very closely as the only one currently reporting also from the region amid the escalation in the Middle East conflict. Now, the Persian Gulf remains the most critical route leading to the Strait of Hormuz. We've been talking about this vital choke point as well, that takes a look at roughly 20% of global oil trade as well, but shipping movement has dramatically slowed down. Let's take a look at this report by NDTV's Tejashree.
Well, viewers, this is NDTV exclusive because currently we are present at the Persian Gulf, and if we keep on moving towards the eastern coast, we will be reaching towards the Strait of Hormuz, and from there as we'll be reaching to the Arabian Sea, then Indian Ocean. This is the entire roadmap. But in fact, if we talk about so as to ongoing situation and the condition, we all know that what is happening there at the Strait of Hormuz because of the ongoing conflict between Iran and Israel. But currently, as we bring you this exclusive report from the Persian Gulf, we will be also showing you that entire visual which will be in the closest proximity towards the Strait of Hormuz. However, it will not be definitely very much clearly visible because of the restrictions. We are not allowed to go towards that very area. In fact, right now, and it is waiting for the transit is what I am being told. And if we talk about the Strait of Hormuz, we all know that the world's 1/5 oil passes from Strait of Hormuz. That should be around 20 million barrels. And in fact, the major importers for the oil, the receiving countries are India, Japan and China, which will be majorly impacted if in fact this keeps on continuing. If we talk about the Gulf countries, which are the major exporter, say it be UAE, say it be Kuwait, say it be other Gulf countries as well, they are also not able to pass their ships through Strait of Hormuz. Number of experts whom we have been speaking with, they say that their ships are in fact either at Gulf If we keep on moving, as I say, we'll be passing that entire stretch of Strait of Hormuz, but definitely we'll not be able to go there because of the ongoing conditions and current escalations that we talk about, but also in fact pass through Strait of Hormuz after the Foreign Minister S. Jaishankar spoke with its counterpart there back in Iran. But important to note over here is what is the condition here in the sea from where we are reporting right now. You see, otherwise this entire area had a very smooth passage through Strait of Hormuz.
Reporting from the Persian Gulf itself, but when you talk about the resultant impact when it comes to crude prices as well, let's take a closer look at that as well. Like I mentioned, so it's fluctuating near the highest close since mid 2022. Brent in fact has surged by more than 50% since the war started, as you can very clearly see on your screens. About close to that $112 a barrel level is where Brent is hovering, and you can very clearly see that gap also between WTI as well as Brent. But when you talk about Hormuz, that has become a key flashpoint at this point in time. You do have IEA, or the International Energy Agency, that has warned that the market is facing its largest ever shock right now. When you talk about the word coming in from Goldman Sachs as well, you do have a hike to their Brent forecast. They've in fact hiked it to about $85 a barrel. And they're also talking about how flows via the Hormuz are going to be 5% of normal levels. When you talk about the next 6 weeks, when you talk about gold prices as well, you're looking at a plunge on the flip side coming in. Down more than 3% right now. Gold managed to in fact wipe out this year's entire set of gains. And you did have that resilience really providing some confidence to the markets. That seems to have waned away right now. You're looking at a lower chance of a Federal Reserve rate cut, posting its biggest weekly drop since 1983, and close to those levels is where gold is right now at. But with that in mind, let's quickly get you the insights that we promised earlier as well. Birren Vakil, commodity consultant, Paradigm Commodity Advisors, joins us on the show right now. Thank you so much, Mr. Vakil, for taking time out and joining us. First things first, I want to try and understand what you think is happening with oil prices. It's quite some volatility that you're looking at right now. How are you looking at the next 1 week then?
Gold prices 62 today. The way is around 140. Brent is around 112, and NYMEX is around 100. I think still Hormuz problems still remain unsolved. So I think we may see further tightness going forward. Say in domestic terms, MCX, we may see 9500 or NYMEX crude, which is popular benchmark among futures trader. It could hit somewhere around 110, 115.
No, absolutely. And I also wanted to get a sense of what you think is going to be happening when it comes to gold as well, because we've seen quite the plunge coming in as far as gold and silver prices are concerned. How are you then looking at the prices right now? Do you think they're going to manage to stabilize? Because it seems to have erased its entire trajectory for this year right now, gold.
In the initial sell-off during recent weeks, we have seen retail long liquidation, where we mentioned falling knife. Now it seems to be wholesale long liquidation. I think trade is unwinding. So gold is a victim of that unwinding. Still, I'm sensing meaningful downside risk still persist.
No, absolutely. And given all of this, how are you then looking at silver prices as well? What do you see happening for silver? It seems to be trading in tandem with gold, at least for the last 1 month or so. But how are you then looking at silver prices?
China is aggressive importer of silver. So I think here panic mode may subside going forward, maybe within 2-3 weeks. And silver may find base somewhere between $50-$55. Domestic term, 180-190 could be a tentative floor. So relative to gold, silver seems a better bargain.
Really, relative to gold, at least as of now, after gold really managed to erase some of those gains as well for the year, it's looking like a better bargain right now. But when you talk about oil prices as well, what do you then expect for the next couple of weeks then, given all of the geopolitical tensions that are abound right now, all of the headlines that you're also looking at? Just a quick word on what you're then expecting by the way of price levels for the next 2 weeks.
Next week, NYMEX may hit somewhere around 120, 125, and Brent could be 130, 135. Biggest worry is fertilizer and petroleum feedstock, that is naphtha, ethylene, PVC, etc. So this is the space I'm watching for.
No, absolutely, and that space is also something that we're definitely also watching out for, and we'll, try and get some more insights in the next conversation as well. You were one of the first people to really call out that falling knife as well. Thank you so much, Mr. Vakil, for taking time out and joining us on the show right now. But let's also move on and talk to you about another explosive interview with NDTV. You do have renowned economist and geopolitical commentator Jeffrey Sachs, also professor at Columbia University, delivering a blistering critique when it comes to the ongoing Middle East conflict and military strikes on Iran. Let's go across and listen in to a slice of that conversation as well.
Unless there is effective intervention by the outside powers, I have been urging that the BRICS countries be very clear. The BRICS represents half of humanity. It represents half of the world economy. It's very powerful. It needs to speak with a clear voice right now, not punitively against Iran, which is under attack, but directly to the two aggressors, which are Israel and the United States. Let's be honest, which is very hard in public discussion these days, but let's be honest. This is a war of choice for domination over the Middle East by Israel and the United States. Nobody could want this. Nobody can believe that this is prudent, safe, legal, responsible. No one can believe that this is going to turn out well. It needs to be stopped. Unfortunately, the two protagonists of this war of aggression, Netanyahu and Trump, are not themselves stable individuals. They need help to back off and go home. And that help has to come from stable world leaders that have a lot of humanity in their responsibility to say you cannot get.
He starts by saying, others should help because clearly we need help, and then goes on to literally say we don't need any help because, we've bombed the hell out of them. They don't have an air force. They don't have a navy anymore. What do you make of this contradiction? And a lot of the American press has made what his intentions are and what he needs to end the war.
We're watching a disordered mind. He's an old that isn't filled with internal contradictions. We should not take this as our fate. We should try to head off the consequences of these delusions. This is a man who understands very, very little.
So there you go. That's the word coming in from Jeffrey Sachs as well when you talk about this particular development as far as the war is also concerned. But let's also talk to you about a big tailwind when it comes to the aviation sector. Of course, right now you do have Interglobe Aviations that is trading with a cut of over 4% right now. But you do have government, in fact, that has removed airfare caps that were put in place back in December 2025, opening the door for further fare hikes. But just as pricing freedom, in fact, seems to be returning, you do have cost pressures right now that are intensifying. In fact, Somit is joining in just to break down all of those developments.
Well, sentimentally, definitely positive that government has lifted the that they had kept was much higher than what the actual fares used to be. So it is sentimentally positive that we are looking here. Now, this with air airfare cap removal, there could be more airfare hike that could come in, because in past when they had taken the fuel surcharge, that was just accounting for to airline companies is how much could the ATF prices go up, and this change is expected to be announced on the 1st of April. So that is the first most important thing to watch out for. Second will be the demand. %, while the international air traffic is down by around 20% So that is also another negative. And the third negative that is coming in for the aviation companies is the fact that rupee has been depreciating, and nearly 70% of a cost for an airline company is dollar denominated. Now, how will that impact? Now, for Indigo, if you look at every 1% fall in rupee versus the US dollar, lowers their EPS by around 13%. Now, of this 13%, 5% is actual, while the 8% is a mark-to-market loss that the company incurs on the lease liability, aircraft lease liability that they have on their books. So 5% is the actual impact that could come in. Now, this realized impact or the actual impact is largely because of the crude that they're purchasing, plus the maintenance costs that they incur, and all of these payments are done in dollar. Now, when it comes to fuel, every 1% increase in the fuel prices impacts Indigo's EPS by around 3 to 4%. So that's the third negative that is expected to come in, and this will be announced on 1st of April. So though the airfare cap removal is positive, there is kind of a triple whammy that
No, absolutely, and it's that triple whammy really coming in as far as the airlines are concerned. Thank you so much, for joining us with all of those details, especially when you talk about Interglobe Aviations, as you can see on your screens as well. About a 6% cut is what you have coming in. So largely what you're looking at is weak demand. Other than that, all of those new regulations as well that you're looking at. But talking about regulations, let's also shift focus and talk to you about the markets regulator, SEBI, that is set to meet today to deliberate on a wide-ranging agenda, and that includes a proposal to ease fund settlement norms when it comes to foreign portfolio investors as well. In fact, Nimit is joining in with some more details. Nimit, what are your sources telling you?
Absolutely. So the meeting for SEBI is likely to take place later today. The biggest takeaway from this is likely to be easing of regulations for FPI intraday netting norms, which means there'll be a lot more liquidity from them in the market, because they will not have to hold a lot of cash reserve if they're allowed to set off their buys against their sells in the same day. So that is fantastic news that could be announced later today for FPIs in the market. The other big news that's coming through is that there's going to be an ease of doing business reform for both REITs and InvITs, which will be big in the capital market sector, especially for the real estate sector. The other big thing, the third big thing, in fact, is for SEBI officials, and there's going to be a disclosure requirement that's going to be announced. We don't understand what exactly this is, but we understand that there are going to be stricter requirements as opposed to easier requirements. They're going to tighten ship there. This stronger requirement frameworks is because of the transparency requirement that's coming through from the market. Largely, it's going to be a continuation of SEBI's market reform agenda that's been going on since early 2025. Let's wait to see what happens in the meeting that's going to start later today.
Absolutely, and thank you so much, Nimit, for joining us with all of those details when it comes to this particular meeting. Let's also shift focus onto another story that Nimit is tracking very closely. The government is pushing through a major overhaul when it comes to corporate law as well, promising easier compliance and faster capital returns when it comes to companies. The Companies Laws Amendment Bill 2026, in fact, rewrites several rules, and that's something that you're also looking at. There's a physical AGM from annual to once every 3 years, so that's an important change that you're looking at. In fact, Nimit is standing by with that entire fine print also. Nimit, let's go through this one also.
Yeah, back on this one. The Companies Law Amendment has been introduced. It's been sent to the Joint Parliamentary Committee right now for further deliberations. But there's two sets of important changes that come through. One to the LLP Act and one to the Companies Act. The LLP Act, the big news really is for international financial services centers like Gift City to make them more competitive, like service setters can register under the LLP Act, which allows them a lot more flexibility in terms of reporting mandates and how they can maintain their books in India. Now, of course, foreign currency accounting has been mandated for these IFSCs, and there's limited flexibility when it comes to the rupee. But the good news is also for funds here, because funds, especially AIFs, can now register under the LLP Act, which is again freeing them up in terms of how they can structure their deals in India now. The other set of changes are for the Companies Act. The Companies Act, the big picture item that's coming through is, of course, the digitalization and going electronic. The Parliament has recognized that most communication is done electronically. They have allowed for companies to hold their annual general meetings physically only once every 3 years, and they can do it virtually or in hybrid mode for the other 2 years. Shareholder communication in the same way has been committees have been strengthened, their disclosure requirements and their have been tightened extremely harshly. In fact, I would say company composition needs the small company mandate threshold has been raised. This means that more number of companies will have to do fewer registrations and compliances. This is broadly the trend throughout. A lot criminalizing them, moving them to civil offences. Higher penalties, of course, have been put in place for listed entities versus unlisted firms.
No, absolutely, and that's thank you so much for getting us all of those details. Looking at when it comes to this particular act or amendment, but let's also move on and talk to you about foreign investors that have turned aggressive sellers in Indian equities. But even in this selling spree, you're looking at all of those details when it comes to FII action in Indian equities.
I mean, if you take a look at the last 1 year, around 2.6 lakh crore of equity is what we've seen selling. 23 odd days, we've seen the war escalate, and because of that we've seen heavy selling. Before that there was Trump tariff, which was the reason as to why FIs were selling. Were high. Weak corporate earnings was also one of the reasons, and attractive global alternatives was also one of the reasons. Plus there is rupee depreciation, which is always playing its part. Now if you take a look at that despite of this heavy selling, there were counters, small cap names specifically, where there was buying seen in the past 1 year. If you take a look at the names of those top 5 to 6 odd stocks, which reached to almost 12.5%. For something like a Knowledge Marine, it reached to 11% from 0.8 odd percent. Utkarsh Small Finance Bank saw buying from 1.3 to almost 12 odd percent. GRM Overseas, to give viewers a perspective as to how these counters have done in the past 1 odd year. Highest gain has been seen by Knowledge Marine, which is up around 84 odd percent. Small Finance Bank, despite of FI buying, is down around 44%, and Artemis Medicare down around 13 odd percent. Now, what do these companies do? Just to give viewers a perspective, Artemis Medicare is a structure. For Jeevan Small Finance Bank, it provides collateral-free small ticket size loans. For GRM Overseas, it's a basmati rice exporter and manufacturer. And Zota Healthcare is basically a pharmaceutical company that manufactures, markets and exports pharmaceutical products. Now, this 5 years. GMR Airports, Polymedicure, PVR Inox, as well as Aavas Finances and Religare Enterprises. So this is the overall list as to how FIs have been buying and selling, and some counters where we've seen.
Joining us with that analysis, the FI selling pressure seems to really be continuing, and that's something that we're looking at right now. But that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे
बोलो जुबान केसरी.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social effect opportunity for us to probably scale our business, our mission 10x from here.
With what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable, and accessible to everyone.
How do you then
And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when since then?
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, that was the time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. We were very bad at understanding finances and managing money.
He has been and he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company. You, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30.
People, language and politics. Vanakkam Tamil Nadu. Here we come.
Hello and welcome to NDTV Profit. My name is Varsha. Well, Innovision, which started as a manned private security services company, has since diversified its portfolio, to include today. To speak more about the company and the growth prospects going ahead, we are here joined by Lieutenant Colonel Randeep Hundal, who is co-founder and CMD. At NDTV Profit, pleasure to have you. Well, now whole India will participate in your growth story. So what are the targets set when it comes to, revenue? 7%. So, if you could help our viewers, the targets set for yourself, if you could update on that.
Yeah, morning Varsha. Firstly, thank you for having. It's been 19 years since we started this company. So when we started this company, we started this, as a manpower company, but then slowly we graduated into a tolling company. Manpower services and skills development. This is basically, the company is not an asset heavy company. It is more, we require working capital for this company. So if you look at our proportional to the working capital that we have. Now, having said that, that was the reason that we have thought of, going public, because the growth sense is directly proportional to the working capital. And 2 years, we are very, very bullish about the growth here, and it would be to the tune of whatever that we have been able to achieve in last 2 years.
Okay, so can we expect,
Yes. So as I told you, since we have already proved this is our proven track record, it is nothing that, so since the company is fundamentally very the capital, this is the growth, that I can assure my investors in the coming my years.
Understood. And also, Mr. Hundal, when it comes to the utilization of the So, what will be your net debt post, the IPO proceeds?
To be approximately, we are paying around 60 odd crores of debt with the company.
Understood. And Mr. Singh, coming to you on this, out of 3 segments, wanted to know which is the fastest growing segment, maybe next 2 years. Where do you see Innovision when it comes to the growth driver? So out of 3 segments, which will be the growth driver or the fastest growth?
Has been the toll plaza management, but the manpower segment remains our bedrock basically. But going forward, we expect
that was the management of Innovision giving their strong growth plans going forward. But now in the small cap show, in fact in the next half an hour, we'll take you through the most important. Now in the next half an hour, firstly we'll be speaking about de-development. Now this stock is down nearly 20% in the last 5 trading session. What is the impact of this LPG shortage on the show today? We'll be also giving you a host of stocks where FIs have been buyers in the small cap segment. Now if you look at in the last 12 months, FIs have sold equities worth nearly $13 billion on this show, so stay tuned and keep watching Small Cap Buzzers. And we'll be also speaking about Nosil. Now the stock is up as much as 14% in trade, its biggest single day move that we have seen. Stock has snapped its 2-day losing streak. It's up over 7% in such a weak market, and volumes are nearly 14 times its 20-day average. So what could be the potential reason behind this up move is also something. Open lower, continues to trade lower, down around 600 points in trade, trying to find some support around the 22,500 level. It's been hovering around the same level for the last 2 to 3 hours, so not much of an is clearly working as a defensive. It has fallen the least, down just 0.3% in trade, while there are some sectoral indices which have fallen nearly 5%. If you look at Nifty Consumer Durable, Nifty trade. In fact, the Nifty Small Cap Index is also down close to 4.5% in trade. But Varsha, when it comes to the small cap segment, which are the key stocks that have been buzzing in trade?
Well, the stocks that are be buzzing again, buzzing on the back of volumes at 94x. You have DCX system, you have Gujarat Alkalis, wherein if you see the volumes are trading at almost 10 times of its 30-day average. Butterfly Gandhi Mathi again buzzing in trade today on the back of volume. So normally the stocks are buzzing. The reason behind is only the volume. Onto the loser side though, you have ADF Foods, you have under pressure. So, not much action as of when it comes to small cap stocks with respect to news, but everything is, of course, a volume game. But, moving. What's the impact on de-development and what lies ahead for the company? We are here joined by KL Bansal, who is Chairman and Managing Director at De-Development Engineers. Well, Mr. Bansal, welcome at NDTV Profit. Always pleasure to have you. Just wanted to know the direct and indirect impact.
Ma'am, I would like to tell very clearly that, as far as our company is concerned, we are fully secure from this turmoil. There particular month only, and in coming future in FY27, it's 100% sure that our order book is more than 1900 crores as of previous. Full 1 year order book is much more than our expected turnover, which we are planning to do, which is around 1500 crores. And, we are 100% touch a benchmark of 2,500 by FY30. That is for sure. As far as this small impact is concerned, definitely there is very, very small impact. But, our all raw by some LNG supplies, and for that also, we are working on an alternative fuels so that, we are even insulated from that. We are getting ready to make ourselves handle that particular issue also. We are going in for either electrical furnaces. We are modifying our existing furnaces to electrical. To fire our furnaces. That is the only point, that is the only thing which we feel may impact us. But as far as other things like raw material availability, other consumables, and we do not see absolutely any reason for worry or reason for any anxiety in the coming year at least.
Right. Just wanted to understand in the Middle East region, how much of your order book comes in from those regions that could get delayed? Anything on that front?
Right now, we have one order going on, which impact on our revenue recognition for this March only. Otherwise, there is no impact, and that is also not very large order, maybe around 12 crores. Having little bit of anxiety.
Sir, on that note, what is the revenue expected for FY26? Because you were targeting 40 to 45% of revenue, which is that being impacted due to war? So just wanted to have a ballpark number for FY26 when it comes to your revenue and margins.
We should be in the range of 1,200 will be our top line, and we still maintain that we should be above 18% or around 18% as far as the EBITDA levels are concerned.
If you could also highlight the growth for us.
Around 20% on CAGR basis for next 4 years at least. There's no doubt on that, and EBITDA margins also.
You are mentioning that only one order is going to Middle East that could be delayed. But the 63% orders that you get from export market, which regions are you exposed to?
now onwards. But major orders as of now, which is under execution, is going to Canada. And for Canadian order also, we are seeing an impact of 10 containers. Either been picked up, which we are supposed to bill in this particular month, or some containers we shall be getting on 29th of this particular month. So it's all established.
Okay, but also given the fact that this war has actually led to an increase in transportation cost, will that be impacting to you, or are you passing, or are you
sea freight increases, that goes to the customer account. Our terms are on FOB basis, so it has absolutely no impact as of now.
Right. And sir, also you were expecting a lot of orders from power. 100 crores of order from oil and gas and 700 crores of order for the same for FY27. What's the update on those orders?
Sir, most of those orders have already come in. As I told you that 200 crores worth of order in which we are L1. So we are expecting that all order should also come within this week itself. So, whatever targets or whatever projections we had given, and even for coming year also, we have a very, very healthy order book crossing 2,000 crores.
Okay. Well, thank you, sir. Thank you for joining us and giving us the way forward and the impact of Tapan, you heard the management. As per them, there could be some delay in the revenue recognition, but not much of an impact even after factoring in for the increased.
Good afternoon, Somit. No, the management committee is quite reassuring. No, I think less effect is there on this company. And if you see, their order book is quite good, almost 1.8 times of the annual turnover. As they already told, that 20 cent will be a good year for them, even for export. Yeah, see, currently for short term, there will be a pressure on margin pressure due to the raw material costs and all. I think at this valuation, I think the stock is available at a good level. So if someone is having that stock, please hold it. I think management is quite reassuring. Hopefully, once this war is passed on, I think this company will
shaping up trade today. Let's bring in Sharath for more details on that.
Well, thanks a lot for that, Varsha, but nothing has changed since 10:45, the last update which we had taken, and largely we have seen a brutal sell-off continuing, and this is happening across the sectors. BankX also, the story is the same. The volatility on the other hand has increased. Last time it was 15% in the Indian market. Something pretty much concerning. Definitely the levels are on the lower side. Let's see what stocks are doing well in the trade. Long build-up includes Premier Energies and HCL Tech, but you should be focusing on the IT. This is where it is, Bharat Dynamics. Look at that. That's down almost 6.5%. While SAIL, all the metal stocks are seeing a big sell-off happening. And right now, the Muthoot Finance, the gold stress, that's the big concern, but the sell-off is brutal here, and there might be some promoter stake sale overhang as well in this counter. So these are the stocks which should be on your radar, but it's an extreme day of
the FI side. In the last 1 year, they have sold equity worth nearly $13 billion. But there are few small cap stocks where actually FIs have shown some interest and there have been a buying activity. And the same.
Right, so as you rightly mentioned, FIs have been constantly selling, and in the past 1 year, we've seen around 2.6 lakh crore of equity sold by FIs. And when I was trying to gather the data between Caps. To start with, Artemis Medicare saw an increase in its holding from 0.6% to 12.5%. For Knowledge Marine, it was from 0.8% to 11%. For Utkarsh Small Finance, 0.5%, and Zoda Healthcare from 0.2% to 8.1%. Now, what do these companies do? Briefly for our viewers' understanding, Artemis Medicare is into multi-specialty tertiary care hospital. Finance Bank basically gives small ticket loans out there. GRM Overseas is into milling as well as processing and marketing of branded as well as non-branded basmati rice, and Zota Healthcare is into manufacturing, marketing and export. Given by Knowledge Marine has given a return of around 84% in the last 1 year, followed by something like a GRM Overseas up 64% in the past 1 year, then Zota Healthcare at 31%, but Utkarsh Small Finance Bank and Artemis have given negative returns. Artemis down 13% in 1 year and Utkarsh Small Finance Bank a downtick of around 44%. So this is the overall view of, while FIs have been selling, these are the small cap stocks where FIs have been secretly kind of increasing their stake.
Right. Tapan, Artemis Medicare, Knowledge Marine, Utkarsh Small Finance Bank, GRM Overseas, Zota Healthcare. These are these 5 companies at least.
Well, I think if from this, I think I'll look at Utkarsh Small Finance Bank. The stock has already fallen a lot, and if you see overall this bank. Of course, it's a highly risky bet, but I think things will be much better from here. So yes, I'm a little bit positive on Utkarsh compared to other stocks.
Good. Well, let's pull up the chart for NOSIL. Let's see what 2%. Let's see what are the key triggers. First of all, this is the biggest move since May 2021. Talking about the FY26 volume guidance given by the company, despite 5% growth for FY26, and recovery is also led by Q3 momentum and improving demand trends. Well, onto the import outlook, import levels have stabilized over recent quarters and the management does not expect is at a lower end, while management is expecting spreads to improve going forward. Onto the US volume, Q3 US volume, if you see, were at 50% of pre-tariff levels. But FY26 overall export performance is expected to be flat over FY25, and double-digit growth is expected when it comes to export in FY27. While trials are planned in calendar year 26, that is H1. So overall, a lot of things are actually working when it comes to NOSIL, and hence you are seeing the stock is buzzing on the back of volumes. Well,
one should wait here, because after a long time, NOSIL has given an uptake. But still, no, we have to see how will be the demand going forward also, because rubber chemical demand is overall weak and the margin pressure is already there due to China competition is quite there, pricing pressure is there, export demand slowdown maybe we can see in Europe side and all that. Even though if you see the margins and volume growth is decent enough.
Well, lastly, we'll be speaking about D6 system. Despite the weakness that we are seeing in market, that counter is up more than 12% in trade. And this is on the back of strong volumes. What could be the potential reason?
Yeah, thanks. So DCX is up more than 10% today, and so this is because of, as you rightly mentioned, volumes. But if we shift our focus towards the longer time frame, fallen more than 30%. The company won some big orders last month. Some of them are as follows. The first one was a domestic order for radar systems, which is valued at around 563 crores. The second one is an combination of both domestic and international order for cable and wire harness assemblies, which is valued at around 12.81 crores. The third one 8 crores. Regarding key highlights from the last quarter, the company mentioned that they had won orders from both domestic and foreign customers at valued at around 92 crores, and the government of Tamil Nadu. Also, their order book as of 31st December 2025 stands at 2,580 crores. So a lot of order inflow coming in for the company. Let's see how they're able to execute.
So Samit, the problem with DCX, the execution. If you see the stock, even though in the defense sector is going down, reason is the execution only. Very lumpy execution, and the client concentration is working capital intensive was there, no, overall the project, so no, their cash flow was in a problem. Again, if you see lot of defense approval delay was also there. But from going here, I think EBITDA margin may be around is a mega trend. I think one can hold for the stock for at least for a few quarters and see whether execution is improving or not.
Well, that was all that we have on the show today. Well, thank you, Tapan. Thank you for joining us and giving buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे
बोलो जुबान केसरी.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company.
Upon food as a space that you want to be in.
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home. It used to be
There comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
in 21, we were very busy serving to the frenzy of COVID buying that. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
Tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to understand your next big bet.
To understand the Tamil Nadu twist, join me in the rising sun win with a hand in hand? Will the two leaves join me in the midst of a
welcome. You're watching Ask Profit, the afternoon edition. I am Mahima Vachajani and with me is Puneet Zaveri. Before we take all your stock related queries, let's take a quick look as to how the markets are doing. Have been under pressure throughout the day, as you know, we've been telling you. Slight recovery, of course, from the day's low point, but not a significant one. The Nifty 50 right now is trading below the 22,700 levels, just above the 22,600 levels, up down by about 2.2 odd levels. So slight recovery from the day's low point for Bank Nifty as well, but not a significant one again here. Let's try to pull up the Nifty 50 heat map to see as to how counters are faring right now. Shriram Finance taking the most knock, down 6%, followed by Titan, which is down 5% as well. Interglobe Aviation, Ultratech, Trent, Geo Finance, as well as HDFC Life, Tata Steel are some of the names that are seeing a downtick of that 4% each on the Nifty 50 chart. But on the flip side, you have HCL Tech, which is gaining the most today, up 1.8%, followed by Power Grid, which is also up 1.4%. Tech Mahindra up almost 1%, ONGC up 0.6%, HUL up 0.4%, and TCS, largely seeing an uptick of around 0.2 odd percent. So IT names, few IT names to see as to what that picture is looking like, and I'm guessing that it's still in the red barring IT. Okay, IT is also in the red right now, almost flat as we speak. For a short while it did go in the green territory, but Nifty Realty, all of these tanking in that range of 4 odd percent, followed by something like all right, so that's with regards to where the sector goes, but Prime Minister Narendra Modi is addressing the Lok Sabha right now. Listen in.
आदरणीय अध्यक्ष महोदय, मैं इस सम्मानित सदन में पश्चिम एशिया में चल रहे संघर्ष और इसकी वजह से भारत के सामने आई चुनौतियों पर बात रखने के लिए उपस्थित हुआ हूं। इस समय पश्चिमी एशिया की हालत चिंताजनक है। बीते 2-3 हफ्तों में जयशंकर जी ने और हरदीप पुरी जी ने इस विषय पर सदन को जरूरी जानकारी दी है। अब इस संकट को 3 सप्ताह से ज्यादा हो रहा है। इसका पूरे विश्व की अर्थव्यवस्था पर, लोगों के जीवन पर बहुत ही विपरीत असर हो रहा है। इसलिए पूरी दुनिया इस संकट के जल्द से जल्द समाधान के लिए सभी पक्षों से आग्रह भी कर रही है। अध्यक्ष महोदय, भारत के सामने भी खड़ी कर दी है। ये चुनौतियां आर्थिक भी हैं, नेशनल सिक्योरिटी से जुड़ी भी हैं और देशों के साथ भारत के व्यापक व्यापारिक रिश्ते हैं। जिस क्षेत्र में युद्ध हो रहा है, एक महत्वपूर्ण रास्ता है। विशेष रूप से कच्चे तेल और गैस की हमारी जरूरतों का एक बड़ा हिस्सा यही क्षेत्र पूरा करता है। हमारे लिए ये करोड़ भारतीय खाड़ी देशों में रहते हैं और वहां काम करते हैं। वहां समंदर में जो कमर्शियल शिप चलते हैं उनमें भारतीय क्रू मेंबर्स की संख्या भी बहुत अधिक है। ऐसे अलग अलग कारणों के चलते इसलिए ये आवश्यक है कि भारत की संसद से इस संकट को लेकर एक मत अध्यक्ष जी, जब से ये युद्ध शुरू हुआ है तब से ही प्रभावित देशों में हर भारतीय को जरूरी मदद दी जा रही है। मैंने खुद पर बात की है। सभी ने भारतीयों की सुरक्षा का पूरा आश्वासन दिया है। दुर्भाग्य से इस दौरान ऐसे मुश्किल हालात में परिवारजनों को आवश्यक मदद दी जा रही है। जो घायल है उनका बेहतर इलाज सुनिश्चित कराया। प्रभावित देशों में हमारे जितने भी मिशन हैं वो निरंतर भारतीयों की मदद करने में जुटे हैं। वहां काम करने वाले भारतीय हो या फिर जो टूरिस्ट वहां गए हैं, सभी को हर समय एडवाइजरी जारी कर रहे हैं। यहां भारत में और अन्य प्रभावित देशों में 24/7 कंट्रोल रूम और आपातकालीन हेल्पलाइन स्थापित की गई हैं। इनके माध्यम से संकट की स्थिति में देश विदेश में भारतीयों की सुरक्षा हमारी बहुत बड़ी प्राथमिकता रही है। युद्ध शुरू होने के बाद से लेकर अब तक भारत लौट चुके हैं। ईरान से ही अभी तक लगभग 1000 भारतीय सुरक्षित वापस लौटे हैं। इनमें 700 से अधिक मेडिकल की पढ़ाई करने वाले हजारों विद्यार्थी पढ़ते हैं। सीबीएसई ने ऐसे सभी भारतीय स्कूलों में होने वाली कक्षा 10वीं और 12वीं की निर्धारित परीक्षाओं को रद्द कर दिया है। इन बच्चों की पढ़ाई है। यानी सरकार संवेदनशील भी है, सतर्क भी है और हर सहायता के लिए तत्पर भी है। कच्चा तेल, गैस और फर्टिलाइजर जैसी अनेक जरूरी चीजें हॉर्मुज स्ट्रेट के रास्ते से आती हैं। चुनौतीपूर्ण हो गया है। बावजूद इसके हमारी सरकार का ये प्रयास रहा है कि पेट्रोल, डीजल और गैस की सप्लाई बहुत कम हो, इस पर हमारा फोकस रहा है। हम सभी जानते हैं देश अपनी जरूरत की अनिश्चितता के कारण सरकार ने एलपीजी के डोमेस्टिक उपयोग को प्राथमिकता दी है। साथ ही एलपीजी के देश में ही उत्पादन को भी बढ़ाया जा रहा है। पेट्रोल लगातार काम किया गया है। अध्यक्ष जी, आज की इन परिस्थितियों में एनर्जी सिक्योरिटी को लेकर भारत ने बीते 11 वर्षों में अपनी एनर्जी इंपोर्ट का डाइवर्सिफिकेशन किया है। पहले क्रूड ऑयल, एलएनजी, एलपीजी ऐसी एनर्जी जरूरतों के लिए देशों से एनर्जी इंपोर्ट करता है। अध्यक्ष जी, बीते दशक में भारत ने संकट के ऐसे ही समय के लिए कच्चे तेल के भंडारण को भी प्राथमिकता दी है। आज भारत के पास और 65 लाख मैट्रिक टन से अधिक के रिजर्व की व्यवस्था पर देश काम कर रहा है। हमारी तेल कंपनियों के पास जो रिजर्व रहता है वो अलग है। बीते 11 वर्षों में हमारी रिफाइनिंग कैपेसिटी में भी देशों के सप्लायर्स के साथ भी लगातार संपर्क में है। प्रयास ये है कि जहां से संभव हो वहां से तेल और गैस की सप्लाई होती रहे। भारत सरकार गल्फ और आसपास के शिपिंग रूट्स पर निरंतर नजर बनाए हुए है। हमारा प्रयास है कि तेल हो, गैस हो, फर्टिलाइजर हो, ऐसे हर जरूरी सामान से जुड़े जहाज भारत तक सुरक्षित पहुंचे। हम अपने सभी वैश्विक सहयोगियों के साथ निरंतर संवाद कर रहे हैं ताकि हमारे मैरीटाइम कॉरिडोर सुरक्षित रहे। ऐसे प्रयासों के कारण बीते दिनों हॉर्मुज स्ट्रेट में फंसे हमारे कई जहाज भारत आए भी हैं। एक और तैयारी भी बहुत काम आ रही है। पिछले 10-11 साल में इथेनॉल के उत्पादन और उसकी ब्लेंडिंग पर अभूतपूर्व काम हुआ है। एक दशक पहले तक देश में सिर्फ 1-1.5% इथेनॉल ब्लेंडिंग कैपेसिटी थी। आज हम पेट्रोल में 20% इथेनॉल ब्लेंडिंग के करीब पहुंच रहे हैं। इसके कारण प्रति वर्ष करीब 4.5 करोड़ बैरल कम ऑयल इंपोर्ट करना पड़ रहा है। ऐसे ही रेलवे के बिजलीकरण से भी बहुत बड़ा फायदा हो रहा है। अगर रेलवे का इतना बिजलीकरण न होता तो हर साल करीब 180 करोड़ लीटर डीजल अतिरिक्त लगता। देश में मेट्रो नेटवर्क 250 किलोमीटर से भी कम था। आज ये बढ़कर करीब 1100 किलोमीटर हो गया है। केंद्र सरकार ने राज्यों को 15,000 इलेक्ट्रिक बसें चलाने के लिए दी हैं। आज जिस स्केल पर और सुरक्षित होगा। आदरणीय अध्यक्ष जी, हम जानते हैं और ग्लोबल एनर्जी नीड्स को पूरा करने वाला एक बड़ा सोर्स वेस्ट एशिया है। स्वाभाविक है कि दुनिया भर की अर्थव्यवस्था वर्तमान संकट से प्रभावित हो रही है और भारत पर इसका कम से कम दुष्प्रभाव हो, इसके लिए निरंतर प्रयास किए जा रहे हैं। सरकार इसके शॉर्ट टर्म, मीडियम टर्म और लॉन्ग टर्म ऐसे हर असर के लिए एक रणनीति के साथ काम कर रही है। आज भारत की इकोनॉमी के फंडामेंटल्स मजबूत है, इससे भी देश को बहुत मदद मिली है। हम हर सेक्टर के स्टेक होल्डर्स उस सेक्टर को आवश्यक सपोर्ट दिया जा रहा है। भारत सरकार ने एक इंटर मिनिस्ट्रियल ग्रुप भी बनाया है। ये ग्रुप हर रोज मिलता है और हमारे इंपोर्ट एक्सपोर्ट में आने वाली हर दिक्कत का आकलन करता है और ये ग्रुप आवश्यक समाधान पर भी निरंतर काम करता है। मुझे पूरा भरोसा है कि सरकार और इंडस्ट्री के साझा प्रयासों से हम परिस्थितियों का बेहतर सामना कर पाएंगे। माननीय अध्यक्ष जी, एक बड़ा सवाल ये है कि युद्ध का खेती पर क्या प्रभाव होगा। देश के पर्याप्त खाद्यान्न है। हमारा ये भी प्रयास है कि खरीफ सीजन की ठीक से बुआई हो सके। सरकार ने बीते सालों में अतीत में भी हमारी सरकार ने दुनिया के संकटों का बोझ किसानों पर नहीं पड़ने दिया था। कोरोना और उस ग्लोबल सप्लाई चेन में डिस्ट्रप्शन आ गई थी। दुनिया के बाजार में यूरिया की एक बोरी 3,000 रुपये तक पहुंच गई। कीमत उपलब्ध कराई गई। अध्यक्ष जी, देश के किसानों को इस प्रकार के संकटों से बचाने के लिए भी बीते वर्षों में 6 यूरिया प्लांट शुरू किए गए हैं। इससे सालाना 76 लाख मैट्रिक टन से अधिक की यूरिया प्रोडक्शन कैपेसिटी जुड़ी है। इस दौरान डीएपी और एनपीकेएस जैसी खाद का घरेलू उत्पादन भी करीब 50 लाख मैट्रिक टन बढ़ाया गया है। इतना ही नहीं, तेल और गैस की तरह खाद के आयात को भी डाइवर्सिफाई किया गया है। ऐसे ही डीएपी और एनपीके के आयात के लिए भी हमने अपने विकल्पों को विस्तार किया है। अध्यक्ष जी, सरकार ने देश के किसानों को मेड इन इंडिया नैनो यूरिया का विकल्प भी दिया है। सरकार किसानों को प्राकृतिक खेती के लिए भी प्रोत्साहित कर रही है। बाईस लाख से ज्यादा सोलर पंप दिए गए हैं। इससे भी डीजल पर उनकी निर्भरता कम हुई है। मैं सदन के माध्यम से देश के मदद करती रहेगी। आदरणीय अध्यक्ष जी, युद्ध का एक बहुत बड़ा चैलेंज ये भी है कि भारत में गर्मी का मौसम शुरू हो रहा है। आने वाले समय में बढ़ती गर्मी के साथ बिजली की डिमांड बढ़ती जाएगी। भारत ने लगातार दूसरे साल 100 करोड़ टन कोयला उत्पादन करने का रिकॉर्ड बनाया है। पावर जनरेशन से लेकर पावर सप्लाई तक के हमारे सभी सिस्टम की निरंतर मॉनिटरिंग भी की जा रही है और सरकार की तैयारियां उसको रिन्यूएबल एनर्जी से भी मदद मिली है। बीते दशक में रिन्यूएबल टोटल इंस्टॉल पावर जनरेशन कैपेसिटी का आधा हिस्सा रिन्यूएबल सोर्स से आता है। हमारी कुल रिन्यूएबल क्षमता आज 2 बीते 11 वर्षों में देश ने अपनी सोलर पावर कैपेसिटी करीब 3 गीगावाट से बढ़ाकर 140 गीगावाट तक पहुंचाई। रूफटॉप सोलर लगे हैं। इसमें पीएम सूर्यघर मुफ्त बिजली योजना से भी लोगों को काफी मदद मिली है। गोवर्धन योजना के तहत देश में आज 200 कॉम्प्रेस्ड बायोगैस प्लांट भी काम आ रहे हैं। सरकार ने भविष्य की तैयारी और बढ़ाते हुए शांति एक्ट माध्यम से देश में न्यूक्लियर एनर्जी के स्मॉल हाइड्रो पावर डेवलपमेंट स्कीम को भी हरी झंडी दी गई है, जिससे अगले 5 वर्षों में 1500 मेगावाट नई हाइड्रो पावर कैपेसिटी जहां तक डिप्लोमेसी की बात है, भारत की भूमिका स्पष्ट है। शुरुआत से ही हमने इस संघर्ष को लेकर एशिया की सभी संबंधित नेताओं से बातचीत की है। मैंने सभी से तनाव को कम करने और इस संघर्ष को खत्म करने का आग्रह किया है। भारत ने नागरिकों, एनर्जी और ट्रांसपोर्ट से जुड़े इंफ्रास्ट्रक्चर पर हमलों का विरोध किया है। कमर्शियल जहाजों पर हमला और हॉर्मुज स्ट्रेट जैसे अंतर्राष्ट्रीय जलमार्ग में रुकावट अस्वीकार। भारतीय जहाजों के सुरक्षित आवागमन के लिए निरंतर प्रयास कर रहा है। अध्यक्ष महोदय, भारत अपनी आवाज उठाता रहा है। मैं फिर कहूंगा कि बातचीत और कूटनीति ही इस समस्या का समाधान है। करने के लिए है। इस युद्ध में किसी के भी जीवन पर संकट मानवता के हित में नहीं है। इसलिए भारत का प्रयास सभी पक्षों को जल्द से जल्द शांतिपूर्ण समाधान के लिए संकट आते हैं तो कुछ तत्व इसका गलत फायदा उठाने की कोशिश भी करते हैं। इसलिए कानून व्यवस्था सुनिश्चित करने वाली सभी बॉर्डर सिक्योरिटी हो, साइबर सिक्योरिटी हो, स्ट्रेटेजिक इंस्टॉलेशंस हो, सबकी सुरक्षा को और मजबूत किया जा रहा है। अध्यक्ष जी, इस युद्ध के कारण दुनिया में जो कठिन हालात बने हैं, उनका प्रभाव लंबे समय तक बने रहने की आशंका है। इसलिए हमें तैयार रहना होगा, हमें एकजुट रहना होगा। हम कोरोना के समय भी एकजुटता से ऐसी चुनौतियों का सामना कर चुके हैं। अब हमें फिर से उसी तरह तैयार रहने की आवश्यकता है। धीरज के साथ, संयम के साथ, शांत मन से हमें हर चुनौती का मुकाबला करना है और यही हमारी पहचान है, यही हमारी हालात का फायदा उठाने वाले झूठ फैलाने का प्रयास करेंगे। ऐसे लोगों की कोशिशों को सफल नहीं होने देना है। मैं देश की सभी राज्य सरकारों से भी इस सदन के माध्यम से आग्रह करूंगा, ऐसे समय में कालाबाजारी करने वाले, जमाखोरी करने वाले एक्टिव हो जाते हैं। इसके लिए कड़ी मॉनिटरिंग जरूरी है। जहां से भी ऐसी शिकायतें आती हैं, वहां त्वरित कार्रवाई होनी चाहिए। देश की हर सरकार और देश का हर नागरिक जब मिलकर चलेंगे तो हम हर चुनौती को चुनौती दे सकते हैं। इसी आग्रह के साथ मैं अपना वक्तव्य समाप्त करता हूं। बहुत बहुत धन्यवाद।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे।
बोलो जुबान केसरी।
To understand the Tamil Nadu twist, here we come.
He has been tracking markets for over a decade, spots the trends. Before it watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11.
Will the rising sun win with a hand in hand? Will the two leaves and lotus of our politics and people? Vanakkam Tamil Nadu, here we come.
For joining in, you're watching India Market Close. That's Hiral Dadia. My name is Alex Matthew, and that is the market.
We're just seeing a mild recovery. I mean,
yeah,
at least 150 points.
For the Nifty 50, down about 2.1%, and really this is par for the course. If you look across Asia, the cuts are actually significantly deeper. We're off the low point of the day. That's exactly what Hiral was pointing out. At one point we were trading very close to 22,000 for the Bank Nifty as well as the Nifty IT, and you will see that the Nifty IT is actually significantly off the low point of the day and trading now in the green. Pull up the and it's led by HCL Tech, which is again at the high point of the day now, gains of 2%. Tech Mahindra, Power Grid, there's some interesting talking points, and it is in fact the stock of the day. We'll come to that in 0.33%. What isn't working is the financials broadly, and also your metals and your gold are sensitive. So Titan is losing ground. Indigo.
And I think to this, let's just pull up the Nifty contributors, because that will give you a picture with the kind of recovery that's come in few of the names. Like Bajaj Finance also was the one which was under pressure.
Yeah.
There you go. I mean, it's today,
Yeah.
HSBC, which has gone ahead and cut the target price on the counter. But along with it, ICICI Bank also down, L&T, I mean, no respite in spite of the management coming out and said anything. Bharti Airtel again. Of what's happening into the rupee, because we're very close to the levels of 94, Alex.
Yeah, and the other thing, of course, is the fact that the broader markets are still seeing significant cuts. That was the rupee. Advanced decline ratio pretty much at the widest point of the day. It's not really moved dramatically. So the pressure, and this is, I think, worse than what you saw last week as well. If anything, this is a
is absolutely, Alex, in favor of the bears, and I don't even know if you want to really look at the components, because I don't think so anything's happening on that front. The pressure does continue in terms of markets.
It does. So what are the factors here at this point?
Has been made by Nifty 50, and this is post Prime Minister Narendra Modi's speech in the Lok Sabha, where he's talking about the impact of the war. Apart from that, you know, what needs to be done from here on, and what do we have in terms of, say, fertilizers, urea, et al. Moving on, if you see in terms of support levels, you're looking at levels of 22,500 to 22,550 on the downside. Any uptick from here on is going to 500. Moving on, if you see in terms of the broader markets, as Alex was pointing out, the brutal sell-off has continued. So that is one of the issues that we're seeing. That's why the breadth is absolutely in favor of the bears. US Treasury yields are moving, and in consonance to that, what's happening to the domestic yields as well. And VIX, we've spoken about 17% kind of a jump here above the 26 level, which is also indicating there is gold and silver have continued to fall, and that's the point that we've been making, because of which you see the kind of cuts that are coming in terms of gold and silver ETF, all majorly in double digit in terms of fall. Very lastly, what Trump is going to do is the key question, because we're not seeing any signs of de-escalation from Iran or from Israel. The concerns are just piling up. In fact, you know, as Alex pointed out this morning, is question. Gap down opening is what we've seen in terms of European markets as well. But in spite of that, we've seen some bit of resilience and that recovery coming in the Indian markets. And IT showing resistance and making attempts around 1.5%. We're somewhere close to that $99 in WTI. Brent at around 114.
The gap between these two is actually quite considerable.
Quite considerable, and that's what is providing some bit of respite to a stock. DR Choksi, and we'll have Sudeep Bandyopadhyay also joining in. Heyman, welcome to the show. Always a pleasure to speak to you. My question coming to you, Heyman, is welcome Sudeep as well. My question coming to you, Heyman, is the cap names, and mainly it's IT which is contributing to this. How are you looking at the markets? Are you seeing this as a short, mild bounce, and pressure is going to continue? What levels will you be watching out for?
Things haven't changed much. I think, like you guys were discussing from last week, maybe things are worse off. The rupee's gone berserk. I mean, sorry, the dollar's gone berserk. The VIX is at 26. To be in favor of equities for that matter. And yes, absolutely. I think IT is going to be the saving grace. I believe IT could give, I stick my neck out. I think I expect a 5 to 6% bounce in IT in the next 3 to 4 weeks. And Hindustan Unilever suddenly moved 60 points, is cooling off now. So that's where we saw some broken. So it doesn't look very pretty,
Doesn't look very pretty, and therefore, Sudeep, let me come to you. The question that a lot of people will be asking today is, what is the appropriate strategy? Past, to look at history and to try and find a blueprint to identify what could potentially happen, but that's not necessarily something that will give you solace. And it's you suggest the retail investor behave at this moment?
Well, first of all, I'll get into a panic selling mode. That's point number one. Point number two, there is no denying of the fact that there is tremendous volatility and further volatility is expected. With that 48-hour deadline looming large in front of the entire world, I think there is enough and more uncertainty, and that is pretty much being reflected in the markets today, world over. And I think we are no exception. So we need to be careful as to what we are doing. Point number three, I would say, is that there are good opportunities of picking up stocks from a long-term portfolio perspective, because some of the large cap stocks have corrected significantly. And, we do believe that this conflict will get over in some time, whether it's 15 days, whether it's 10 days, whether it's 7 days, one doesn't know, but it's going to get over. And once it does get over, or there is first signs of it getting over, markets will start recovering. And you will find these stocks becoming expensive once again. So if you have firepower, if you have liquidity, it is good to start picking up good quality stocks in small quantities maybe. And for that, you don't need to wait for the bottom, because nobody knows where the bottom is.
Point. By the way, to the point on valuations, my colleague Soumit Sarkar pulled this up, and it's an interesting talking point, right? So take a look at that table. It tells you what the 12-month forward price to earnings is for the three benchmark indices, Nifty 50. We're now at 17.6 times, and that is significantly below the peak and quite a drop from the 5-year average as well. That is not the case for the small cap index. We've come off quite dramatically from the peak of 24.5 at 21.3 currently. But the 5-year average is actually 20, so we're above that even at this stage. And remember, the small cap index is down over 18% from the 52-week high at this point. The mid cap index at 24.9 times. So therefore, Sudeep, to your point where you've seen valuations come off, quite a few of these frontline counters have seen their valuations come off. So if you were to enumerate in order of priority, what is looking most attractive at this point from your lens? Can you name a few?
I can, and it is definitely in the large cap universe. That is exactly what I was mentioning earlier also, because these are Nifty 50 stocks which have corrected very, very sharply because of multiple reasons, and some of the reasons are looking genuine today. Look at a stock like Larsen and Toubro. It has got about 37% business coming from West Asia. There has been a lot of concern, and stock has corrected very, very sharply. It's around 3,330 levels now. And, every single broker had recommended a buy till some time back at 4,000, 4,500 kind of levels. So you probably will not get the stock at these kind of levels in the near future as well. So this is a great opportunity. The company has come out and given a clarification that 95% of their sites in West Asia are functioning normally. Yes, there are supply chain issues, there are raw material issues, so margin profitability may suffer, execution may get a bit delayed, but as things stand today, 95% of their sites are functioning normally. We also believe that once this disturbances, the war stops, the opportunity for L&T to bag newer contracts in similar geography will be significantly higher. So picking up Larsen & Toubro at current level slowly, soft, not at one shot, but slowly over the next few days, maybe the right strategy from retail point of view. The other stock I will definitely mention amongst the large cap is SBI. We have been liking it for quite some time. Third quarter results were brilliant. But in spite of that, because of the overall correction in the market, stock has corrected. And again, this is a great opportunity to pick up, start accumulating State Bank at in small quantities over the next few days till the volatility and this downward pressure on the market remains.
That's an interesting take coming in when you talk about SBI and L&T. In fact, Hemen, with L&T, the kind of correction that we've seen, 20 to 22% already, do you see an opportunity in terms of the short term or the medium term?
Hiral, I believe an opportunity could come in. You're absolutely right. It's gone down quite a lot. I believe there is some more pain on the downside. We're currently at 33.30. Hiral, somewhere closer to 31.50, 3200. I think it would be a contra buy call. Currently, it's just oversold. I mean, there aren't any signs of a reversal yet. But yeah, I'm not sure if it goes to 3150, 3200, but that's the level where I would say I stick my neck out and say, yes, one can take a contra buy call, and a bounce is a very distinct possibility. I believe the market itself, whether it's IT, everything, it's getting a bit too oversold. Maybe next week when we speak at this time, we might have probably seen a small bottom coming in here.
Okay, so next week, Monday, we have to speak to Hemen to figure out, where it is from where we are right now. But very quickly, just to address the markets, almost 180 points recoveries that we've seen in the last 1 hour of trade is what we're picking up so far. The overall market sentiment continues to still remain bearish. 22,500 is acting as a strong support, whereas 22,700 to 22,800 is the new resistance basis the market moves right now. Sell on rise is what people are talking about, because there is that cautiousness that's prevailing amongst the dealers as well. And the sell on rise remains a primary strategy until 23,000 and then 23,500 are broken convincingly. With regards to sectors, IT is working as a defensive sector. The only reason being that it has been one of the sectors which has been oversold. And secondly, post today's fall, if you talk about real estate as well, that's the most sold sector on a YTD basis. So you should be watching out for both of these pretty closely in trade. Wix, again, briefly crossed that 27 mark. We spoke about it, but this is the highest level since June 2024. So that's what we're looking at in terms of markets yet again right now. IT, real estate on the forefront. But one stock that is being resilient in this kind of a market is a power grid, and hence that will be one of the stock of the day as the company has raised its FY26 guidance. Stock nearly at the day's highest levels. You've brokerage positive notes coming in as well. Varsha joining us with all the details. Varsha, I'm sure everyone is watching out for some buying opportunities in this kind of a market. How are you looking at a power grid taking what's happened in terms of their announcements and brokerage notes?
Well, I would say a resilient stock, Hiral, as you rightly said. And, let's see the key highlights when it comes to the Power Grid investor presentation, wherein they have raised their FY26 capex guidance for the second time from 28,000 to 35,000. They have also achieved 102% of latest capex target as of March 22nd, while the capitalization have been achieved of near almost 22,700 crore. Talking about the recent project commissioning, let's see. Over 4,200 kilometers of transmission lines are being commissioned, and over 60,000 megavolt ampere capacity has been added, and multiple 765 kilowatt and 400 kilowatt of lines have been completed. Now, the planned capex for FY27 and 28 stand at around 82,000 odd crore, and capitalization of around 65,000 crore is been expected, and the long-term capex target is at around 40,000 plus crore. Talking about the order book visibility, the order in hand stand at around over 1.48 lakh crore, and the capital work in progress, if you see, is almost around 49,000 crore, and the strong execution pipeline is expected for next years. Now, talking about the power peak demand, if you see the peak electricity demand is expected to reach at 459 gigawatt by 2035 to 36, and the demand will be driven by industry and electrification. Now, talking about why transmission in demand will grow, because power demand, if you see, is expected to more than double by 2047, and the economy will move towards full electrification. Lastly, if I want to talk about the brokerage's view on power stocks, well, BofA has maintained, rather have upgraded to buy for Power Grid, for NTPC and NHCP. Let's see why BofA is bullish when it comes to the power stock. One is, of course, the summer, which provides near-term visibility, and the power utilities, according to BofA, is a defensive play in current scenario, and they're also expecting medium-term growth visibility to be on the improving side. And lastly, energy security could become policy imperative. So overall, if you see, the Power Grid have raised its capex guidance for the second time, and of course, BofA being bullish on the power stock is also one of the reasons why you're seeing the Power Grid as of in focus as of today.
Thank you so much for that, Varsha. In fact, let me take this question with Sudeep. Sudeep, how are you looking at a Power Grid? The stock is at the day's highest levels right now, with gains of almost 1.8% coming in there. One, the capex guidance that has been increased for the second time, and two, the Bank of America note in terms of Power Grid as a stock where they've gone ahead and increased the target price is also acting in its favor. Your views?
Well, I completely agree with the positive view on the power sector, and what your colleague mentioned. Power demand is going to double by 2047. There is a secular demand upswing as far as power is concerned, and the entire power sector is going to benefit because of this. Whether it's the power manufacturers, whether it's the transmission companies, whether it's Power Grid or the power financiers, ancillary companies, all of them will benefit. So we do like NTPC quite a bit, and we've been liking NTPC for a long time. Even now at current level, NTPC merits a buy from a long-term portfolio perspective. Power Grid also is good, but between Power Grid and NTPC, I think I will go for NTPC. I will also prefer the power financiers, because the kind of capacity which is coming up needs to be financed, and commercial banks cannot finance that. So the specialized power financiers like PFC, REC, IREDA, they will be having roaring business over the next 5-10 years, and their profitability, performance, everything will improve drastically from here on. And one can look at PFC, REC, of course, is in the course of merger, so it will be one company, and of course IREDA can also be looked at.
Okay, all right. So Power Grid doing okay, but what is not doing okay among this host of stocks that is losing ground is the entire metal pack. And pull up the constituents of the metal index, which is one of the worst performers sectorally, down close to 5%. Everything from a Hind Copper losing about 7.5% to a SAIL losing about 7% or thereabouts, JSPL, NMDC. Look across the list, they're all losing ground. And so the question that we're asking is, why is this taking place? Obviously, this has to do with the underlying commodity and the fact that metal prices, not just base metals and ferrous, as well as the other factor, which is precious metals, gold and silver, have also lost ground. Parthiv Jonsa, Vice President, Anand Rathi Institutional Equities, joining us right now. Parthiv, thanks so much for taking the time. Help us understand this. What's at play? Are there multiple factors that are determining the course for base metals and ferrous, and separately precious metals?
Hi, good afternoon. Thanks for having me. Crazy market today. So yeah. Just to start off with, let's dissect it, and let's start one by one, because it's a huge basket, right? Now, when you talk about base metal, why Hind Copper is down today is definitely because the copper is off almost about 11-12% from the recent high of about, say, $13,600 to about $12,050-$60 today. So your LME is down, right? It's not just Hind Copper, but globally also, Anto or all the other, copper majors are also down in the range of about 2.5 to 5% today. So it's definitely to do with, copper coming off. However, when copper comes down, right, because the copper was at a certain elevated level, you had a massive inventory, which was there, especially in China. Now, copper coming down basically helps to liquidate that that inventory or that stockpile to a great extent. So if you see post this Chinese New Year, the copper inventory itself in China is down close to about 8-9%, whereas this is actually helpful for taking care of the demand at the end of the day. Now, as far as aluminium has a very different narrative. Aluminium is one of the most impacted stock as far as the entire Middle Eastern crisis are concerned. Globally, almost about 7-8% of the aluminium is off the table, and till the time things do not stabilize there, that capacity is not going to come back on stream. So that is the reason why aluminium has substantially increased to about 3,400 level. And when you talk about your local market premiums or your logistic, when you add to it, it basically surpasses about $4,000 level across different geographies. And if you see to an extent your Hindalcos and Vedantas, to an extent they are relatively less impacted compared to the other broader market. Now, when you talk about steel, steel has a lot of narrations to it. As far as your impact from the Middle Eastern side is concerned, mostly it's downstream, and that to the secondary side of the business, right? It's either downstream or the secondary steel which is getting impacted more. If you see the prices of the long steel, your retail and your vendor prices of the long steel or a flat steel in the primary market, they have been kept intact. Today, we are at about 56,000 for HRC, almost about 60,000 rupees for long steel. So the prices are not down there. It's just that the overall sentiment today did not support the metal pack. Over and above what a couple of days back when China came out and said that, okay, we are cutting down the GDP guidance and we are at the lowest GDP growth rate since 1991. We are at about 4.5% GDP growth rate. And
Correct.
when China does it, you cannot ignore that over and above Middle East, because China is about 60% of the global usage of any metal, basically.
So Parthiv, long story short now, I mean, we've understood the nuances of what's happening and why there is no support right now coming in for the metal pack in today's session as well. The question is, the correction that's coming in terms of metals as a sector, from gold to silver related companies to aluminium, copper, does this actually become an opportunity for an investor to buy? Because everyone is now looking out for either a buy on dips or a sell on rise kind of a strategy. What is your view? And if yes, which would those stocks be?
Sure. So let us start with one stock which your colleague just pointed out in the previous session, right, about power sector, right? So I think Coal India is one of those stocks right now which is doing exceptionally well, even in this market, right? Why? Because you have peak power requirement coming in April, May. You have heat waves coming in. You're globally as well, if you see, right, whether it be Europe or whether any other geography which are always, so gung-ho about renewables, they have now completely moved because of the entire, noise around gas and all. They have completely started moving to a coal-based, power generation. So Coal India is one of those stocks which not only from India but global perspective also, it's a good coal as a mineral is a good level basically. So Coal India is one stock. Then coming to a couple of other stocks where you think, the story is more important than the overall noise. A couple of stocks are, there is a company called as Indian Metal Ferroalloy, or even for that matter, Hindustan Copper. As and how the requirement of your data centers or anything to do with non-conventional way of power, transmission or, data centers there, or even electric vehicles there, you require copper at the end of the day. So Hindustan Copper is also at a very good level, and we already have a buy at about, I think, about 650 rupees as a target price. So it's a good upside what you can see even in Hindustan Copper.
Thanks so much for joining us this afternoon, Parthiv. Pleasure as always. And thanks for explaining that to our viewers.
Thank you.
All right. Now, in extension to what is happening in the commodity space, gold financiers are under significant amount of pressure today, whether it's Muthoot or Manappuram. I think even CSB Bank and Federal will be under pressure. Pull up those as well. Let's go across to Sharad to find out what exactly is happening here. Sharad, over to you.
Thanks a lot for that, Alex. And you're right, the gold prices, they are on the downfall. And because of that, a lot of companies who are having gold as a loan to value ratio, that is getting impacted. Just to put that in perspective in a simplified manner, the gold prices are seeing a good sell-off. And globally, the inflation risk concerns are also there. And the global yields have also started going up. Now, there's an inverse correlation on that. And the loan to value which these financial institutions have, that starts getting impacted. There is a decline expected in their gold collateral tonnage in this fourth quarter, and core NIMs, which are already in pressure for both the companies, might be again under pressure in the fourth quarter. Generally, these companies have 55 to 65% of their total assets in the gold segment. Now the fall from 2026 highs, that's where the concern comes. M6 price is down 16%, while Muthoot Finance and Manappuram Finance, both the stocks have dipped more than 20% from the 2026 high levels. Now the valuations does become attractive from their corrections. The 12-month forward price to book ratio for Muthoot Finance is almost 3 times, and for Manappuram Finance it's at 1.4 times. So analysts are still bullish on the stock. Muthoot Finance, they have an upside for 34% in the next 12 months. For Manappuram Finance, it's on the lower side, but it's up almost 27%. And Alex, you rightly pointed out, CSB Bank and Federal Bank also have a good exposure to gold loans.
Well put. Thanks so much, Sharad, for that. In fact, it's something that we've been wondering about, the fact that gold and silver prices have dropped so dramatically. The fact is that government yields, bond yields in the US and in certain other markets, but particularly in the US, Treasury yields have gone up very dramatically. And so when you have that, it becomes a counter to gold prices as well. So reallocation can have taken place into those assets. But let me go across to Sudeep on the gold financiers. Sudeep, in a lot of cases already, gold financiers were at least the big ones, right? Muthoot, for example, I know for a fact, was being a little cautious on its loan to value. So it wasn't utilizing the full available percentage, and it was therefore well within that 50% limit. So is it as big a negative as the sentiment is suggesting, or would you say that it's appropriate?
Well, it is definitely a negative. You know, the sharp correction in gold prices, I think it has come down by about 11% in the last 2 weeks. Today also there has been a sharp fall. It's the downward circuit in MCX. So this is definitely alarming, because somewhere if this pace of downfall continues, LTVs will start getting hit and margin calls will have to go out. So which is a bit alarming from an NBFC lender perspective. So yeah, I can understand the concern of the market, and one has to be pragmatic here. But having said that, I think there is definitely an opportunity also in this correction. So I do like both Muthoot and Manappuram. Manappuram, there were some challenges in the transaction, but with the transaction with Bain also is now through. And with that, I think Manappuram also has a good chance of moving up from current levels in the near future when things settle down. Of course, the gold price correction is on account of multiple factors, including the way you were mentioning US bond prices hardening, as well as I think the more mundane margin calls in the equity market leading to a lot of liquidation on gold and silver. I think combination of all this is leading to this gold price fall, which in turn is leading to this kind of concern as far as gold financials are concerned.
Okay, so that's with regards to gold financiers. Let me take a quick one with Hemain. Hemain, when it comes to gold financiers, or even for that matter, the NBFCs, which are seeing some bit of pressure in today's session, anywhere where you're seeing any opportunity? Because from a Bajaj Twins to a Shriram Finance, even for that matter, the gold financiers, all of them under pressure.
Besides being oversold, nothing much seems to be very copacetic to go long. There have been bearish gaps in Hiral. They need to get covered up, and that doesn't look like happening in a jiffy. So I would wait just a wee bit more, because technically there is some more downside left. I believe this would currently be the last phase of the downside, like I said, maybe this week or so. But no, I'd wait just a wee bit more. There is some weakness yet.
Okay. Let's pull up the rupee in the meanwhile, because this is a significant talking point, right? The rupee at very close to 94, and that slide continues. 4.5% depreciation in 2026 alone, and we're talking about a 5+% drop in 2025. So you put that together, and it is obviously the worst performing currency in quite a while for the Asian market as a whole, and possibly in quite a large part of the world. Dheeraj Nim, economist and forex strategist at ANZ Research, joining in to talk about some of these aspects. Dheeraj, thanks so much, first of all, for taking the time. Widely understood the sensitivity that India has to crude oil prices, and at well over $100 to the barrel, this explains why there is pressure on the currency. But is a level of 94 warranted? And do we slip further? What's your take?
Thank you for inviting me on the show. Look, I think the worries for the rupee are not yet over. while we're talking about the Brent crude around $110 a barrel, but you remember the India's basket of crude oil that we import is, hovering above $150 a barrel. So that's the divergent trend between the two crude baskets we're talking about. At the same time, we have to be mindful that India's BOP problem was fundamentally a capital flow problem when we were speaking about the rupee's weakness last year. And now we are adding to it the current account deficit weakness. So it becomes a bigger BOP problem than we were contending with last year. So I do not think that where oil prices currently are, the rupee's weakness would halt at 94. It could even go beyond that. And of course, all of this depends on how much the RBI tries to arrest that decline or smoothen it out. But all of that notwithstanding, I don't think rupee's troubles are more or less over.
Okay, so therefore, and at this moment, Dheeraj, you have a sense, obviously, better than we do, about what the central bank is doing at this point, right? So give us a sense of the methods of intervention currently, and the stated objective, of course, is to reduce volatility, and that is pretty heavy at this moment, isn't it?
Right. So at some point, we all sort of watched this and understood that the RBI was defending particular levels of the currency. Till the time, it wasn't very clear how long this particular conflict would drag on. But now that we've entered many weeks of this conflict not easing substantially, I think there's a fundamental shift in the view the Reserve Bank of India has vis-a-vis the macro and the rupee, and which is why it has recently let go of the exchange rate to some extent to let it depreciate or adjust in line with the market pressure. And it is not just speculation that we're contending with here. I mean, the underlying demand for the dollars in the system is actually quite large. Consider the energy imports only, for example. So I think there is a shift in the fundamental view with respect to the current account and the BOP, which has allowed the RBI to take a slightly hands-off approach in the last few sessions as far as the rupee is concerned. But I do want to highlight that, it is by no means saying that the Reserve Bank of India does not have any further capability to defend the currency. I think they would stick more or less to smoothening out the slide. But, given the fact that the recent sell-off in gold prices would have hurt the FX reserves valuation and $100 billion net short forward book is already under strain, I think that there would be some reduction in the willingness of the central bank to aggressively defend any particular level. So they would want to smooth out volatility, defend against speculation, but more or less let the rupee adjust to where the market fundamentals would warrant.
Okay, so that's with regards to the rupee. Thank you, Dheeraj, so much for joining in. It's always a pleasure to speak to you. But staying with the financials, now on the back of the Government of India launching the Credit Guarantee Scheme for Microfinance Institutions, which is 2.0. This was done on the 20th of March. Now, this will actually address the liquidity stress and revive the credit flow in the microfinance sector as well. And it's almost a 20,000 crore guarantee corpus to encourage banks and financial institutions to lend to microfinance institutions for ongoing lending. Let's understand the impact. Citi is positive on this as well. You can see the lines on the screen. Apart from that, Morgan Stanley is also of the opinion that this will be kind of a booster to the sector. Let me take Sudeep's view on this because he tracks the sector pretty closely. Sudeep, a quick view when it comes to the microfinance scheme 2.0, because you're talking about 20,000 odd crores. It actually, probably expands the scope as well.
I completely agree with you. During the COVID time, the scheme was worth only 7,500 crore. This is 20,000 crore. So definitely this will be able to provide some relief to the beleaguered microfinance institutions, particularly the smaller and medium microfinance NBFCs. Look, I think, the government is also extremely worried because a large number of people have moved out of the formal credit system because of the challenges faced by these NBFC MFIs. Now this credit guarantee scheme will enable them to access bank finances and effectively lend to this segment, lower segment of the customer population. Having said that, I would say that this benefits the smaller and medium ones. The larger ones don't benefit. That's why probably you're seeing that the larger ones haven't really shown much excitement as far as the market price is concerned today. But the smaller ones definitely benefit. And I think it's long-term positive for the sector.
Right, long-term positive. Sudeep, on that note, thanks so much for taking the time. Pleasure speaking with you as always. Right, now as we slip into a very quick break, of course, at this moment, the markets, once again, the Nifty 50 trading with cuts of about 2.5% or so, holding about the 22,500 mark. Take a look at this. An exclusive interview was done by NDTV with renowned economist and geopolitical commentator Jeffrey Sachs. He's a professor at Columbia University. And he delivered a blistering critique of the ongoing Middle East conflict and military strikes on Iran. Listen in as we slip into a break.
Unless there is effective intervention by the outside powers, I have been urging that the BRICS countries be very clear. The BRICS represents half of humanity. It represents half of the world economy. It's very powerful. It needs to speak with a clear voice right now, not punitively against Iran, which is under attack, but directly to the two aggressors, which are Israel and the United States. Let's be honest, which is very hard in public discussion these days, but let's be honest. This is a war of choice for domination over the Middle East by Israel and the United States. Nobody could want this. Nobody can believe that this is prudent, safe, legal, responsible. No one can believe that this is going to turn out well. It needs to be stopped. Unfortunately, the two protagonists of this war of aggression, Netanyahu and Trump, are not themselves stable individuals. They need help to back off and go home. And that help has to come from stable world leaders that have a lot of humanity in their responsibility to say you cannot gamble with the world this.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
जिस क्षेत्र में युद्ध हो रहा है वो दुनिया के दूसरे देशों के साथ हमारे व्यापार का भी एक महत्वपूर्ण रास्ता है. विशेष रूप से कच्चे तेल और गैस की हमारी जरूरतों का एक बड़ा हिस्सा यही क्षेत्र पूरा करता है. माननीय अध्यक्ष जी, भारत में बड़ी मात्रा में कच्चा तेल, गैस और फर्टिलाइजर जैसी अनेक जरूरी चीजें हॉर्मुज स्ट्रेट के रास्ते से आती हैं. युद्ध के बाद से ही हॉर्मुज स्ट्रेट में जहाजों का आना जाना बहुत चुनौतीपूर्ण हो गया है। बावजूद इसके हमारी सरकार का ये प्रयास रहा है कि पेट्रोल, डीजल और गैस की सप्लाई बहुत ज्यादा प्रभावित न हो, देश के सामान्य परिवारों को परेशानी भी कम से कम हो, इस पर हमारा फोकस रहा है।
Right, the Prime Minister speaking in Lok Sabha not too long back, talking about the measures taken by the government to ensure the least disruption to Indians amidst this ongoing crisis in the West Asia region. We're trading very close to the 22,500 mark, and it is at the time of the show where we introduce to you somebody that you know and love, Neeraj Shah joining in as well. Neeraj, big smile on your face despite the kind of carnage that we're seeing on the screen. What is the sense that you're getting in the conversations that you've had since you left us this morning?
Well, I think, when Alex and Neeraj, I think good afternoon, of course, and most of the people are actually quoting the same thing, that if they were lucky enough to have some cash, there are some very good quality stocks available at the valuations that they've always wanted. But are they able to pinpoint that this is the bottom? I guess not. I don't think anybody can right now. And which is why this 2.5% gas trading close to the low point of the day doesn't come as a surprise, thankfully, to our viewers, because we've been talking about this. It's almost impossible to call out a bottom in a scenario like this. So therefore, bide your time. And I think the price crashes that are coming in today are symptomatic of that. Is this the end? No. Can it get worse? Very likely. Maybe better to buy once the tide turns as opposed to doing it right now. And I think that seems to be the view that has gotten the best outcome thus far. But the questions that I have for our guests, by the way, Alex and Hira, and I'd like to go to Nagaraj Shetty as well as Siddharth Khemka to try and understand what is the kind of situation that is happening in terms of client conversations. So Siddharth, for example, has a great eye on what's happening at the whole Motilal Oswal Insti desk as well as the retail desk, and what is it that they are advising their clients, right? So gentlemen, both of you, thank you so much for joining in. And Siddharth, I wonder if people are taking advantage of the levels right now, or it is now becoming too scary, put in fresh money to work, and are people holding back on their cash levels?
Yeah, hi, good afternoon, Neeraj. I think, as you rightly said, it is very difficult to call out the bottom. But nonetheless, what we are seeing is increased client conversations going on. There is a lot of reshuffling, or their clients are getting into discussions in the portfolios, what should be kept and what should be moved or changed or switched. So a lot of discussions are going on. I think panic is not there right now. Again, a lot of investors are willing to put in more cash. And that is where we, given the current situation, unlike the previous incidences where we used to suggest a larger investment size, say maybe a 20-30%, this time around we are suggesting to go for a much smaller, say maybe a 5 to 10% allocation, maybe, but on a frequent basis, maybe last week and now this week. And again, maybe wait for some more resolution for next week or towards the end of this week. So that's the advice that is going to our customers, to put in incrementally if you have cash, about 5 to 10% of whatever cash you want to invest. And if you are already fully invested, there is some restructuring that we are advising, moving in from sectors which can remain affected for some more time, at least 2 to 3 quarters, while sectors which are largely not that impactful from the current energy crisis. I think that's a bigger challenge for companies in India. So that is where reallocation can be done. For example, we have the banking sector, which has seen sharp fall because of the FI selling. The financials, insurance companies, we believe these are some of the pockets where you can look at adding in this current fall. Another interesting space is autos. Just before the war started, that was one sector which was doing very well, and now that has seen some correction. So again, we would suggest investors look at stocks like M&M, TVS Motors from the auto space, which has a long-term structural story and largely a domestic story.
Nagraj, here's the question, right? That even at 23,500, it was risky to go short, and we are 1,000 points off from there. As somebody who's willing to take that little bit of a risk with a stop loss, looking at the trend today, would you go short on the index or on specific stocks or pockets which are looking weak?
Hi, good afternoon, Neeraj. Yes, market structure is no doubt it is strongly down. And no way we have to go at this point of time for a long positions, hoping that market could bounce back. Yeah, market could bounce back. The lower tops and bottoms is indicating the strength of a downtrend rather than going for a long during the pullback. Better strategy would be going a short on a rise. We have declined around 1,500 points from 23,800 to around 22,500 levels. I think there is a possibility of some minor bounce from the lower levels, but that is going to be a sell on rise opportunity. At the lower levels, 22,000 is going to be the support. Neeraj, during such a period where the market is just echoing the global sentiments, and the level supports are the just levels rather than any reversal points at this point of time. I think I'm saying levels means support means that they are the just levels, and after the small bounces, market is likely to come down.
Okay, so that's with regards to levels one should be watching out for. But a big tailwind that's coming in for the aviation sector is the government removing airfare caps that were put in place in December 2025. Now, here, it opens the doors for further fare hikes, but with this, you have jet fuel prices also, which are a concerning area. Let me head across to my colleague Somit, who's with us to tell us more, because Indigo and SpiceJet all taking under pressure. Somit, over to you.
Yes, definitely the removal of fare cap is sentimentally positive, but it's very difficult to say how much of financial impact will come in, because even the fare caps that were imposed by the government back in December 2025 were much higher compared to what the usual rates were. And obviously this removal could lead to more such fuel surcharges that can be imposed by the aviation companies going forward, given the fact that ATF prices have surged dramatically over the last 1 month. But why aviation stocks are under pressure? Because there is a kind of a triple whammy that they are seeing currently. Firstly, demand continues to be weak. On the domestic side, so far in the month of March, the air traffic is down around 0.5%. The international air traffic is down nearly 20%. So that is one thing. The second one is the fuel cost. Now in the global market, jet fuel prices or the ATF prices have nearly doubled. Now, yes, aviation companies have imposed a fuel surcharge, but that will just take care of the 20% increase of the actual fuel cost that is expected to happen, and this will happen from the 1st of April. So that is one thing that we need to watch out for. That is the second impact that could come in. And the third is the fact that rupee is continuously depreciating, and every 1% rupee depreciation impacts Indigo's EPS by around 13%. Now, of this 13%, 5% is the actual cash impact that will happen for Indigo, and 8% is the non-cash impact, which will largely be because of the fact that the company has to book for the mark-to-market losses that it incurs on the aircraft leases that it has on its balance sheet. So that is broadly the reason why all the aviation stocks continue to fall in trade.
Point that you make, Somit. So more negatives than positives at this moment. Siddharth, view on Interglobe Aviation, it's had a torrid time of it ever since it flew into that turbulence with the whole issue in December, right? And since then, it's been one thing after the other. But the counter to that is that I haven't seen the latest data, but it should still control a large chunk of the domestic air market. So market leader, the prices are off quite dramatically. How do you look at it fundamentally and valuations wise?
Yeah, Alex, I think if you look at the aviation sector, some of the major risks that are there generally for an aviation sector, that all those risks have played out by either a war or a terrorism attack that leads to the disruption in the flights. You have the higher fuel cost, rupee at all-time low. I think most of these, a large bulk of the cost in terms of the lease, plus the fuel cost, plus the global charges, I think those are all in dollar terms, and rupee at all-time low also hurts the impact. So I think the bulk of the growth story for Indigo going forward was the sharp expansion in the global markets, and that is where right now the pain is there. I think the long-term structure could be there, but in the near term, in the interim, I think this Q4 as well as Q1 could see sharp impact of all these disruptions, the flights that have not gone in, the higher costs. I think in the near term, I would rather stay a bit cautious and wait for a better entry opportunity into stocks, especially in the aviation stocks.
Unmuting myself, the argument that comes in usually for Indigo is that it is now trading at 15 times. So it's the cheapest that it has been. But if this conflict were to last for longer, we don't know if indeed the FY27 earnings delivery, on the basis of which an institution called it at 15 times at 4,200 or 4,300, even holds true, as Somit was pointing out today, that 1% depreciation causes about a 5% gash in the earnings estimates of Indigo, not to mention what happens because of higher fuel costs. Is there a trade here, Nagaraj, on Integro? Siddharth pointed out it very well on the fundamental side. Is there a trade here on the short side? 3946, how low can it go?
Yeah, currently looking weak. Chartically, it was forming a lower tops and bottoms. It has moved below the support of previous two swings around 4150 levels. Currently trading around 3950 levels. I'm expecting more weakness to come from for the stock price in the near term, and the nearest support to be watched around 3,750 to 780 in the near term.
With regards to our aviation majors go now, with the sea of red that we are seeing across sectors, there's one stock which is bucking the trend, which is a DCX Systems, I beg your pardon, on the back of an order win. From the day's highs also it has corrected shortly, but 6.5% up move coming in there. Let me get in Parth for the details. Parth, what's fueling the investor interest on our DCX?
Thanks, Hiral. So yes, you rightly mentioned that DCX has gained in trade today, and this is surprising given the weaker market conditions we are in right now. The shares are up more than 6% today, but if we kind of look at the longer time frame, we can see that the stock is still flat here, in the past month, and in the last 6 months the stock has fallen more than 30%. If we come back to the reason why the stock has gained in trade today is because in the last month the company has won some really big orders which are as follows. The first one is a domestic order which they won for radar systems, and this order is valued upwards of 563 crores. The second order is for cable and wire harness assemblies, and this is both for domestic as well as international customer, and this is valued above 12 crores. The third one is an order from HAL for antenna and power supplies, and this is valued upwards of 68 crores. In the recent quarter as well, management said that the company had won a combined orders worth about 92 crores from their domestic as well as foreign clients. Also, their joint venture with the ELTA Systems, which is an Israel-based company, has received an order from the government of Tamil Nadu. So their order book as of 31st December 2025 stands at 2,582 crores. So a lot of order inflow has been coming in towards the company, and let's see how they are able to execute it and move forward.
DCX Systems, arguably the stock of the day, only for the fact that it's gaining about 7.4%, and practically the rest of the market is not. You've seen the advanced decline ratio, but important update on fertilizer manufacturers as well. They're staring at a slowdown as LNG shortages begin to bite. Ridhima joining in to tell you about what the implications are. And of course, you're trying to look forward to the first quarter, Ridhima, to try and understand what the implications are for the financials. What are analysts telling you?
So the urea manufacturing companies could see an impact on their EBITDA by 15% in Q1 FY27 as per the analysts, and this is mainly due to the volumes being impacted by due to the LNG shortage which is happening due to the Middle East conflict. This will also have an effect on their top line in Q1 FY27, and not just this, as per the news reports, now urea plants are already operating at just 50% of the capacity, down from about 100%. Now, so India requires urea mainly for its agricultural purposes. This is 99% of the requirement, which makes it integral for food security. Now the demand comes up to be around 37 to 39 million tons, and 7 to 8 million tons is imported from Russia and the other regions, and rest 30 million tons is made in India. So for this 30 million tons is which we require LNG. And this forms around 80% of the total raw materials which is required for the manufacturing of urea. So now 20% of the LNG is being made in India, and 50%, a major 50% comes from Middle East regions, and rest comes from US and the other parts. Now government is already taking steps to increase the supply of LNG, and this is something to wait and watch, that how the government increases the supply for LNG and how long the conflict actually lasts.
Okay, so that's the...
Hey, sorry, I'll just take that, but thanks so much for pointing that out, Ridhima. And Siddharth, is fertilizers, because they are hit so badly and everybody knows about that fundamentally, and avoid a blanket avoid until this gets over, because the price cuts have been very, very, very steep. Would you still avoid them?
So, Neeraj, I would suggest that this is a sector which is largely state dependent, and given the constraints that the central government would also have in their cash flows, even the subsidy delays could happen. We are hearing some of the PLI schemes as well as some other incentive plans delays. So I think overall, with the supply of the core raw material as well as the fuel that is not coming in, that's a big negative. We have a big summer season ahead before the monsoon can come in. So at least for 2 quarters, it's better to stay away. We could get even better entry opportunities. These are cyclical sectors, not a structural story in that sense. Some of them do definitely figure in terms of structural story, but again, as I said, there are better entry opportunities available. There could be better entry opportunities for some of these stocks.
Nagraj, one quick one on stocks which are actually doing well today. I wonder if you believe there is a trade there. Even it could be an exit recommendation too. But some chemical names like Nosil, for example, are doing well. We spoke about DCX, which is doing okay. I think Bodal was doing okay. HCL Tech, by the way, is actually doing reasonably okay, 1.7% higher. Do you any view on any of these?
I think out of 3, HCL Tech reasonably looks good because it has had a very good decline from the higher levels, 1750 to almost 1300 levels, and looks attractive. The overall chart pattern is showing some kind of a consolidation movement at the lower level, short-term, near-term, bottom reversal. Once it moves above 1360, 65 levels, I'm expecting more upside in the near term. So me looks like the HCL Tech is likely to outperform further during this turbulence market period, and the next overhead resistance to be watched around 1420.
So that's with regards to IT. Let's just quickly pull up a Coforge as well, because you have 2 brokerage notes, which are positive. You have a Motilal Oswal, they have a target price of 1880 on the counter. And they're saying that despite the near-term risks, the valuations are looking really attractive on this counter. And simultaneously, if you have a UBS as well, they also have a positive view. They've initiated with a neutral rating for a target price of 1,240. A quick view, Siddharth, in terms of where Coforge goes?
So yeah, Hiral, I think what we are trying to say is that while there are near-term risks, the valuations look quite attractive after the recent correction, and so we believe that it is the current price is pricing in an extreme bear case scenario. The stock trades at 20 times on FY28 P basis, and that's assuming a bear case of 10% organic constant currency growth rate. So which we believe the company is in a position to report much higher growth, and hence we believe that even after lowering our valuation multiple from earlier 32 times to now 26 times, that gives us a much bigger upside from current levels. The company has the strength in terms of strong executable order book, resilient client spending across verticals. There is a cross-selling opportunity with Cigniti, where they remain highly synergistic for the company, and hence we believe that the Coforge, that among, you can say, a contra play in this market, looks pretty interesting, given the good and is giving a good entry opportunity for long-term investors.
On that note, let me thank both of you, Siddharth, Nagaraj, for joining us this afternoon. A pleasure as always. Thanks so much for taking the time. All right, let's talk about the markets and pull them up as we speak. We're heading towards, if I'm not mistaken, the low point of the day. Yeah, so there you go. Just about 40 points odd from the low point of the day. 2.7% cuts, and the cuts in the broader markets are even more problematic. So pull up the mid-cap index, is down about 4%. Pull up the small-cap index as well. This is 4% lower. Pull up the small-cap index, it is down close to 4% as well. So the breadth is absolutely horrendous, and this is par for the course because it reflects what is taking place in the Asian markets.
That is there, and you know what I want to point out over here, viewers, is we've broken the crucial support of 22,500 in terms of Nifty 50 on closing basis, and that's something we need to watch out for, to take cues in terms of what could come in terms of tomorrow morning as well, because if any further escalation, you know where you're headed. So clearly that's the concerning area. Let's just quickly pull up the contributors in Nifty 50, and that will tell you where the cuts have deepened further. Initially, HDFC Bank was the one with 100 points. It's actually escalated further to 130 points. ICICI Bank, SBI and Bharti Airtel, it's your banks which are bearing the brunt. And let's be honest, you know, banks are the ones who are going to take pressure when it comes to the financing, and we've done a piece in the past on the same as well on the back of the war. But you know, the ones which were gaining also have given up gains. It's only Power Grid which is doing that marginal contribution along with the HCL Tech and Tech Mahindra, but no respite.
No respite.
The pressure has continued.
The one pocket that is doing okay is the Nifty IT. I wonder whether it has
also come off, yeah.
Come off the high point of the day. Pull up the intraday chart for the Nifty IT. Okay, there you go. So it briefly spent a little time in the green, but then it slipped once again into the red. And I wonder whether this is a play, of course, on the fact that this index and the stocks therein have gotten battered so badly, even in the run-up to the conflict. But beyond that, there's also the factor of the currency, right? If there is a tailwind that will play out in the quarter earnings for this quarter, heading into the next month, it's going to be for this sector.
This sector, let's just pull up the sectoral indices hotboards as well and see what's happening on that front. Heat map will tell you. There you go. See, IT, I mean, 0.3% lower, but major cuts coming in terms of consumer durables, real estate, metals, defense. Nothing is spared. IT is the least losing sector. Healthcare, again, everything is down in that range of 2.5 to 5.5% in today's session. Very quickly, if we can just have the heat map of Nifty 50 as well, and then in terms of NSE 500, there also you will see, there you go. I mean, ONGC, which was mildly in the positive, has given up those gains as well. Infosys, TCS, Reliance, Power Grid is the only one which is the stock of the day. But Titan has contributed here on the durable side. Trent, all of them trading under pressure, Alex, today.
Absolutely. So it's not a pretty picture. And of course, there's a lot more to talk about over the course of this evening. You'll find several shows that will take you through the geopolitical situation. And there's also the SEBI board meeting to watch out for. Live coverage of that at 5 p.m. So watch out for that. That brings us to the end of India Market Close. From Hiral, myself and the team that put this show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that helps you get a track of headlines today, also all of the stocks that were buzzing in trade as well. But first things first, quick look at what the markets did. And when you talk about the last street, you had a dismal day coming in. Benchmarks really trading under pressure, and Nifty also ending the day below that 22,500 level. When you talk about Sensex, you're looking at a deeper cut there because that in fact crashed more than 1,900 points. Advanced decline ratio was tilted very sharply in the favor of red. With that in mind, let's also take a look at the sectoral picture. All major sectors in fact ended in the red. It was a deep cut coming in as far as realty and metals were concerned. But PSU Bank as well as defense were also on the back foot and were trading with cuts as well. In fact, when you take a look at something like an IT also, that also was in the red, even though it managed to remain just a tad bit resilient, but all major sectors in the red. And as the Middle East conflict escalates, Prime Minister Modi, while addressing the Lok Sabha, has said that while the situation in West Asia or Middle East remains worrisome, the Indian government is taking continuous steps to ensure that India's supply of crude oil and natural gas is not affected. Let's quickly go across and listen in.
जिस क्षेत्र में युद्ध हो रहा है वो दुनिया के दूसरे देशों के साथ हमारे व्यापार का भी एक महत्वपूर्ण रास्ता है। विशेष रूप से कच्चे तेल और गैस की हमारी जरूरतों का एक बड़ा हिस्सा यही क्षेत्र पूरा करता है। माननीय अध्यक्ष जी, भारत में बड़ी मात्रा में कच्चा तेल, गैस और फर्टिलाइजर जैसी अनेक जरूरी चीजें हॉर्मुज स्ट्रेट के रास्ते से आती हैं। युद्ध के बाद से ही हॉर्मुज स्ट्रेट में जहाजों का आना जाना बहुत चुनौतीपूर्ण हो गया है। बावजूद इसके हमारी सरकार का ये प्रयास रहा है कि पेट्रोल, डीजल और गैस की सप्लाई बहुत ज्यादा प्रभावित न हो, देश के सामान्य परिवारों को परेशानी भी कम से कम हो, इस पर हमारा फोकस रहा है।
All right, then let's also move on and talk about some other important commentary also coming in from the Prime Minister. In fact, he said that India has brought back more than 3.75 lakh Indian nationals from the Gulf, and this is since the start of the US-Iran conflict. The government, he said, has been in constant touch with leaders across Middle East, ensuring the safety of Indian workers, tourists and seafarers caught in the crisis. In fact, PM Modi also informed the House that some Indians have died and some have been injured, unfortunately, and the government is providing all necessary assistance through Indian embassies across the region. He's also added that he's personally spoken to the heads of state of most Gulf nations twice, with each assuring full cooperation when it comes to the protection of Indian citizens. And as the Middle East enters the 24th day of conflict with continued strikes across the region, Iran has said the Strait of Hormuz remains open and that reports of a full closure are inaccurate. Now, US President Trump, in fact, has given a 48-hour deadline, and the clock is really ticking for Iran to fully reopen the Strait of Hormuz to seaborne energy trade. That expires Tuesday at 5:14 a.m. Indian Standard Time as well, and risks significant escalation in regional fighting. When you talk about the region, the complete shutdown of a critical global energy supply choke point is already something that you're looking at right now. Iran, however, has issued sharp political warnings to the United States, saying that Washington should refrain from what it called provocative or destabilizing rhetoric. And Iran today also threatened to attack Mideast electrical plants powering American military bases as well. The statement from Iran's paramilitary Revolutionary Guard as well marks the latest attempt, when you talk about Tehran, to try and explain its attacks on the Gulf Arab countries. Let's also talk to you about the word coming in from the International Energy Agency that has warned that more than 40 major energy assets across 9 Middle Eastern countries have been severely or very severely damaged. Now, IEA Chief Fatih Birol also said that destruction spans oil fields, refineries, key pipelines, also something that you're looking at, meaning repairs will take time and supply disruptions are likely to persist even after fighting ends. Now, in terms of other commentary also coming in from them, they're saying that the region's 3-week conflict, or now 4-week conflict, has nearly shut the Strait of Hormuz, sending crude, LNG and fuel prices sharply higher. The agency compares the impact to the two 1970s oil crises combined with the 2022 Ukraine gas shock, calling it one of the most serious supply crunches in modern history. It's also warned that trade in petrochemicals, fertilizers, sulfur and helium, key global commodities, has been heavily disrupted at this point in time. Let's also talk to you about 2 more India-flagged LPG carriers, Jag Basant and Pine Gas as well, that have successfully begun crossing the Strait of Hormuz. The vessels, both very large gas carriers, moved northward from the UAE coast early today, navigating a route close to Iran's Keshm as well and Larak Islands also, and a path that was approved earlier for ships that Tehran permits to transit. The ships broadcast Indian ownership instead of listing a destination, a precaution seen in other recent crossings as well. India, facing an acute LPG shortage, has been engaging Tehran for safe passages. Most commercial traffic remains halted due to the conflict. If their current trajectory continues smoothly, both ships are expected to reach the Gulf of Oman by Monday evening, completing a transit that usually takes somewhere around 14 hours. Moving on, then, global LNG exports have fallen to their lowest level in 6 months as the conflict in Middle East continues to disrupt shipping routes and energy flows as well. The data from ship tracking firms, in fact, right now is showing that the sharpest decline has come from Qatar. The world's second largest LNG exporter is what you're looking at right now, where outbound volumes, in fact, have been heavily impacted by reduced tanker movement through the Strait of Hormuz, one of the world's most critical maritime choke points, like we've been talking about it. The report also adds that overall LNG exports from the Middle East have slumped as vessels also face delays, rerouting and safety restrictions as well. Analysts are saying that the supply squeeze is already being felt in Asian markets, with spot prices rising and buyers searching for alternative cargoes. Moving on, then, let's talk to you about some stocks as well that remained in focus today. So MM Forgings was in focus after announcing that its board is going to be considering a fundraise via QIP at a meeting scheduled for March 25th. This would mark the company's first equity fundraise, with the last corporate action being a 1-for-1 bonus issue back in July 2024. When you talk about this particular move, it's coming at a very interesting time right now because you do have Class 8 truck demand that is showing signs of revival, making the fundraise a key monitorable for capacity expansion as well as growth plans at this point. Let's also talk to you about Sona BLW that has approved a capital expenditure of 62.2 crore rupees to enhance gear manufacturing capacity. The company's current capacity stands somewhere close to 64.1 million gears, with utilization already at around 80%. The planned expansion is aimed at meeting rising demand and also supporting future growth across its mobility portfolio. When you talk about the capex decision as well, that underlines Sona BLW's focus when it comes to scaling operations while maintaining high utilization levels. Let's also talk to you about the word coming in from brokerages, another stock that was down and out in trade, down about 4.5% at close, as well as HDFC Bank. HSBC, in fact, has maintained a buy rating. When it comes to this particular counter, though, they're trimming their target price to 990 rupees. And the brokerage also views the recent chairman's exit as a difference of opinion and not a governance concern at this point in time. So that's some interesting commentary that's coming in from them. However, HSBC is cautioning that the development could act as a near-term overhang, potentially compressing valuation multiples as well. They're also adding that strong operating performance is going to be a key monitorable from here on to offset the sentiment impact that comes in from this particular exit and also for restoring investor confidence. Let's also talk to you about DCX Systems that was in focus after bagging new orders to the tune of about 644 crore rupees. The stock, of course, was buzzing away in trade with an uptick of over 7%. And that sharp reaction is something that you can totally see on your screens as well. But the order wins include a 563 crore contract. When it comes to radar systems, a 12.8 crore order as well. When it comes to cable and wire assemblies, and a 68 crore thereabout order coming in from HAL for power supplies. While the stock had been flat over the past month and down 30% when it comes to the last 6 months, the fresh inflows in fact significantly strengthened the order book at this point in time, improved the near-term revenue visibility as well, and that's something that you can very clearly see being reflected in the stock price itself. Let's also talk to you about L&T that has in fact reassured investors on its Middle East exposure amid the ongoing conflict. Speaking on the situation, you do have the company's management saying that the region remains a core market, describing it as L&T's second home with deep presence across renewables, solar power and data centers, and also several senior leaders permanently based there. That's also something that they're highlighting. Operationally, when they talk about operations, they're saying that it is running around 100 sites across the region, with nearly 95% of them operating as usual. So only a small portion really of their sites have been temporarily suspended, mainly due to proximity to military bases or upon customer requests as well. So that's the key commentary coming in from L&T. Let's also move on and get you the word coming in from brokerages when you talk about L&T as well, because Macquarie in fact has maintained an outperform rating when it comes to the counter. Target price of about 4,900 rupees is what they're looking at. The brokerage is also noting that none of the projects or project sites rather in the Middle East have been impacted by the ongoing conflict. Macquarie in fact is cautioning that slower execution and potential delays could weigh when it comes to their margins in the financial year 27. But they're also talking about how visibility remains limited at this stage. Importantly, after a 22% correction over the past month, you do have Macquarie also seeing meaningful value emerging at the current levels, supporting its positive stance. Let's also keep it going with brokerages and talk to you about what UBS had to say when it comes to initiating coverage on Coforge as well. They have a neutral rating here. They're setting a target price close to about 1,200 rupees. And the brokerage is also acknowledging Coforge's strong growth outlook, but also at the same time flagging risks around its acquisition as well. Heavy strategy is also something that they're talking about, which could in fact add execution uncertainty. Now, in terms of other commentary also coming in from UBS, they're noting that a relatively weaker positioning in Gen AI is something that you're looking at compared to some of their other peers as well. Overall, it says that the risk-reward appears balanced at current levels, prompting a cautious stance despite solid growth prospects. Let's also talk to you about gold financing stocks that are under pressure as gold prices see a sharp sell-off or a continuation of the sell-off that you've seen thus far. When you talk about MCX gold prices, they're down 16% from 2026 highs, triggering concerns over loan-to-value buffers and collateral coverage as well. So when you talk about rising global yields and also building inflation risks, they're adding to the stress at this point in time when you talk about gold and spelling trouble here, with gold loans forming about 55 to 65% of total assets. Any drop in pledged gold tonnage could squeeze balance sheets when you're talking about these companies. And core net interest margins are also likely to stay under pressure in the fourth quarter. So you're talking about something like a Muthoot Finance down about 25%, Manappuram Finance also off about 23%. So those are some of the numbers that you're talking about when you talk about some of these gold financiers. Let's also talk to you about Power Grid that has raised its capital expenditure guidance for financial year 26 to 35,000 crore, in fact, up from an earlier estimate of close to 32,000 crore rupees. Citing strong execution, the company, in fact, has also increased its capitalization target to somewhere close to 25,000 crore from 22,000 crore. So as of March 22nd, you do have Power Grid that has already clocked in close to 35,000 crore rupees in capex, or about 102% of its latest guidance, while capitalization stands at nearly 22,700 crore, thereabout, around 91% of the revised target, underscoring steady project momentum at this point in time. On to some business news then. Finance Minister Nirmala Sitharaman today introduced the Corporate Laws Amendment Bill 2026 in the Lok Sabha, seeking to make wide-ranging changes, in fact, to the Companies Act 2013 and the Limited Liability Partnership also Act 2008. The bill, in fact, which allows 2 years of deliberations, incorporates recommendations of the Company Law Committee as well, including inputs from industry chambers, legal experts as well, and professional bodies. Opposition MPs, including Manish Tiwari, objected to the bill's introduction, raising concerns over what they call excessive delegation of legislative powers, particularly when it comes to CSR thresholds, compliance norms, and classification of companies. The Employees Provident Fund Organization is preparing to launch a major auto settlement system for inactive EPF accounts, aiming to return as much as 5,200 crore rupees lying unclaimed. The new mechanism will directly credit money into Aadhaar-seeded bank accounts without requiring any claim filing by members. The feature is expected to cover 8.1 lakh Aadhaar-verified inactive accounts, nearly 25% of all dormant accounts. In fact, EPFO data is showing that several of these accounts hold large sums, with 14,000 accounts containing more than 5 lakh rupees and thousands more holding somewhere close to 50,000 to between 5 lakh rupees also. An inactive EPF account is one that has stopped earning interest after 3 years with no contribution post 55 as of February 2026. In fact, EPFO has 3.18 million inactive accounts holding somewhere close to 10,100 crore rupees in unclaimed deposits. Let's also talk to you about electricity rates in the national capital that are likely to increase from April as the government moves to clear more than 38,000 crore rupees in pending dues owed to the city's 3 private power discoms. So you're talking about BRPL, BYPL and TPDDL here. The dues are stemming from accumulated regulatory assets that have grown sharply over the past decade due to the absence of tariff revisions. Officials, in fact, are saying that the government is preparing a payout plan following an August Supreme Court directive as well, which ordered somewhere close to 27,000 crore rupees, including carrying costs, be settled over 7 years. While rates may rise, the Delhi government is considering subsidizing the tariff hike to cushion the impact when it comes to consumers. The Delhi Electricity Regulatory Commission has already submitted to APTEL that total regulatory assets have touched 38,500 crore rupees thereabout. Let's also move on and get you some other updates. Apple CEO Tim Cook may be preparing to retire, and John Turnus, the company's senior vice president of hardware engineering, is emerging as the leading contender to succeed him. Turnus, who has overseen major product lines, including the iPhone, iPad, and Mac, is reportedly being viewed internally as the most likely CEO candidate as well. Cook, who has led Apple since 2011, is set to be steering the company through a transition phase while the board evaluates long-term leadership plans. Although no timeline really for the exit has been confirmed at this point in time, the report suggests that succession discussions are gaining momentum as Apple navigates challenges in device sales and renewed focus on AI-driven product strategy. Let's also move on and get you some national news as well. A section of app-based cab drivers in Gurugram went on strike on Monday. That is today, disrupting commute across the city. Drivers are demanding mandatory KYC verification for passengers, arguing that while platforms conduct strict background checks on drivers, riders remain unverified, creating serious safety vulnerabilities. The protest, in fact, follows the January 2026 killing of 25-year-old cab driver Suraj Singh in Sector 37C, which has heightened fear among drivers. Many, in fact, say that in-app SOS systems are ineffective and that there is no proper grievance redressal mechanism at this point in time for reporting passenger misconduct. Drivers are also seeking minimum base fares under the Motor Vehicle Aggregator Guidelines 2025, citing rising fuel and maintenance costs as well. Maharashtra's hotel and restaurant industry has received major relief, with the centre approving a hike when it comes to commercial LPG quota. This particular decision, in fact, is coming amid the ongoing Middle East conflict, which has disrupted LPG supplies and also left several commercial establishments struggling to source cylinders. The new allocation is expected to stabilize availability for eateries, small food businesses and industrial kitchens, many of which reported shortages and rising costs in the last few weeks. Now, industry associations had warned of operational slowdowns if supplies were not restored, prompting the state to escalate the issue to the centre. And when you talk about the word coming in from the authorities as well, they're saying that the enhanced quota will also help curb black marketing and ease pressure on distributors. So that's the latest coming in there. Moving on then, and let's get you some news coming in for sports fans as well. You do have Messi, who's making history yet again. The Argentine star has now moved past Bale also in the all-time free kick goals list, underlining his brilliance from set pieces. Messi's latest strike takes him past this particular 70 and also leaves him 6 short of Juninho's 77 as well. The highest figure on the list is what you're looking at. It is another reminder of the longevity and the reinvention that have marked his career, with the Argentine also continuing to add fresh milestones deep into his 30s. Let's also get you some other news and updates as well from the world of sports. Manchester City win the Carabao Cup as well after beating Arsenal in the final, with Nico O'Reilly delivering the decisive goals. It's another trophy for City, who once again show their depth and composure on the big stage. 2 headers from the 21-year-old in the space of 4 second half minutes secured a big victory for this particular side, keeping alive their hopes of a domestic treble as well. Let's also move on and get you the word coming in as far as Aditya Dhar's Dhurandhar is concerned. This particular sequel is smashing box office records, clocking over 760 crore rupees globally in just 4 days. The Ranveer Singh starrer, in fact, is now the second biggest opening for an Indian film, only behind Pushpa 2. Strong collections across the country and overseas are driving the surge, with the film also setting multiple benchmarks and also outperforming several past blockbusters. And with that, we're completely out of time on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Will the rising sun win with a hand in hand? Will the two leaves and low
Nifty ends at an 11-month low to close below 22,500 today. Sensex loses over 1,800 points amid escalating tensions in the Middle East. Broader markets underperformed the benchmarks to finish around 4% in the red. All sectoral indices conclude lower. Rupee closes at a record low of 93.98 versus the dollar, mainly triggered by sustained foreign fund outflows and elevated crude prices spelled trouble. Commodities reel under pressure as the Middle East war shows no sign of de-escalation. Gold and silver futures on the MCX drop between 9 and 11%, while Brent tops $113 per barrel. Prime Minister Narendra Modi assures stability amidst the ongoing Middle East war, calls for peace and condemns attacks on commercial vessels. Trump issues a stark ultimatum to Iran, warning that the US will destroy Iran's power plants if the Strait of Hormuz remains closed. Iran's foreign minister denies the strait is shut, saying ships are only hesitant because insurers fear what he calls a war of choice launched by the US and Israel, not Iran. Maharashtra government mandates the PNG shift for commercial sector to shield households amidst the LPG crisis, hikes the allocation to 50% of pre-crisis levels starting today, up from the previous limit of 30%. Corporate Laws Amendment Bill proposes sweeping changes to the Companies Act. Government unveils massive gift city push for IFSC-based firms to raise capital and operate in foreign currency. May exempt certain firms from CSR norms. Higher penalties proposed for listed entities. All eyes on the SEBI board meet as the market regulator reviews the easing of FPI settlement norms with an aim to improve the capital efficiency for the foreign investors. May also focus on simplifying compliance and regulatory processes. Hello and welcome. You've joined us on Profit 360. I'm Nisha Poddar, and let's take it straight to the top story that we are tracking this evening. It's been a sharply negative day on the street today, and with a mayhem when we call the markets, with benchmarks really ending deep in the red. The Nifty slipped over 2.5%, closing below the 22,500 mark, while the Sensex also saw heavy cuts amidst the broad-based sell-off that we saw. In fact, there was enough selling pressure in the market. The pain was even more pronounced in the broader markets. Both mid-caps and small-caps fell over 3.5%, underperforming the benchmarks with sharp cuts across the board. Let me take it across to my colleague Jasmeet for a complete market roundup. Jasmeet.
Well, market takes another hit in today's trade. Nifty 50 ends in red, down about 2.5% today. While we look at the overall market, we do see two stocks that have tanked the most in Nifty 50. That's Shriram Finance and Titan, both the top losers, down about 6%. In terms of the levels of Nifty, Nifty hits the lowest level since 9th of April 2025 in today's trade. If we look at the broader market, they have underperformed the benchmark in today's trade, while Nifty Small Cap 250 is down about 3.5%. Brain and Jay Prakash Power are the top losers in Nifty Small Cap 250. If we look at the mid-cap figure, we do see mid-cap is down about 3.5% in trade again today, while the top losers in Nifty mid-cap 150, we have stocks like SAIL, which are top losers of Nifty mid-cap 150, down about 8%. Now, in terms of the other key aspects and the sectoral wise, we do see that all sectors end in red, while Nifty Metal, Nifty Realty are the worst performing sector, down the most in today's trade, both down over 4.9%. While Hindustan Copper and SAIL, top losers of Nifty Metals, both down about 8%. Now, in terms of the Nifty Realty, we do see stocks like Lodha, the top loser of Nifty Realty, down about 8.5%. If we look at the key trends, Nifty Realty, Nifty Defense, Nifty Media, Nifty Bank, and Nifty Financial Services all end in red for the third consecutive day in a row. Talking about the key facts about the market, we do note that Nifty Midcap 150 hits the lowest level since 9th of May 2025, and while the worst closing of Nifty Midcap 150 since the Jan 2025. In terms of small cap 250, they hit the lowest level since 9th of April 2025, same as Nifty 50, while it's the worst closing of Nifty small cap 250 since the April 2025. All in all, we do see pressure on the market amid the war scenarios.
All right, Jasmeet, thanks so much for that quick roundup of the overall market mayhem that we really saw. But that was about the equities markets. Similar was the trajectory when we talk about the currency market as well, because rupee closed at a record low of 93 rupees 98 paise versus the dollar. Now, the pressure on our currency was mainly triggered by the sustained foreign fund outflows and also elevated crude prices. In the last 6 months, the rupee has really slipped to 92.64 from earlier 87.97 against the greenback. Meanwhile, on a year-to-date basis, remember the Indian currency declined by over 3%, and we also spoke to experts around this. Dheeraj Nim of ANZ Research, and he expects the currency to really continue its downward trajectory. Take a listen.
The worries for the rupee are not yet over. While we're talking about the Brent crude around $110 a barrel, but you remember the India's basket of crude oil that we import is hovering above $150 a barrel. So that's the divergent trend between the two crude baskets we're talking about. At the same time, we have to be mindful that India's BOP problem was fundamentally a capital flow problem when we were speaking about the rupee's weakness last year. And now we are adding to it the current account deficit weakness. So it becomes a bigger BOP problem than we were contending with last year. So I do not think that where oil prices currently are, the rupee's weakness would halt at 94. It could even go beyond that. And of course, all of this depends on how much the RBI tries to arrest that decline or smoothen it out. But all of that notwithstanding, I don't think rupee's troubles are more or less over.
All right, remember that rupee is also pressured because of the higher crude oil prices, and they continue to remain at elevated and volatile levels as geopolitical tensions in the Middle East really keep the global markets on the edge. Brent crude is currently trading around about $113 to $114 per barrel. And also remember, Mark, while the WTI is hovering near $98 to $101 per barrel. with a steady risk premium built into the prices that is seen. Now, the key concerns for the market remains the potential supply disruptions through the strategically crucial Strait of Hormuz, which is a vital artery for the global oil shipments. In fact, any escalation in the region could really tighten the supplies further and push the prices higher, is what most experts do also say. At the same time, remember that the traders are also watching the demand cues and central bank signals globally, as elevated crude prices could really add to inflationary pressures. And for now, oil markets really remain highly sensitive to the headlines, with volatility likely to persist in the near term. So crude oil prices playing truant with our economy, as well as it's the largest import bill that India has. Peter Maguire, the CEO of Australia at trading.com, while speaking to NDTV Profit, expects further softness in gold and silver prices, even as crude continues to remain elevated with no signs of easing. In fact, he sees crude heading towards the $125 per barrel mark very soon if the tension really escalates, while noting that the precious metals have already seen a sharp washout. Let's listen into what exactly he had to say.
125 is going to be a headline, Nisha, and then you could see 130, and then, let's just see what happens over the next 12 to 18 hours, because that's crucial. Silver's nearly halved in value. We had a high of 121. Now you're running at around $62, $63. I'm expecting that to be probably high 50s over the next 12 hours when New York is operational. And gold to probably see further softness to the downside until we get some form of support.
All right, so that was Peter Maguire's view on the overall commodities and especially the oil prices. Now, a sharp correction coming in for the precious metals, with gold prices, remember, witnessing a steep sell-off today. The yellow metal has really plunged to over 3%, effectively wiping out all of its gains for this particular year, and is now also staring at the biggest weekly drop since the year 1983. Now, the key trigger is the shift in the global rate expectations, and also markets are pricing in the lower chances of a US Federal Reserve rate cut, and also pushing yields higher and also denting the appeal of non-yielding assets like gold. Technically too, the picture remains weak, with bullion's 14-day relative strength index also has slipped below the 30 mark, and also indicating the oversold territory, but also reflecting, remember, the intensity of the recent sell-off. In fact, silver is really tracking the weakness as well of gold, declining in trade, with gold as the broader precious metals basket really comes under pressure today in the market. So from safe haven buying to really aggressive unwinding is what is seen in precious metals, and the sentiment in precious metals has really clearly flipped, at least in the near term. So that's a very important headline that we are tracking here today. All right, the West Asia conflicts, remember, stands on the edge, and the world is watching closely, as Prime Minister Narendra Modi really addressed the Lok Sabha today, highlighting India's concerns over the escalating tensions in the Middle East. He emphasized that the world is seeking immediate relief from the uncertainty, as the war's impact is being really felt across the global economies, including India. With the West Asia crucial to India's energy supply and security, well, the government has stepped up the domestic LPG production to really safeguard the supplies. Let's listen in to the Prime Minister.
भारत में बड़ी मात्रा में कच्चा तेल, गैस और फर्टिलाइजर जैसी अनेक जरूरी चीजें हॉर्मुज स्ट्रेट के रास्ते से आती हैं। युद्ध के बाद से ही हॉर्मुज स्ट्रेट में जहाजों का आना जाना बहुत चुनौतीपूर्ण हो गया है। बावजूद इसके हमारी सरकार का ये प्रयास रहा है कि पेट्रोल, डीजल और गैस की सप्लाई बहुत ज्यादा प्रभावित न हो, देश के सामान्य परिवारों को परेशानी भी कम से कम हो, इस पर हमारा फोकस रहा है। हम सभी जानते हैं देश अपनी जरूरत की 60% एलपीजी आयात करता है। इसकी सप्लाई में अनिश्चितता के कारण सरकार ने एलपीजी के डोमेस्टिक उपयोग को प्राथमिकता दी है। साथ ही एलपीजी के देश में ही उत्पादन को भी बढ़ाया जा रहा है। पेट्रोल डीजल की सप्लाई पूरे देश में सुचारू रूप से होती रहे, इस पर भी लगातार काम किया गया।
Right, that was Prime Minister Narendra Modi talking about the various steps being taken and also appealing to various countries involved in this conflict to maintain peace and cooperation. Now, as the conflict really enters day 24, it is widening rapidly with the consequences far beyond the region. Missiles once again really streaked across the skies over Tel Aviv overnight, with air raid sirens also blaring as Israeli defense systems really intercepted the incoming Iranian strikes. Now, the Israeli forces on Sunday struck the Qasmia Bridge on the Litani River in southern Lebanon, and hours after it really warned of bombing the crossing. Now, the key crossing links Lebanon's south to the rest of the country is the one which is affected here. At the center of the crisis is the Strait of Hormuz. Remember, Iran has warned of immediate as well as devastating retaliation if its energy infrastructure is really hit, and signaled that passage through the strait would require coordination and cooperation with Tehran. Iran's foreign minister has also said that the strait is not closed, but ships are really being hesitating due to the insurance fears, also adding that freedom of navigation cannot really exist without freedom of trade. And the United States is escalating the pressure. Donald Trump's 48-hour ultimatum has now expired with a warning: peace through strength. But beyond the military tension, remember, a global risk is also emerging, and with that, the internet, subsea internet cables are also coming under this particular glare of the warfare that we are seeing. So nearly 95% of the region's internet traffic, remember, flows through the cables in these waters, and any disruption could really impact the global connectivity, including, remember, India, Europe, data route. So that's the big and the new emergence of risk that's really cropping up. And talking about the impact earlier today, we spoke to Vikram Sud, the former chief of RAW, on this particular matter and what he thinks about this particular Strait of Hormuz and the war.
You know, it's an ongoing theater of war. It's not so easy to predict who will win in the end. But it seems that the Iranians are sharper than they were presumed to be. They have the ability to carry on fighting. The presumption that once the Ayatollah is dead, they will all fall apart. Iran does not work that way. Iran has a systematic way of handing over power and transferring power to the next regime. The Iranians, I don't think, are in any mood to give up. And if they cut off the internet links which are under sea, that will be a total disaster.
Iran's policy is to try and split one nation from America, all the other nations from America, in terms of using the Straits of Hormuz. So if it's an Indian ship or a Chinese ship or a Pakistani ship, and I can go on, they will allow that to go through, provided it goes through on the route which Iran dominates, and of course they're paying money to do so. Now, the problem I think I have with this thesis is, what happens if the US decides to liberate militarily the Gulf? And the answer is they're going to come into conflict with Iran, which is permitting other so-called neutral ships to pass. And that means that Iran would have to defend those ships, which I don't think it's in a position to do.
All right, and in fact, the energy shortage is really impacting several of the sectors. So let's focus on some of them. Fertilizer manufacturers are really staring at a sharp slowdown as LNG shortages really begin to bite. In fact, our colleague Ridhima is joining us with all the details on how the Middle East conflict is really impacting the fertilizer companies. Ridhima.
The urea manufacturing companies could see an impact on their EBITDA by 15% in Q1 FY27 as per the analysts, and this is mainly due to the volumes being impacted by due to the LNG shortage which is happening due to the Middle East conflict. This will also have an effect on their top line in Q1 FY27, and not just this, as per the news reports, now urea plants are already operating at just 50% of the capacity, down from about 100%. Now, so India requires urea mainly for its agricultural purposes. This is 99% of the requirement, which makes it integral for food security. Now the demand comes up to be around 37 to 39 million tons, and 7 to 8 million tons is imported from Russia and the other regions, and rest 30 million tons is made in India. So for this 30 million tons is which we require LNG. And this forms around 80% of the total raw materials which is required for the manufacturing of urea. So now 20% of the LNG is being made in India, and 50%, a major 50% comes from Middle East regions, and rest comes from US and the other parts. Now government is already taking steps to increase the supply of LNG, and this is something to wait and watch, that how the government increases the supply for LNG and how long the conflict actually lasts.
All right, thanks Ridhima for getting us those details. Now the Securities and Exchange Board of India, or SEBI, is set to really take up the key reforms at its board meeting that is happening today currently, with a focus, remember, on easing the rules for the foreign investors and strengthening governance standards. Now, big proposal on the table of SEBI is allowing the foreign portfolio investors, or FPIs, to really net their funds, meaning that they can offset same-day buys and sells and also settle only the final amount instead of really arranging the full capital upfront. That will improve the liquidity in the market. This move is aimed at really reducing the costs, improving efficiency, and making India more attractive for the global investors, also especially at a time when the funding requirements under the current system remains very high. Now, alongside this, SEBI will also discuss the governance reforms, including, remember, tighter disclosure norms and clearer rules around the conflict of interest, and also changes to eligibility criteria for the market intermediaries. Now, the street will be closely watching out for the outcome of this SEBI board meet, with the regulator really looking at the balance of ease of doing business with stronger oversight on the governance aspect. So that SEBI board meet and the press conference thereafter will be closely watched out for. Now let's take it straight across to one of the big developments coming in, and in fact a tragic one when we talk about some international news coming in. An Air Express Canada aircraft operated by Jazz Aviation really collided with a fire truck on a taxiway at New York's airport. Now, 2 pilots have been really killed in this particular accident, and several passengers were also injured. According to Port Authority Executive Director, 41 passengers and also crew were admitted to the hospital, as well as the ARFF officers. 32 passengers have been released, but there are also serious injuries that they have sustained. Now, the plane carried 72 passengers, remember, and 4 crew members. The airport has been closed until Monday evening. So that's a tragic state of affairs and an ill-fated accident that is really taking place. All right, coming back home, and the Maharashtra government has officially increased the commercial LPG allocation to 50% of pre-crisis levels starting March 23rd, 2026, up from the previous, remember, 30% limit, which was on the lower side. Now, the decision was really taken following a directive from the Union Minister of Petroleum and Natural Gas. In fact, Maharashtra has made it mandatory for the hotels, restaurants, as well as the dhabas to really register with the oil marketing companies and also formally apply for a piped natural gas connection. And also the aim is to move the bulk consumers onto the piped network to really prioritize the available 14.2 kg of the domestic LPG cylinders for the households. So government has been really focusing on the households getting stable supply of the LPG cylinders. So that's a big development really coming in, and some bit of relief on the LPG as well for the commercial space as well. Now, Corporate Laws Amendment Bill has also been tabled in the Parliament, and that is something to watch out for in this particular evening. But let's take it to Punjab, and Punjab is making a fresh push at attracting investments, with the state government really saying industrial inflows have really picked up pace, and Commerce and Industries Minister has also said about 57,000 crores has really come in the fiscal alone, taking the total investment since 2022 to nearly 1.7 lakh crore rupees. A new industrial policy is really targeting the sectors from EVs as well as semiconductors to road processing and also data centers, with the incentives to drive the growth. And my colleague Rishabh spoke with the minister. Take a listen.
Right, I'm joined by Sanjeev Arora. He is the Industries and Commerce Minister for Punjab. Thank you so much, Mr. Arora, for taking time out. Talk to us about the sort of investments that are coming into the state of Punjab when it comes to industry setting up, be it greenfield or brownfield investments. Talk to us about where you see that in the next five years as a short-term timeline.
Let me tell you, Rishabh, that Punjab is becoming one of the best investment destination in the country. In 25-26, we have achieved a historic number for Punjab. We have achieved a number of around 57,000 crores, which is the highest ever in the history of the state. And from 22, we have achieved a total of 170,000 crores with potential employment of 6 lakh people. Yeah.
Very interesting, sir. Also talk to us about this figure. What are the sectors that are coming to Punjab? For example, some of the southern states have picked up tech as their industry. A lot of tech investments coming there. Gujarat is known for its manufacturing prowess. What will Punjab be known for? Which sectors is this staggering investment number coming in?
Let me tell you, we have recently come up with the industrial policy. We launched it last month. In that policy, we have 24 sectoral policies. So there are 24 sectors which we already have in Punjab, and we are looking forward for more investments. So, of course, we are a agri-based economy, and food processing, textiles and steel are the main industries. Other than that, we are focusing on IT, ITES, GCC, semiconductors and data centers. We are focusing on them, and also EVs, electric vehicles. So these are the industries which we are focusing on as thrust sectors.
Oh, very interesting. Mr. Arora, also talk to us about some sort of big names that are expected to join in as more and more people are coming into Punjab. It has largely been a beacon of stable industrial relations, Punjab. Talk to us about the big corporate names that we can expect, or some big global names that we can expect.
You see, Tata Steel has recently dedicated their first arc furnace in the country, and that's in Ludhiana, Punjab. Okay, JSW They are already in Punjab, but they have announced another 3,000 crore investment. Trident, who are in textiles, they have announced 5,000 crore investment. Then Happy Forging is there. They have announced 1,000 crore investment. Fortis, they have announced another 1,000 crore. They already most of the companies which I am talking of, they have presence in Punjab, but now they are growing. Cargill, they have put up their second animal feed plant. It's an international company. Then Yanmar is there. So you name any big name, especially in textiles and steel, they are in Punjab. Sanathan Textiles is there.
All right, with that, it's a wrap on Profit 360, but keep it with NDTV Profit. Thank you so much for tuning in.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and in this show we'll get you the hottest companies which we are talking and buzzing in the trade as well. The company which I want to focus on, wait a minute, I'll give you some hints. Try to guess that. It's an oil exploration gas company and it's buzzing because of so much tensions happening, India's energy security. That's why I've got this company. The second reason, the hint is that it's a key contractor of ONGC. Now I'm sure you're about to guess the company's name, but there are some more hints if you're not able to guess it. The third hint is, of course, the provisional suspension which was there that has been revoked for the orders. That means it's positive for the company. And the last 5 trading session, the stock has jumped up 17%. The question remains is, which company is this? I need to use your thinking in a very deep manner. And yes, that's also a hint. The company's name is Deep Industries. This is what we want to talk about. But why are we calling this company? What has changed after its earnings that the interest is back in the street? The first reason is, of course, going to be the beneficiary of the new ONGC capex which ONGC wants to put across the entire ecosystem, and the second order effects and the benefit comes to Deep Industries. The second one, the next steps, as the provisional suspension has been revoked, what kind of incremental benefit in terms of money does the company post? The third question is the fourth quarter. Will it be stronger because of the higher utilization in the plants? That's something which we'll watch out for. It's basically the fleet utilization and the execution trends coming in for the long duration contracts. Does it improve more? Because execution is very much important in this oil and gas segment, and the gestation periods are also on the higher side. The margin growth outlook and fleet addition, especially because the company is on an upward margin growth trajectory, so this will be very much interesting to ask about. And also the order book outlook, so around 2600 plus crores order book is there currently. Will it touch the 3000 crore mark by the end of March? That's the key question to be asked. And also the Kandla Energy integration details. What is the status about it? What's the key progress about this segment? This is what we'll try to understand from the management. And on the show, we'll have Rohan Shah, Director of Finance and Group CFO at Deep Industries, to help us crack these numbers and also the strategic outlook for the company. But let's come and talk about the company. What's it all about, layer by layer? It's of course oil and gas. It's a bit technical, but I'll try to simplify it for you what this company does. It's incorporated in 91 in the business of oil and gas field services. And if you take in more layers of what the business is all about, this includes air gas compression, drilling, workover, gas dehydration, and also they're gone into integrated services as well. So 4-5 important outlook the company is focusing on. The company expertises in this integrated project management services as well. Also, this is important because 70% of their portfolio is covering the post-exploration value chain services. The moment it touches the 100%, then a lot of value comes in, with margins and even volume. Order book is roughly at around 2967 crores. I pointed out the 3000 crore mark. 3 year CAGR growth of order is very much important. Last 3 years, it's a 40% annualized basis. So this is a figure to watch out for. Key clients, you name it. If you track the oil and gas segment, you'll know all of these companies, ONGC and Energy.
नेचुरल गैस के संबंध में घरेलू उपभोक्ताओं को और सीएनजी ट्रांसपोर्ट के लिए 100% सप्लाई मेंटेन है. इंडस्ट्रियल और कमर्शियल कंज्यूमर्स जो ग्रिड पर कनेक्टेड हैं उनको 80% उनके एवरेज कंजम्पशन का दिया जा रहा है. भारत सरकार ने सीजीडी एंटिटीज़ को कमर्शियल कनेक्शंस को प्रायोरिटाइज करने की एडवाइस दी है. इसी संबंध में राज्य सरकारों को भी लिखा है और एडिशनल 10% एलोकेशन की बात भी कही है पीएनजी नेटवर्क के एक्सपेंशन के लिए. इन सभी प्रयासों के फलस्वरूप पिछले 3 हफ्तों में लगभग 3.5 लाख डोमेस्टिक और कमर्शियल पीएनजी कनेक्शंस दिए गए हैं या एक्टिवेट किए गए हैं. एलपीजी की सप्लाई अभी भी चिंता का विषय बनी हुई है, किंतु एलपीजी डिस्ट्रीब्यूटरशिप्स पर कोई ड्राई आउट नहीं है. एलपीजी की पैनिक बुकिंग में कमी आई है और डिलीवरी सामान्य है. कमर्शियल एलपीजी के संबंध में जैसा आपको पता है कि अभी मैंने बताया 10% एडिशनल कमर्शियल एलपीजी देने की बात है राज्य सरकारों को, अगर वो पीएनजी नेटवर्क एक्सपेंशन में सहयोग देते हैं. 21 तारीख को भारत सरकार ने सबसे पहले 20% कमर्शियल एलपीजी देने की बात की, उसके बाद 10% एडिशनल एलोकेशन किया डिपेंडिंग ऑन ईज ऑफ डूइंग बिजनेस. और 21 तारीख को भारत सरकार ने एक और ऑर्डर जारी किया और अब कमर्शियल एलपीजी का लगभग 50% volume will be at the disposal of state and the state governments and the union territories. इस ऑर्डर में भारत सरकार ने राज्य सरकारों से निवेदन किया है कि इस एलोकेशन के अंदर रेस्टोरेंट्स, ढाबा, होटल, इंडस्ट्रियल कैंटीन्स, फूड प्रोसेसिंग, डेयरी यूनिट्स, सब्सिडाइज्ड कैंटीन्स और आउटलेट्स रन बाय स्टेट गवर्नमेंट और local bodies for food, community kitchens, and 5 kg FTL for migrant labor. तो जो श्रमिक भाई हैं उनके लिए भी 5 किलो के FTL सिलेंडर को प्रायोरिटाइज करने की बात की गई है और राज्य सरकारों से इस संबंध में रिक्वेस्ट की गई है। अभी तक लगभग 20 स्टेट्स और यूनियन टेरिटरीज ने कमर्शियल LPG का एलोकेशन किया है और लगभग 15,800 टन कमर्शियल LPG अपलिफ्ट हुई है। कैरोसिन एडिशनल कोटा के संबंध में भी लगभग 15 स्टेट्स और यूनियन टेरिटरीज ने एलोकेशन ऑर्डर जारी किए हैं। ब्लैक मार्केटिंग और होर्डिंग को रोकने के लिए लगातार राज्य सरकारों से रिक्वेस्ट की जा रही है और इस संबंध में कई लेटर भी इशू हुए हैं। लगभग 32 स्टेट्स और यूनियन टेरिटरीज ने कंट्रोल रूम सेटअप किए हैं और डिस्ट्रिक्ट लेवल मॉनिटरिंग कमेटी भी सेटअप की है। पिछले कुछ दिनों में लगभग 37,000 रेड हुई हैं, 550 से ज़्यादा FIR बुक हुई हैं और 150 से ज़्यादा लोग अरेस्ट भी हुए हैं। इसी क्रम में हमारी ऑयल मार्केटिंग कंपनीज ने भी वेरिफिकेशन सरप्राइज इंस्पेक्शंस किए हैं और लगभग 234 डिस्ट्रीब्यूटर्स को शो कॉज नोटिस दिए गए हैं, कुछ को सस्पेंड भी किया गया है और पेनल्टी भी लेवी की गई है। अंत में आप सभी के माध्यम से देश की जनता से रिक्वेस्ट है कि अफवाहों पर विश्वास न करें, पैनिक बुकिंग से बचें। डोर डिलीवरी सिलेंडर्स की जा रही है, इसलिए अपने सिलेंडर का इंतज़ार करें और ट्राई टू कंजर्व LPG एंड द एनर्जी। थैंक यू।
थैंक यू प्रियंका। अब मैं मिनिस्ट्री ऑफ पोर्ट, शिपिंग एंड वाटरवेज के स्पेशल सेक्रेटरी श्री राजेश कुमार सिन्हा से अनुरोध करूंगी कि वे शिपिंग और मैरीटाइम ऑपरेशन से जुड़े मुद्दे पर जानकारी दें।
धन्यवाद महोदय। आप सभी को नमस्कार। 22 भारतीय जहाज और उस पे 600 भारतीय नाविक सभी सुरक्षित हैं। कोई भी मैरीटाइम इंसिडेंट की सूचना नहीं है। मैंने पिछली ब्रीफिंग में बताया था 611 भारतीय नाविक हैं, इसमें 11 साइन ऑफ किया है, इसलिए नंबर ये 600 हो गया है। डीजी शिपिंग शिप ओनर्स के साथ, RPSL एजेंसी के साथ और इंडियन मिशंस के साथ लगातार कोऑर्डिनेट किए हैं और सी फेरर्स को रिपैट्रिएट करने के लिए वहाँ से प्रयत्न भी कर रही है। इसी क्रम में पिछले 24 घंटे में 13 रिपैट्रिएशन हुआ है। अगर हम 40 घंटे देखें तो 34 रिपैट्रिएशन हुए हैं विभिन्न एयरपोर्ट और विभिन्न रीजन से गल्फ एरिया के। जो 24/7 डीजी कॉम सेंटर है, डीजी शिपिंग का कम्युनिकेशन सेंटर, उसमें 24 घंटों में 60 टेलीफोनिक कॉल्स और 129 ईमेल्स प्राप्त हुए जिनका जवाब दिया गया है और कार्गो मूवमेंट के संदर्भ में कोई कंजेशन किसी पोर्ट पे रिपोर्टेड नहीं है। हमने कल भी और परसों भी सारे पोर्ट के साथ रिव्यू किया, कहीं से भी किसी भी मेजर पोर्ट या माइनर पोर्ट पे कोई कंजेशन रिपोर्टेड नहीं है। स्टेट मैरीटाइम बोर्ड्स के साथ भी हमने इंटरैक्ट किया है, उसमें गुजरात, महाराष्ट्र, गोवा, आंध्र प्रदेश, केरला, पुडुचेरी, किसी भी पोर्ट ने कंजेशन रिपोर्ट नहीं किया है। मैंने पोर्ट के द्वारा दी जा रही सहूलियतों के विषय में आपको बताया था। इस क्रम में मैंने पहले जवाहरलाल नेहरू पोर्ट, फिर VO चिदम्बरनार पोर्ट, विशाखापट्टनम पोर्ट, मुंद्रा पोर्ट, कांडला पोर्ट, न्यू मैंगलोर पोर्ट के विषय में बताया था। आज मैं आपको चेन्नई पोर्ट के विषय में बता रहा हूँ। चेन्नई पोर्ट ने करीब 40,000 स्क्वायर मीटर का एरिया बैकअप स्टोरेज फैसिलिटी की तरह से आवंटित किया है, जिससे कि जो एडिशनल कार्गो लोड है वहाँ पे मैनेज हो सके। वैसे ही कोचिन पोर्ट में 2500 TU जो फुट इक्विवेलेंट यूनिट्स कंटेनर्स होते हैं, उसके लिए स्पेस अरेंज किया हुआ है जो CFS ऑपरेटर है उनके साथ मिलकर के, जिससे कि कंटेनर की हैंडलिंग बहुत इफिशिएंट हो और यदि कोई कंजेशन होता भी है तो तुरंत रिजॉल्व हो सके। और मिनिस्ट्री ऑफ पोर्ट शिपिंग वाटरवेज, DG शिपिंग के साथ, सारे स्टेक होल्डर्स के साथ, पोर्ट ऑपरेटर्स के साथ, शिपिंग कंपनीज के साथ, इंडियन सीफेरर के साथ रेगुलरली और बहुत कंटिन्यूसली इसको मॉनिटर कर रही है, जिससे कि सेफ्टी, मैरीटाइम ट्रेड, ये सभी की कंटिन्यूटी बनी रहे। धन्यवाद।
थैंक यू। अब मैं मिनिस्ट्री ऑफ एक्सटर्नल अफेयर्स के एडिशनल सेक्रेटरी XP श्री रणवीर जायसवाल जी से रिक्वेस्ट करूंगी कि वे एक्सटर्नल अफेयर्स से रिलेटेड मैटर्स की जानकारी।
Thank you, ma'am. As you are aware, Prime Minister has been speaking to several world leaders on the ongoing conflict in the West Asia region. On Saturday, as you are aware, he had spoken to the President of Iran. On the occasion, he also had the opportunity to convey Eid and Navroz greetings. He expressed hope that this festive season would bring peace, stability, and prosperity in West Asia. Prime Minister condemned the attacks on critical infrastructure in the region, which threaten regional stability and disrupt global supply chains. Prime Minister reiterated the importance of safeguarding freedom of navigation and ensuring that shipping lanes remain open and secure. He also appreciated Iran's continued support for the safety, security, and welfare of Indian nationals in Iran. Thank you.
थैंक यू। अब मैं मिनिस्ट्री एक्सटर्नल अफेयर्स के एडिशनल सेक्रेटरी गल्फ श्री असीम महाजन जी से रिक्वेस्ट करूंगी कि गल्फ रीजन से संबंधित डेवलपमेंट्स पे अपडेट करें।
Good afternoon. Ministry of External Affairs continues to closely monitor the developments in the Gulf and the West Asia region. Ensuring the safety, security, and overall welfare of the large Indian community in the region remains the ministry's highest priority. The dedicated special control room of the ministry remains operational to assist and support Indian nationals and their families. We remain in constant touch with the state governments and the union territories to share information and for coordinating our efforts. Our missions and posts in the region have been working continuously, maintaining round-the-clock helplines and actively engaging with the wide array of Indian community associations and organizations spread across the region. Regular and updated advisories are being issued to keep our citizens informed of the latest developments. Simultaneously, close coordination is being maintained with respective host governments. Our missions are proactively extending a range of services and providing all support, including visa facilitation, consular services, and logistical assistance where required to seafarers, students, stranded Indian nationals, and short-term visitors. An update on the status of flights. Overall, the flight situation continues to improve with additional flights operating from the region. Since February 28th, around 375,000 passengers have returned from the region to India. Airlines continue to operate limited non-scheduled flights based on operational and safety considerations between UAE and India. Today, around 95 flights are expected to operate from various airports in UAE to India. Flights continue to operate from Oman and Saudi Arabia to India. With the Qatar airspace partially open, Qatar Airways is expected to operate around 8 to 10 non-scheduled commercial flights to India today. Kuwait and Bahrain airspaces remain closed. Jazeera Airways of Kuwait is operating flights to various destinations in India from the Al Qaisuma Airport in Saudi Arabia. Gulf Air of Bahrain also continues to operate special non-scheduled commercial flights from Dammam Airport of Saudi Arabia to India. This has facilitated travel of Indian nationals from Kuwait and Bahrain to India. We continue to assist travel of Indian nationals in Iran through Armenia and Azerbaijan to India. We have also facilitated the relocation of several Indian students in Tehran, Isfahan, and Shiraz to other cities. Till date, 1,031 Indians, including 707 Indian students and 324 Indian citizens, have crossed out of Iran with our mission's assistance. We are also facilitating travel of Indian nationals from Israel via Jordan to India. In view of the flight restrictions from Kuwait, Bahrain and Iraq, we continue to facilitate travel of Indian nationals via Saudi Arabia. Thank you.
Thank you. Now we will take few questions from the media. 70.
मैम मैं शैलेश यादव हूँ ANI से। कुछ रिपोर्ट्स है मैम जो डोमेस्टिक सिलेंडर है 14.2 kg का, उसको 10 kg का करने का, इसमें कितनी सच्चाई है?
4.
Good evening, ma'am. Saptaparna Ghosh from the Hindu. A couple of questions to Sujata, ma'am. Could you please shed light if India would be looking to tap into Iranian crude, going ahead? And secondly, ma'am, with the commercial LPG allocation, the prospect of being increased to 50%, and LPG continuing to being an issue of concern, are we looking at some additional pressure with respect to domestic LPG, if that could be there?
282. Oh, sorry, 262. Sorry.
Hi, this is Dhruvaksh from Business Standard. I have a couple of questions for Sinha, sir. One, just wanted to get an update on the availability of containers in India, in terms of there being concerns that delayed turnaround of containers which have been rerouted, and the fact that back containers that have been availed the back to town facility when the crisis started, they are not likely to return because there's no cargo going towards West Asia. So just wanted to understand that what's the situation on the availability of containers. Second, there's also been concerns that
And viewers, we are getting a breaking news update. Donald Trump has just posted, and I quote, that he said that he's pleased to report that the United States of America and the country of Iran have had over the last 2 days a very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East. And this is based on the tenor and tone of these in-depth, detailed and constructive conversation which will continue through the week. And he has also instructed the Department of War to postpone any and all the military strikes against Iranian power plants. So that's a big breaking that's coming in, a big comment by the US President Donald Trump on Iran that he has postponed any sort of military spikes against the Iranian power plants and also the energy infrastructures, in Iran. And also, this is for a 5-day period. And this is subject to the success of the ongoing meetings and also discussions. And so Trump has basically deferred the strikes on Iran's energy sites, viewers. It's a 5-day pause on Iranian strikes. And he is instructed to postpone all the strikes against power plants. And Trump, has also said that he's postponing strikes on Iran's energy sites for 5 days. So that's the key to note, that he's halted all the, strikes at Iran for 5 days. And this might have a direct, implication on, the prices of the crude and market volatility. And it's going to have a lot of repercussions, could be seen. And I'm being joined by my colleague Hiral for more on this. Hiral, that's a big development that's come in, and that too, President Trump saying that he's halted for, strikes for 5 days. So what do you pick up from this?
Absolutely. This is one of the biggest news that we're picking up for the day, because the kind of nervousness that we've seen in terms of the markets was because of that 48-hour window that Trump had given Iran. But now that 48-hour window has completely turned out. And with Trump coming out and saying that, he is actually holding of the strikes for the next 5 days, this is one of the key positives that we should be picking up. What he's quoted is that US-Iran have had productive conversations, and they've said that there will be postponement to the last 5 days. He's actually instructed to postpone all strikes against all the power plants, and that was one of the major threats that was looming around. In fact, in consonance to this, you had Iran who had come out and said that there could be a threat when it comes to the underwater cabling, and that was something that was concerning the streets. Now, the postponement in terms of strikes on Iran energy sites for 5 days is giving in a major relief. And the way we are able to ascertain this is if you look at GIFT Nifty right now itself, that itself shot up nearly 700 points, if you can show that on the screens, and you will see that there could be a relief rally that could be coming in terms of where markets are concerned in tomorrow's session, number one. Secondly, if you see in terms of what's happened with regards to where crude goes, now the oil futures have fallen more than 11% after Trump's comments when it comes to conversations with Iran. So two positive triggers that we are seeing over here. One, SGX Nifty seeing a spike of over 700 points as we speak right now. And two, you have crude, which is coming off, and it's down nearly 11% after Trump's comments. So both of these are indicating that there is some positive sign. The next 5 days is something that again become crucial because there could be some bit of buying interest that could be coming in. Apart from that, you have Bitcoin also, which has jumped after Trump's comments on Iran. So all of these are highlighting positive aspects in terms of the conversations. Dow futures itself have jumped nearly 1,000 points after Trump's remarks. So opening up of U.S. markets is going to be interesting to watch out for in today's day of trade. And this development will be taken in a pretty positive manner, not only by the other global markets, but also with regards to where Indian markets are concerned. So categorically, 1,000 points jump in terms of Dow futures. You have GIFT Nifty, which is seeing a jump of over 700 points already. So tomorrow, that gap up opening is something that the street will be eyeing. And because crude is coming off, the momentum in terms of silver and gold and other base metals also becomes very crucial. But this is an absolutely important development because we're talking about 23,231 already in terms of GIFT Nifty, which has risen over 760 points right now. And the next 5 days are important because he said that he has had talks with Iran regarding the end to hostilities. And the talks have been good with Iran over the last 2 days. So probably this is giving you some bit of a respite as well, not only from a markets perspective, but also a humanitarian, from the war perspective. The geopolitical aspect becomes absolutely crucial from here on.
Hiral, just stay with us because, at this crucial juncture, President Trump coming up with this commentary. So, Neeraj, my colleague, executive editor, is also joining us, on this major update that's coming. Neeraj, markets were pricing in this escalation. So, do you think that this will now reverse the crude rally?
Well, you're already seeing some signs of this, that crude prices have fallen. And as Hiral was stating as well, I think we've seen the immediate reaction come across currency markets, commodity markets, including crude, but also the uplift that we've seen in gold and silver almost immediately. And in the equity markets as well, by virtue of the fact that the SGX is showing an uptick, Dow futures are showing an uptick, and very likely that the European markets have also shown an uptick. So you're seeing that immediate reaction happen. Crude actually went down quite a bit before just bouncing off a little bit from those lows. I think the markets will now want to wait, actually, and see what is the response, if any, that comes in from the Iranian side, because the last 2 or 3 times that if there has been a reconciliatory tone or otherwise, it has been thwarted by an opposite response from the Iranian side as well. It's happened in a couple of instances. So maybe the markets will be a bit wary, but just the fact that we've been sold down so strongly in the last few days that a whiff of this reversal will lead to this strong uptick. I wouldn't be surprised, frankly, if this is the tone and tenor that lasts for the better part of the next 16 hours, that we might actually have an even stronger start tomorrow morning. Today smacked of capitulation, the first day of capitulation in our market. Won't be surprised if indeed that reverses very, very strongly tomorrow.
Absolutely. And Neeraj, but this pause is just for 5 days, and that's also key to note here. And so do you think, if the things don't go, in the positive direction after 5 days, so it's going to bounce back again?
So that could very well happen. And I think in these days, 5 days also are sometimes longer than a year. But frankly, Himakshi, right now, the market, if the market was a rubber band, I'm giving you that analogy, if the market was a rubber band, it's been stretched so much that it is waiting for even a whiff of good news to come in to just revert or try and revert to mean. And that reversion to mean could actually be 1,000 points or more. And therefore, for now, the market will not be worried about 5 days. For now, the market will be worried about, or market will be relieved that some resolution has come in, and there will be some bit of short covering led moves as well, or long unwinding, or rather short covering move as well, which will happen tomorrow. And for now, the market will be focused on the immediate action or the immediacy of this action. 5 days is too long a time frame to think about right now, to be honest.
Right, Neeraj. So it's, the markets are needing a whiff of positivity at this moment, and rightly pointed out. And I'm also being joined by Alex Matthew, Senior Editor, NDTV Profit, on this. Alex, how are you picking up, what are you picking up on this latest development, crucial development that's coming? And rightly pointed out by Neeraj, that it's a whiff of positivity that, markets may cheer, tomorrow. And the crude's futures prices are already, we can see the impact on it. So what's your take on it?
Well, Neeraj has already put a lot of things into perspective, Himakshi. So let me add a little bit to that, right? From my perspective, I think the big conversation through this conflict so far has been the fact that oil infrastructure has been damaged. So while it's very good news in the short term that there's a cessation of military action and of strikes, hopefully this will extend to both sides, actually all three sides. While the US president has made an announcement, remember that it has been said in the past that there are three parties involved in this conflict. And so it is important for Israel and Iran to also play ball in this kind of a situation. Let's hope that that remains the case. The attention, therefore, beyond this is going to focus on whether a longer-term solution can be found or whether this is just a breather in the interim. And so you would have to watch for analysis from crude experts on the extent of damage on infrastructure, because once the dust settles, the focus is going to be on rebuilding, and how long that takes at this juncture is anybody's guess, because you have somebody from the International Energy Association, Fatih Birol, talking about the fact that the world is currently underestimating the depth of the energy crisis that we're currently facing. So let's hope that a resolution is found first for the war, and then, more importantly, a resolution is found to the damage that has been created in the international energy ecosystem, and that will need to be done on a war footing.
Yes, absolutely, Alex. Rightly pointed out, because, the repercussions of the damage that's already been happened, we are going to face the brunt of it as well. But Hiral, how should investors be, positioning themselves, especially after this, interim relief, if I may say, by the US president that has come in? So how are you viewing it? How should the investors be positioned at this particular moment?
Actually, it's going to be interesting to see what investors do, because I'm sure, because it's a 5-day relief that we are talking about right now, my read of the situation is that there is a potential where it will be important to watch out for how the volumes in the markets pan out, because that is what will give you direction and give you a mood check as well, whether there is that little cautiousness which is still prevailing, or is there that buying interest which is coming in, number one. And two, it will be important to look out for the kind of flows that we are seeing from FIs and DIIs as well in tomorrow's session. In fact, today's numbers also will be important, but tomorrow's will be absolutely crucial, because if there is a relief rally that we are talking about in terms of markets tomorrow, two factors. volumes in terms of markets, and two, the DI-FI action is going to be important according to me, and that's my read. And I'll keep it open for Neeraj and Alex to come in on this one as well.
Yes, Alex, so what do you have to say on that front?
Well, at this point, we've said at the beginning of the conflict, and it's a good point that Hiral raises, even before the conflict began, there was still the crisis of outflows of funds from India. And foreign institutions have been net sellers for quite a while. If anything, the conversation was starting to be about green shoots being visible on the earnings front, and whether or not, from a diversification standpoint, foreign institutions would start trickling back. It was never an expectation that they would start flooding back. And so I think the issues then will revert back to what we were talking about before. The fact that there is not, at this juncture, a very clear artificial intelligence play, and the fact that there needs to be more of a depth in the earnings recovery. So the focus is going to be on domestic focused entities, and you will once again start talking about loan growth and whether domestic demand and consumption is picking up. So all of those factors will start coming back to the fore. I think the focus very quickly is going to transition into the earnings snapshot for the fourth quarter. Because remember, we're at the end of March, and soon we'll have the full year financial results, which will pan out for a period of 60 days, Himakshi. So it's a long earnings season to take care of. And there's quite a bit that will come through, particularly from the IT companies, which will start things off as they normally do. Because this is a group of stocks that has gotten punished even before the conflict began. So there's quite a bit to unpack. I think we will, once the dust settles on the conflict, start focusing on things that we were focused on 24 days back.
Absolutely, and rightly pointed out, Alex, because the earnings cycle is right through the corner, and it's going to be, it's going to be panning out. A lot of things have happened in the past 60 days. So, it's going to have that impact on the earnings as well that we will be, seeing in the future. And also, the FPI inflows. Today only, a very crucial meeting is also going to happen. SEBI is to consider this FPI, settlement norms ease as well. And with this positive news that has come in, it's going to be, I think it could be a little bit of a breather also, and a good news for the FPI inflows as well. That's also be very likely, to be watched out for today. And how the US market really opens today, it will be the key, to watch out for the markets, that what's really going to happen today after this light interim breather by the US president. Hiral, if you have to, comment on that aspect as well.
Likewise, as Alex mentioned right now, FPIs are not really going to flock in, absolutely. But if we even see some signs of they coming back, it will be important to watch out for their action. DIIs have been buyers, but key from here on is going to be what is it going to that is going to give respite to the retail investors, because a lot of our commentators have been of the opinion in the last couple of days that yes, these could be opportunities to nibble in as well in terms of specific sectors where there could be buying interest, where valuations are also in tandem or maybe slightly cheaper as compared to what they were a couple of months ago. But clearly, for the buying interest to come in, we will have to wait out and watch for the next couple of days. Tomorrow, one day's reaction is not really going to tell you the treatment that FIs are going to give to this kind of a news, or DIIs are going to give to this kind of news. But cautiousness is something that will probably still prevail for the next couple.